All right, ladies and gentlemen, good morning, good evening, good afternoon. Depends on where you're joining us throughout this beautiful earth, man. The Rip Your Face Off rally continues. It's a relief rally, it's a Trump rally, it's a little bit of a short squeeze, it's a little bit of all the above. I'm so glad we're doing a full day of trading and training with a bunch of 500-pound heads. Some of my great squadron mates in the industry. I love every one of our presenters today. I trust them. I know them, and they're good people. And I'm going to be sitting here with my popcorn throughout the day, listening to all of them because sometimes I pick up some great trade ideas, and it's just great to get a red team, right? It's good to bring in different voices, see what they're seeing, and also see what they're trading. So 11, 12, 1, 2, 3. Last speaker goes on at 4. You can come and go as you please. There will be a recording of all of this stuff, and obviously I will blast it out later today. My apologies if you're a Top Gun Options member for the late post of our election debrief yesterday, but I had to drive up to Palm Beach and do a keynote for some folks, and that was great. I got some really good intel that I'm going to share at noon. So I'm going to introduce our first awesome speaker, and then after she gets done, I'll pick up the baton at noon. After me is my brother Fausto, and then Jerry Allison, Alla Peters, and Jamie bat and cleanup at 4 o'clock. So leading us off, very, very close friend of mine, old friend, not old in age, I'm talking old in friendship. When Susie and I moved down here from Chicago, when we left our volatility arbitrage firm and came down to God's Waiting Room, Boca Raton, to start Top Gun Options, we met Anka Metcalf, and she's just been a beautiful soul and kind of one of the best stock and futures traders out there. So 2010, she started Trade Out Loud. She has over 20 years of experience doing this. She does day, swing trading, and just active investing in the stocks and futures market. So I'm not even going to steal any more of her thunder. Let me go ahead and throw her the controls, and then young lady, I will get out of your way until the top of the hour. So thanks for joining us, Anka, and the floor is yours.
Thank you so much for the wonderful invitation to this amazing event today. What better day? FOMC day and also post-election. So exciting. We
Yeah,
have a lot to look forward to. So
we
thank
got
you
a
so
lot
much,
going
Matt, for the
on.
invitation. Yeah.
You got it. All right. Good luck, and I'm all ears. Go ahead, Anka.
All right, thank you so much. All right, so today is about blasting through those six-figure incomes, getting into the seven-figure incomes or more, actually working less, living more, and growing richer. Yes, it's possible. You saw the market, you saw the power moves that we had in post-election. So the market has been supercharged. And now it's time to supercharge your portfolio with these fabulous moves. I think we're going to have a 4 year of magnificent market movement, volatility, and it brings back memories from 2016 to 2020 with the trade wars. It was such a blast to trade, and that is when, literally, like Matt said, supersonic. I'm going to steal his. Phrase. Our portfolios literally went supersonic back then, and we're going to break them now again. So my name is Anka Metcalf. I'm the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest. I have been doing this for over 25 years. Prior to this, I come with 10 plus years of investment banking. I run a swing trading service for stocks and ETFs, and it's the oldest service that we run here at Trade Out Loud since 2010. That is actually when Trade Out Loud came about. And I also run a futures trading room from 2017. And that is when literally my accountant told me that it actually was in 2015 when my accountant and my financial advisor actually that I fired lastly, but that's when they told me like, hey, you should start looking into trading futures because of the tax advantages. And back then I was trading stocks full time. I would be taking, because I was trading full time, would be taking between 10 and 15 trades a day. Now I only trade between 1 and 2 or maybe 3 trades in a day, and then I'm done. And I only trade the power hour, which I'm going to be sharing with you guys today. We also offer trading education for swing trading, day trading, and for investing. I specialize in high velocity trades, and I'm going to give you a quick example of what a high velocity trade is today when we're going to talk about some charts. I'm also the designer of an institutional proprietary trading system that is based on 8 layers of price support resistance. Because I've been trading for so long, I have developed trigger times for the New York trading session, and that is because I have noticed that at specific times throughout the day, trades don't work as well. And how many times has it happened to you? Like you take a trade, you take a perfect day trade, and you have the right entry, you have the right stop, your position size. The trade gets you in, and then it stops out. And ultimately to the penny, and then it starts running your way, right? So it's so frustrating. So I have developed some trigger times throughout the New York trading session when these things do not happen as often. I also am a true believer in chart synchronicity and divergency. Yesterday, one of the reasons why we have that magnificent rally is because all the indices were really euphoric. We're really super exuberant, and we're trading in sync. Today, not so much. You saw a lag in Russell, you saw a lag in the Dow today, and at the same time, you saw power moves heading into NASDAQ and into the S&P. Finally, NASDAQ, guys, it's into an all-time high. The Qs are into all-time highs, so we broke the high from earlier this year. So I'm very excited about the market and about the potential moves that we're going to get into the end of the year and going into next year. So if you want to learn more about Trade Out Loud, you can head on to our website, or these are our handles, our social media handles. So today, I'm going to be talking to you guys about the most important time to take high-ask trades that have the power to follow through. And we're going to talk about this. And we're also going to talk about what time frames we need to use in order to identify the patterns to take these trades. And I think we're going to start first with understanding risk, because risk is something that is very serious. And I know that in the futures markets, traders don't really understand the risk level because it's a leverage market. And this is something that stock traders understand, options traders really understand about the risk. But when it comes to futures trading, there's a little bit of problem here, because I do see traders at times risking, 30% of their accounts, 50% of their accounts, 80% of their accounts on one single trade. So we're here to demystify the risk issue. We're also going to talk about reading a chart and plotting a trade. I'm going to share with you 3 charts in which I'm going to teach you how to identify an entry, how to place a stop so you're not getting stopped out as often, and how to identify a target. We're also going to talk about the advantages of futures trading, and of course, the time frame that delivers results. So day trading is an income producing style of trading. So what that means is that when you decide to become a day trader, you're expecting returns every day. Now, is that going to happen every single day? No. So you're going to have a winning day, you're going to have a losing day. You could have 5 losing days in a row, or you could have 20 losing days in a row, and you could have 60 winning days in a row. So it's going to be a roller coaster, and the roller coaster is represented as well on the market. Sometimes you have favorable market conditions, and sometimes those market conditions truly suck. Now, remember at the time that we went into election, we had the range bound, we had the volatility, and it was the bad volatility because it came with really low volume into the market. So you didn't have that power to ignite a move. So it was, not great. So trading was a little bit tighter, stop outs occurred more often. And, there are times throughout the trading period, and especially month of October, which is volatile by nature. It is one of the worst months for volatility because you have the lower volume, and earnings season is really down, so you're not going to have the power players that are going to fuel up the market. So there are a lot of things that are contributing, but now we're done. November kicked off with earnings season, so we are having more dynamics. So basically in day trading, you initiate the trade, let's say at 10 o'clock, and you could probably close it at 10:20. The trade duration that I'm looking for is between 10 and 20 minutes because I like to trade the power hour. I'm going to share with you some secrets about the power hour as well. So for me, it's like instant gratification because you're locking your profits every single day, or your losses in some cases. But this is how you trade your way to wealth, because this is a whether it is your primary source of income, like it's in my case, or whether you're supplementing your income. This is a great way to create additional income, to create cash flow, to get some of those profits and put into your swing trading account or put into your investing account. So we're going to start off with risk, because risk is the most important thing in trading. Because what happens if you deploy a lot of risk into trading? You're going to blow up your account, right? A lot of times, traders are gravitating towards opening accounts with very small size accounts, and they have the tendency to overwhelm that account with the risk that they're putting on the trade with. And in 3 to 4 trades, that account could be blown away, right? So we're here to understand the power of risk and the power of R, because the difference between what is risk, definitely, if you think about it, is the difference between your entry and your stop. And this needs to be technically represented on the chart. It's not a number that we allocate and say, hey, let's say I'm going to take this trade with with 5 points standard, right? So I'm going to take this trade, I'm going to apply stop of, let's say, 5 points, right? That's not the way to do it. I know, there are, some traders out there that are doing it. This is completely wrong. If you want to go on the institutional form of doing things, you need to evaluate charts and technical analysis. So let's get to it, and let's get into calculator risk. Determining your risk and your risk tolerance. So your risk tolerance has a lot to say about the risk that you're going to be applying to the trade. So, for example, some traders are trading their IRA accounts, and they have a big chunky, let's say, IRA account. Let's say they have $1 million or $2 million or $3 million in their account. And typically the risk per trade for the futures market is 1% per trade. It's not like the stock market. When I was day trading stocks, and if I was to day trade stocks right now, which I do once in a while, I apply 2 to 3%. When I'm swing trading, I'm applying 3%, sometimes 3 to 5%, depending on my long-term goal, right? Because I want to, maybe I want to take partial profits into, some points. Maybe I have a power trend, I have a wider risk tolerance, etc. So bottom line is that you need to correlate. You need to have a really good correlation between your risk and your account size. So if that account is too big, like I have mentioned before, and let's say you have $1 million in your account and you want to start day trading, that 1% is going to be way too much, especially if you're into the beginner stage. So that comes risk tolerance, and you're going to go like, oh my gosh, I can't risk I can't risk $10,000 on a trade right now, right? I'm not going to feel comfortable if I lose on 3 trades. I'm going to be risking $30,000. So what you do is you go down in size. It's fine if you use 0.5%, you use even 0.25%. It's all based on what makes you comfortable, because if you have that hot potato feeling in your hand, you're not going to do well in your trade, and you're going to enter the trades poorly. You're going to mismanage the trades. You're going to leave a lot of money on the table because of the pressure of the size. So bottom line is that you need to correlate your account size to your risk tolerance, but to your risk. Like I said, you have, any type of account size up to like $1 million, you can risk 1%. And even if you're comfortable, if you have a wider account size, if you're okay with risky 1%, you could go ahead and do that. Again, it depends on your risk tolerance. So the level of risk you assume should be proportionate to the size of your trading account always. And that should be respected on each and every single trade. It's not that I'm going to take a trade with 1% and then I'm going to go and take another trade with 2%. Or I see a trade and I'm like, oh my gosh, I love this trade so much, I'm going to be using more risk. No, the reason for that, and again, there's a reason to the madness. And the key here is to have not only consistency in trading, because everybody tells you, yeah, you need to achieve consistency in trading. That's easier said than done. But what you need to do right at the beginning, and therefore enforce it through your trading career, is to keep your losses in check. And all your losses need to be the same size. So for example, if I decide to risk $500 on a trade, my P&L should not look like, oh, I lost $500 here, I lost $700 there, I lost $200 here, I lost $1,200 there. When you look at your P&L at your losses should only be 500, 500, 500, 500, 500. Why is that? Well, here's the thing. When you take a trade, you're going to be risking, let's say, those $500. And if you have a loss, let's say you lose 500. Second trade, you lose 500. But if you respect the risk to reward ratio, and if the third trade that you take or the fourth trade that you take is going to produce 3 Rs, you're already recovering your 2 prior losses and you're already ahead 1 R. And that's how you get ahead in trading. The second thing is that risk management guidelines. So traders should limit their risk exposure, like I said, to 1 or 2% of their total balance per trade. So like I said, I do recommend for day trading no more than 1% if you're trading futures, and that's what we're talking about here today. So position sizing is once the risk per trade is established, calculate the appropriate number of contracts that you need to take the trade with. Because I know that in the futures market, 99% of the traders, what they do is, let's say they have a $100,000 account, so they're taking standard 5 contracts. So they're not position sizing, standard 5 contracts. And this is totally wrong. You need to position size and see how many contracts you can fit into your account size. Trade frequency, an essential aspect of risk management, is setting a cap on the number of trades taken per day, applicable to both day traders and swing traders here. So what I'm trying to say is that your budget, so you should be budgeting for the day. So for example, if you risk $500 on a day, let's say you're allowing yourself 4 trades a day. So therefore, you're allowing yourself a budget of $2,000 a day. And if you lose that budget, you're going to stop trading and go for a walk. And then you're going to come back the next day. So what you need to do in this, let's say in this case, is decide how would I feel if I lost, let's say, $2,000 a day for a week. Okay, so that is going to give you a very good idea and a very good it's going to give you a very good, let's say, idea of how your risk tolerance is and what your real tolerance is, and then you could go up or down around that 1%. I'm personally risking 1% on all my trades. So here's a chart, for example, and this is a short example, and how I enter trades and where I put my stops. I always place my stops above the pivots, and I always enter at rotation. So first of all, I evaluate the trend, I do all the multi-time frame analysis, and I determine whether long or short. In this case, it was a short. And this was actually, this triggered right here. I use very few moving averages. This is my 10 exponential moving average. This is the 20 simple moving average. This is the 50, and this flat line right here, the red one, is the 200 simple moving average and volume. These are all the indicators that I'm using. I'm not using any other indicators, and I would say price is the best indicator. So anyways, so here we had the trigger. I actually did miss the low of the prior bar, which I typically do. So I go doji and down. But I did enter here because I wasn't really in front of the computer at that time, and I entered the trade a little bit later. So this was a sandwich formation. So I had my double confirmation. I had a doji reversal, and I also had a sandwich down. So I took the short here. I was shorting below these 2 candles right here. I was placing my stop above this pivot high, and my first target was at the prior pivot low. I always respect the pivots in the sense of entry, stops, targets, etc. So this was my first target. I didn't take any profits here because as you could see, the momentum was very strong, and I had another target that was set into a lower area that was established by technical analysis from another prior pivot low from before. And that's why I had it traced over here. So as you can see here, the price action went exactly into the target level. And that actually offered another shorting opportunity that I did not do. But yes, this is another valid short right here. When this bar takes out the prior green bar low, you place your stop above the high. You have the nice push from the 10 EMA lower, and it went back into the target. This could have been easy, like another 1.5 Rs. But this one, this is what I'm talking about, the R. This is the risk area right here. This is 1 R, the difference between the entry and the stop. This is your target 1, and this is your total reward. Okay, so easily here it was a 4-5 R trade. Just like yesterday, we caught like over a 3 R trade. We haven't had that in a really long time. We didn't really have continuation in the market. Here's a trade that we executed yesterday. So yesterday, the market literally went ballistically higher, and then it pulled back right at the open. And as you can see here, we had the 1, 2, 3 down, back into support. We had an inside bar, and then we took the trade long right here where it says entry. We placed our stop right below the pivot, and we actually targeted this prior high right here, and this was our target. Later on the day, the price action pulled back. It formed another higher low formation. It went right in and dug in into this moving average. The price rotated, the green bar rotated above prior high. We placed our stop low, boom, there was another trading opportunity with the same target. And as you can see here, the power trend was still intact because the price was still trading above the 10 EMA. This is what we did today. We actually took NASDAQ long again today. It was a little breakout here that we took, and I think it was the 0.50 area, if I'm not mistaken. We placed the stop below the pivot. And this was actually where we got out here. We had a target into the 100. On the second run, we got our 100 target again. And again, remember, it's FOMC meeting, so things are getting a little bit choppier as we're heading into that. And we really don't know whether we should expect continuation or not. So today it's going to be in a limbo till 2 o'clock because we don't know what the rate decision is going to be, even though we kind of have some idea, but we don't have anything confirmed. Later on, before I came in here, there was another setup that was forming, and in this case was a base. I particularly like more the pullback areas like we had here in the prior session than what we had today, but breakouts are fine as well. I do like breakouts as well. This is a very shallow pullback. You can see here the power trend determined by this 10 EMA. So I want you to start, so you don't want to start trading. You want to start trading, but you don't know where to start. Okay, so first of all, you need to have a roadmap. You need to have some kind of a guide as to what you're going to be trading, what your risk is going to look like, and the time that you're going to have available for trading. This is the most important thing. For example, I chose the power hour, and the power hour I showed you, it worked today, it worked yesterday, it works most of the time. Now, it doesn't work 100% of the time because when you're having a choppier market, the market is not going to go anywhere, regardless of what you're trading, whether you're trading stocks or whether you're trading futures or Forex or whatever. It's not going to work. But what I do like to trade is high momentum that is coming from economic releases, high momentum that is coming from news, especially. So, for example, this is a trade that we have executed even before the market opened. You can see here that I was typing in a storm, and this is actually CPI number. So it has been a tradition in the trading room, especially this year, because we had some pretty good moves. We didn't really have a great move last time, and we didn't trade it, but in the first quarter and the second quarter and a little bit into the summer, we were trading this. And this is literally a 5-minute workday, and you can see it right here. S&P, we were targeting 5,300, 5,320 on deck. NASDAQ, we wanted 500, and we got 550 on deck. So you can see that we had blasts into the targets and even above the targets. And we were done for the day. We were done for the day before the market opened. Here's another example of a 5-minute workday into these numbers, into the CPI numbers. And again, I don't trade before the CPI numbers. I trade the reaction. Remember, you need to have a lot of experience in order to do this. But again, here, good morning team. NASDAQ and S&P already trading into all-time highs again. And this was another issue, so I want to come back a little bit. So yesterday when we came into the market, we saw that the Dow was up 1,600 points. NASDAQ was up, I even forget how much it was up, 400, 500, 600 points. And then it was like, what do we do? Do we go long or do we wait? And what would we do? So I waited for a shallow pullback and boom, I went long. Don't go and don't start to outsmart the market and say, oh my God, the market is so elevated, I'm going to start shorting. Because you saw what happened at the open yesterday, right? So we went straight up overnight, and at the open, we dived in a little bit, and then it rotated for higher. Wait for those pullbacks to happen. Here's another one. This was in August, and this was our entry right here. This was our target. The stop is under this support level right here. And you can see here, 52 points in 1 minute. That's over $1,000 per minute per contract. Okay, this is phenomenal, right? This is what I call instant gratification. This is the month of November, and you can see here we haven't even traded that much. And this is day one, right? November 1st, this November 4th, this November 5th, this November 6th, and this is today. So basically we have 1, 2, 3, 4, 5 days, 5 trading days so far. And these are the trades that we did. You can see here that I focused on NASDAQ today, focused on NASDAQ yesterday, focused on NASDAQ. And you can see here the size, right? You don't see a constant size, right? In my platform, in my P&L, right? You don't see a constant size. Here I took the trade with 10 contracts. Here I took 11 contracts. Here I took 4 contracts. Here I took 5, 10, 5, 5. So it's not like I was trading I'm trading constant size, right? What I'm doing is I'm position sizing for it. So my risk level, in case you're wondering, here is $5,000 on a trade. And these are my results today. All right. So if you want to trade for a living, right? And if you want to make this to work, look, this is the only business where you don't have a boss. You don't need to commute. You don't have any customers, you don't have any clients, you don't have to send in emails. It's just you and your computer. And I can teach you how to do that. So turn your computer into your personal ATM. Start learning how you can start chunking money out of your computer. And this is the perfect time to learn how to trade your way to financial freedom, right? Because the market is a permanent transfer of wealth from the novice trader to the astute trader. So why will the market remain hot through 2024 and beyond? Well, at least it's going to be high volatility until inauguration on January 20th. Russia-Ukraine saga, will it end, right? So if that's going to be ending, that's going to be really great. Israel-Hamas war, will it end? Like, big question mark right there. FOMC rate cuts, we have the FOMC rate decision today. Inflation is still super high, so we're going to see how that works. Massive layoffs continue. I don't know if you guys are watching, but there are massive layoffs still continuing. And are we going to start the trade wars? I don't know you guys, but I'm really looking forward to that volatility because it worked wonders for us. So when it comes to trading, it's just no setbacks, just growth. Imagine the consistency, and that's how you achieve consistency. And it comes back to the first thing that we've discussed and the first topic that we've discussed in this webinar today. It's about the risk, applying the same risk on every single trade and respecting that risk and position sizing. This is what creates the growth of your account, because if you're not going to use the same risk on all your trades, you're going to be all over the place. Okay, so what you need to do to get started, first of all, you need to have that burning desire. How bad do you want to succeed, right? Because if you're hungry and if you want to succeed, if you want to stop commuting like I did, if you want to stop what you're doing right now because you don't like what you're doing, just dedicate yourself to trading, learn how it's done, but then just don't dive into the market. Learn how it's done first, because education represents the foundation. You can't dive into trading and say, I don't know, I'll see if I like trading, and then if I like it and if I'm successful at it, I'm just going to go start learning how to trade. That is the approach that everybody is having when they start trading, and they don't understand that you need to have the education first. Why am I saying that? Do you think that you can go right now into a surgery room, perform brain surgery or open heart surgery, and hey, if the patient lives and if you really like getting your hands in there, maybe you're going to go to medical school. This is how trading is as well, right? With how things are with trading as well. You need to have discipline to follow the plan. You need to have patience to wait for the opportunities. You need to have focus. So no distractions. Literally when I'm trading, because I'm trading just a power hour, I don't want any distractions. And I'm only here for about an hour and a half. That is my main focus. That's it. Because look, the human brain cannot focus more than an hour. And after an hour or an hour and a half, and these are studies that have been done on the human brain. The human brain is going to take the phone, it's going to start browsing, it's going to go on Facebook, it's going to go on X, it's going to go check out the news, it's going to check up on their friends, they're going to check out text messages and all that stuff. So again, focus, power hour. That's all I have to say. You need to have the conviction, and when you have the education, when you have the experience, you're going to have the conviction. And when you see an entry, you're going to nail it. And you're going to say, yeah, that's what I'm going to take, right? I'm going to take that trade because I have the conviction. And you need perseverance as well. Just do it every single day. It's a habit. I haven't met a professional trader that said, I'm going to take a month off charts. I haven't heard that, because charts equal money, right? So you constantly want to have your money invested into the market, whether it's swing trading or investing, not necessarily day trading. But even when I'm off, let's say, or even if I want to take a couple of days off when I'm traveling, I still look at the market. There's no break from the market. What I trade. So when I day trade, so I swing trade stocks. I am doing it very actively, and I invest as well, but I'm generating my income from the futures market. It's more friendly for tax purposes, and I have stuck to it. And when I day trade, I focus mostly on the Dow, the S&P, NASDAQ, and Russell. Yes, I am looking at the rest of the panel. I'm mostly like swing trading oil or natural gas. Agricultural products, maybe they're going to be hot from next year because they have been dead. Like literally, I haven't been trading soybeans or cornmeal or whatever in ages, because they have been like dead. Okay, so maybe this presidency is going to revive the agricultural market as well, because we want to trade it, right? But definitely this is my go-to. These are my employees. I send them to work every single day. And today I sent to work NASDAQ, right? And it delivered again. So trading is a rule-based system, guys. So when you're thinking about trading, you need to think about guidelines, about rules, about regulations. It's about, it's all a system. It's a rule-based system. Is the price above the 10 EMA? If it's above the 10 EMA, shorting is not an option. Has the price pulled back? Evaluate the area where it pulled back to. Is the price rotating? Then it would likely, perform a daily buy setup or a 5-minute buy setup or a 2-minute buy setup. So you got to have that system that is going to tell you what you need to do, and you need to have it written down. And no, it doesn't have to be a novel, and it's in the shape of a trading plan, and it could be on a post-it, okay? And have it on your monitor, so it reminds you every day of the strategy that you need to deploy. Finding high-ask trades is about having patience in the market, and I know there are some traders out there that are saying, "Oh, I don't have patience for that. I just get in." Well, if you don't have the patience, it just proves to you that you don't have the trading education to actually wait for the particular setup to happen, and you're just diving in because that's how you feel, okay? Well, it's about waiting for the proper setup to form. And if you don't have the patience to wait for the proper setup, it means that you don't know what a setup is. It's all about fine and precise execution. That's how you get good risk levels. It's about money management skills, and I think money management skills comes number one, because you could suck at trading, but if you respect the 2 to 1 risk to reward or 3 to 1 risk to reward, you could have like the worst strategy in the world, but you're still gonna get ahead and you're still gonna make money. Still gonna make money. you could actually lose on 60% of your trades, but your 40% of your trades are bringing you cash every single month. So that's how money management is so important. And especially when it comes into not only position sizing, but when it comes into trailing, okay? So you don't leave money on the table, right? You need to have a system that is going to tell you, what do I do if I hit target 1? Do I take partial profits? Do I stay all in? And if I stay all in, you know, what is the trail stop going to be? What if it pulls back and it comes back into my break-even level? What if it breaks my break-even level? What do I do then? So you need to have a money management skill that is going to keep you tight in the trade, because there's always another opportunity to get back into the trade. And of course, mindset. Mindset is so important, because a lot of traders are coming into the market with a welfare market mindset, where you go like, oh, I don't know if I'm going to win today. I'm so scared. I don't know if this trade is going to work. I'm going to risk way less than what I need to risk. And they're risking more on a trade that they shouldn't risk. Okay. So you need to be into that millionaire mindset. Be very optimistic about the trading day. Trade only what you see. And if you see something, and only if you understand the setup. I trade the power hour. So the power hour is from 9:30 to 10 o'clock, but we're going to dive right in. And this is something that I have specialized in, especially since I have been trading futures. My favorite time to trade when I was day trading stocks for over 20 years was into the first hour of the day, because I would love to trade gaps. I would love to trade continuation trades. I would love to trade reversal trades, short squeezes, what have you. So I really love the power hour then. But what I found is that I was intensely trading the power hour, and I was also trading the afternoon. And I saw that the more risk I put to trading, the more I lost. So bottom line is that you make, and the majority of money is being made in the morning in the first hour. And in the latter half of the day, a lot of the traders are losing what they made in the morning. So why do that? Okay, so I'm going to share with you the power hour secrets here, because there are 2 secrets about the power hour. There are actually 2 power hours every single day, Monday through Friday, in the stock market and in the futures market. So let's begin with the power hour, right? So what is the power hour? The power hour refers to the first hour of the New York trading session, when there's typically a surge in trading activity and volatility. These periods are often characterized by high trading volume and more significant price movements, which can create opportunities for us, for traders, for retail traders, to capitalize on short-term market fluctuations. There are 2 main power hours typically in a day. A lot of traders don't know that. There is the morning hour, and this immediately after the market opens from 9:30 to 10:30 Eastern, and this is my absolute favorite. During this time, traders react to the overnight news, economic data releases, and other market moving events. The morning power hour is known for its high volatility and also high volume and significant price swings as traders establish their positions for the day. This is, if you learn how to do the power hour, this is the most profitable time. But wait, there's more. There's an afternoon power hour as well. And this happens during the last hour of the trading day from 3 to 4 p.m. And during this period, traders make final adjustments to their positions before the market closes. The afternoon power hour can also be influenced by end of the day order execution, portfolio rebalancing, and other strategic trading decisions. So what I do like to see in the power hour is my favorite thing, and this is the only time when I would trade the afternoon power hour, if we have like a massive down day. Let's say Dow 800 points down, 1,000 points down, because traders typically, if they see that there's a release in the overnight trading hours, let's say Chinese PMI or whatever, if they see that there is some economic important decision, let's say like something in the European Union, so a rate decision for the European Union, the ECB, or if there is something right at, let's say, CPI numbers right off the open, okay, traders don't want to remain short in those positions.
And there's a phenomenon that is happening. It's called the ramp time. And this afternoon power hour becomes the ramp time. Now, did you know that the morning volume in the first hour is the heaviest? And you're getting the same type of volume in the afternoon power hour from 3 to 4. That is that these 2 hours are the most traded period throughout the day. They're very, very high in volume. And of course, you know, the doldrums, you know, the price action remains rather choppy and etc. But these are the best times to trade, in my opinion. In my opinion. All right, so if you're wondering why futures, like I said, I had a discussion with my CPA and she said, you know what, I have another client that trades and his taxes are way lower than yours. And I'm like, what? But he's trading futures. And I'm like, oh, okay. So long story short, she actually suggested that I look at the futures market. Now, before that, I've never traded the futures market. I only traded the stock market. So it was an adjustment. But I said to myself, hey, there's actually less work in the futures market than there is in the stock market. And why is that? Well, first of all, when you're trading stocks, what is the first thing that you do? When you start your trading day, you look at the Q spies diamonds Russell, and you look where they're at, and you look at where they're in sync, divergent, and what trend they're in. What is the power, what is the where's the dominant strength, where's the dominant weakness, right? So you're looking, you're analyzing, and based on what you find and based on the result that you're getting from analyzing Q spies diamonds, then you decide what to trade. Then you decide whether I'm going to trade Amazon or Tesla, or I'm going to trade Nvidia, or I'm going to stay away from those and start trading some energy stocks, or I'm going to start trading, I don't know, Caterpillar or something like that. So based on what you see in the index, you're going to go into under the index and see what sector dominates within that index, okay? And then you're going to trade those stocks. You make a list, you trade those stocks, see what's gapping up, gapping down, whatever. So the advantage in futures market is that you only basically look at those 4 charts. That's it. You don't need to start scanning or use a scanner, to start to find trades. You get the advantage of the buying power, which is huge, which I'm going to show you in a second. You get a really good, reliable volume. You get to trade major markets, right? You get to trade NASDAQ, has 100 stocks under it. You trade the S&P 500, 500 stocks under it, Dow, 30 stocks under it, etc. You get to have the advantage, the tick values and price ranges, different tick values and price ranges for different kinds of accounts. Again, you have access to minis and micros. So if you have a small account, let's say you have a $10,000 account, you can start trading futures because you can do it through micros. A micro is 10th of the size of a full-size contract. So it allows you to participate in the process. It is a method for income, right? Because I trade it for income. I supplement because I day trade it, right? So it's an income generation method. And I also, right, for wealth, you can hedge with futures, right? You can hedge with futures. You don't need to use a scanner. You don't need to use any special indicators. You have tons of tax advantages. There's no pump and dump, say from rumors, no manipulation, no downgrades, upgrades, right? So you're getting upgrades, downgrades on stocks all the time. What happens when you get a downgrade? The stock goes down, right? You're in long, it's like, why? Why did they do that? Okay, so you don't have this in futures, in the futures market. And one thing that I love, 24-hour market, hands-on risk. I was trading the election. It was for fun. I was with a couple of friends and we kind of like get together and do this every single time. We were on the phone and then we got on Skype and we were like, we were having some fun. Okay. Futures account size. In the stock market, in order to day trade, you need a $25,000 account and the leverage is 2-to-1 or 4-to-1, depending on your broker. In the futures market, you can open an account with $5,000 and you can have that 10-to-1 leverage. And I'm going to share with you some examples here of that leverage and the buying power, because the buying power is what it's all about. How can you use the buying power to make the most money, right? So I have an example for you with trading the Qs and trading NASDAQ futures. So for example, if a trader wants to trade the Qs, this is a hypothetical example, and let's say the Qs are priced at $480, and if the trader wants to trade, right, let's say, and it has a count of, let's say it wants to buy 100 shares, that would be about $10,000 in buying power, right? And if the stock or the ETF goes up 50 points, right, you profit $50 because each penny is $1. But if the trader wants to day trade a mini NASDAQ, which is priced at 20,000, let's say, the trader needs about $24,000 to get a contract. And if the price goes up 50 points, then you profit $1,000 because each point is 20 bucks. That's in NASDAQ. Each point is 20 bucks. And this is an example of NASDAQ here chart. And you can see here right on the right-hand side bottom, the buying power effect is 15,000. And with 15,000, we were able to get, and this is an example that we did last year, I believe, or a couple of years ago. We were in a live session and we did this. We bought 100 shares just to replicate the buying power that would be for the futures as well. So, right, so equivalent buying power, 200 shares. We bought it, we held it into the close, and we got about $300 on this trade. So basically $15,000 with 100 shares generated $300. In the next example here, you have NASDAQ, and you can see the buying power is 17,000, not much more than what we used in the Qs, and we bought only one contract, right? We just wanted to show an example of the buying power. Okay, so it's not position size, it's just show you the power of the buying power, right? So we bought one contract equivalent to the buying power here is $17,000, $2,400 with the same risk, by the way. Okay, so would you rather trade the Qs with $15,000 buying power to make $300, or with $17,000 one contract in buying power, $2,400? I mean, to me, it's so easy, right? But wait, there's more. You have a small account. Let's say you have a $10,000 account and you want to buy, let's say, NASDAQ, and you don't have enough money to buy the full size contract, but you go into the mini. This is the mini NASDAQ. Buying power here, guys, it's $1,700. Again, it's $1,700 compared to $17,000. It's 10th of the size. With one contract, $246. $246. Remember the example where in the stock market you needed $15,000 to make $300? Well, in the futures market, you could actually use $1,700 to make $246. Here's another example with the SPY, right? Here's the SPYs using $20,000 in buying power and 100 shares, 262. Pretty much the same thing. Here, using this is actually way less here. It's about $10,000 in buying power because I had 4 contracts over here. So it's about actually $12,000 in buying power, generated $3,600 with one contract. Here's a one contract. I was still in that trade with some contracts, so that's why you have a lot of numbers here. By the way, the micros, 10th of the size of the buying power, that is $1,100. Again, in buying power, delivered $127 with one contract. So this is pretty amazing, and this is what drove me to the futures market, because you can make more money with less money, and that's how you can grow your account faster, and it's easier to double your account, triple your account, and so on in the futures market. If, again, disclaimer, if you know what you're doing, you have the right risk tolerance, if you know how to trade, if you're patient, etc. That's why you need to have a framework, you need to have a trading plan in order to get there. I'm going also to share you the most successful time frames and successful patterns associated with them. So first of all, in day trading, the time frames that I use for maximum profits are the 1 minute, 2 minute, 5 minute, and 15 minute. I do use all the time frames for my analysis, but these are my executional time frames. I use the 1 hour, the 4 hour, the daily, the weekly, the monthly for analytics. So I use those higher time frames to analyze for potential trades off of these small time frames. So these are just executional times for me. These are the time frames where I look for setups. So how do I use them? So first of all, in the morning, because I do trade the power hour, I watch the 1 minute and the 2 minute, both at the same time. And I take decisions based on these two time frames. I look for setups on these two time frames. And if I don't have a setup that is literally lining up within the first 20 minutes of the day, then I immediately zoom into trying to find a trade on the 5 minute. And the 5 minute, I live on this chart from 10 o'clock to about 10:30 or until I'm out of the trade. Typically, I look for a trade immediately into 10 o'clock. So from 9:30 to 10 o'clock is my prime time to look for a trade. And if I don't see a trade that is lining up there, then I look for a trade around 10:30. So if I don't have a trade by 10:45, I'm done. Okay, I'm done for the day. Asian and London session, my focus is when I look at charts to take trades off the 4 hour and the 1 hour for overnight trades. And for those of you that are overseas for day trading, London session, I do recommend the 5 and the 15-minute charts. I do not trade the London session. All right, so I have an invitation for you guys. My time is almost running out, and I have an invitation for you guys to my trading room. I trade an institutional grade trading system every single day in the trading room.
All right, ladies and gentlemen, everybody give a virtual hand clap to Anka. Everybody good? Awesome. Yeah, sounds loud and clear. Everybody got me? Does everybody have me loud and clear? You guys good? Awesome, Rick. Okay. Yeah, if we lost her, no worries. I will take the screen back here in a second, and we will press forward with me. I love Anka, 500-pound head, like I said, and she's just an incredible human being. Man, okay, so welcome aboard. We have a lot of folks registered for our full day of trading. Like I said, yeah, Rick, it is recorded. I'm going to be up next. And then at 1 o'clock, we have Fausto, then Jerry, then Ala, then Jamie. Let me make sure I got that all in the right order here. Jamie. Yeah. Okay. Cool. All right, folks, let's go ahead and get airborne with my section of the brief. Wow, what a day, what a couple days, man. Just an absolute rip your face off rally with the S&P 500, and we are just drifting absolutely higher. Now, man, what goes up must come down. So we talked about this yesterday in our accelerated retirement brief here at Top Gun Options. If you're new to Top Gun Options, welcome aboard. Hopefully, since we're hosting this event, you know a little bit about me and what we do here at Top Gun Options. So I want to jump right into things and talk about what's going on strategically, then operationally, and then obviously get tactical and look at some trades. Let me just start with a high level here. This rip your face off rally going into what's happening at 2:30 this afternoon is a little much, right? As I talked about yesterday in accelerated retirement, there was a lot of people going into the election who were short. What's that mean? Short means they think the market is going to go down. You should know, since you're in this brief, that if you're short something, you have to borrow shares and say, I'm going to borrow these shares and I'm going to replace them when or if the stock, the ETF, the index goes down. Well, what happens if it doesn't go down and you're short? And it does that. You are getting destroyed. There are a ton of shorts that are getting wiped out right now. Why? How do you close a short position? You actually have to buy the stock back, the ETF or the index, which makes it go up even more, right? It's like your older brother or sister taking your hand and making you punch yourself. Like, stop hitting yourself. You're like causing yourself super pain if you're short right now. Now, what happens to short squeezes? They end. Short squeezes don't go on forever, folks. The shorts eventually unwind, and we're probably gonna, revert back to a mean here. There's a long-term trend here, folks. I think we are gonna see a little bit of a fade here. Can the market keep going straight up? Absolutely, it can. Will it? No, it absolutely will not. We can kind of wait for the turn to get a little bearish. We're going to talk about that when we get tactical in a little bit. Or you can kind of fire one early. We fired one yesterday, and we're going to debrief that as well. But I just wanted to start it as I'm sitting here, manning my trade desk for the day as the moderator for this event and watching everything that's going on. Folks, we have a Fed meeting, right? There's a 99.9% probability that Jerome Powell and the Fed cuts 25 basis points today. But if you're Jerome Powell, first of all, you're on LinkedIn putting open for work on the top of your LinkedIn picture because he's probably gone. But why would Jerome Powell be cutting with the market at obscene record highs? Everything's great, Jerome, isn't it? I thought you landed the plane safely. For the past couple months, 3, 4, 5, 6 months, fill in the blank, the BLS, used to be the Bureau of Labor Statistics. Now it's the Biden Labor Statistics. We were told everything's fantastic. Everything's great. Well, inflation's still sticky. No. We brought it down from 9.1%. Hey, man, if you're an arsonist, you can't take credit for being the firefighter, right? You're like the volunteer fireman that sets his own fires because he likes to hear the sirens. You can't take credit for that, folks. So, with everything super fun, happy time, according to the Fed and the Biden administration, and the market at obscene record highs, why would we cut? I think the guy should be raising rates right now, but of course, I'm absolutely crazy. Okay, but let's go ahead and get started here. Before I forget, if you didn't attend my election debrief yesterday, you missed out on potentially $9,000 in profit. We shot, let me give you the link to the replay right there. After you watch all this stuff today, you got to watch my election debrief from yesterday. It's one for the ages, okay? I was absolutely wrong. My election prediction was the same in 2020 when I was right. I got 2016 right when everybody said Hillary was going to win, and if Trump won, the market was going to crash. I said, wrong. Trump's going to win, and the market's going to rally. Got that one right. I got 2020 right. What was my 2020 prediction? I said it'll look like Trump wins on election night, and over the following days, he'll lose. And people, of course, laughed and made fun of me, and that's exactly what happened. I was wrong this time, folks. I said the same thing would happen, and I could not have been more wrong. I love being wrong and making filthy amounts of money at it. So we put on, let me just men lie, trades don't. This is our member area here at Top Gun Options. So in the primary live trade brief, which we do every Tuesday morning at 10 a.m., I put on a bullish double vertical out to December. Okay. It's a bullish. What's a bullish double vertical? It's an extremely bullish trade, right? So we put on I'll go look at the trade again, a bull put spread down here, right? If you're not familiar with options, welcome to Top Gun Options. I'm going to teach you how to trade options, right? But bull put spread down here is kind of the basement. I put in a floor. And a bull put spread is also what we call a credit spread. I got paid to do it. We took that credit and we put on a bull call spread up here. So in a double vertical trade, we need violent movement in the direction of our trade. What happened 24 hours after we placed that bullish double vertical, folks? A rip your face off rally. So there's the trades. Again, men lie, trades don't. There's the December bull put spread, the 56.75, 56.70, and that funded a call purchase up here at 58.75, 5900. Ladies and gentlemen, that trade made over 300% in 24 hours. And at the open yesterday, what did we do? I shot a bear call spread that made $1,500 in 8 minutes. And again, let me just go show you. Men lie, trades don't. We're having what was that? That's $9,000 in 24 hours, and I was wrong. Let me get a show of hands. How many of you like making $9,000 and being wrong? Right? I mean, absolutely unbelievable. So there you go. There's my trades. This is our, when you become a member here at Top Gun Options, we have an app. This is our website, obviously, but all of this appears on the app. So I shot this bear call spread, and look at that. When I closed the trade and got filled, it was $1,500. So it ended up being a $1,500 profit by the time I got filled, 65% profit in 8 minutes. And then I also said, hey, I'd close the bullish double vertical from yesterday for a 300% profit. If you didn't listen to me, good on you, because you're making even more money. So I thought we'd, after that massive pop, I thought we'd at least hover for a little bit, but no, the short squeeze continues. So for all my TGO members who didn't listen to me, good on you for not listening to me. But this is going to run out of steam, folks, and it could run out of steam when? In about 2 hours, right? The 25 basis point cut is in there. It's already in here. It's all going to come down to the spoken word. Again, there's no way on God's green earth I'm going to get press credentials to go to a Fed press conference, but I'd hit them right between the eyes with that. What are you doing, man? Markets at record highs, rip your face off rally. Apparently everything's great in this country. Why are you cutting rates in everything great? And I'd love to see Jerome Powell squirm. Okay, now, a lot of other stuff. Let's go back up. We started tactical. We got to get back up to strategic. Did you see the world leaders, right? Now, I'm not going to get super political, but, love or hate, which it seems like people are in this country, which is sad. Can't we all just get along? Love or hate Donald Trump? The guy's a little unpredictable, or not, right, on the world stage. When the cream of some young guy, the guy who runs North Korea, was saber rattling, Donald Trump's like, dude, I will destroy you. He even sent a picture of him in a bullseye from one of our Predators or Global Hawks or whatever it was called. Like, dude, I'm not going to go to war with North Korea. I'm just going to kill you. That guy picked up the phone and said, can I meet you in Singapore? What date, what time? Year later, whenever it was, Donald Trump walked into North Korea. Why? Because that dude was scared. Is this guy crazier than me? This guy just might do it, right? I bring this up, folks, because a lot of the things that have been on my radar for the past 4 years, war in Europe, war in the Middle East, war coming to Asia. China, it might not be a war. They're going to just do a blockade of Taiwan. I guarantee you, right? Or maybe not. You know what? I'm going to have to take back that guarantee. Did you see Xi Jinping's video message congratulating Donald Trump, right? So weakness invites strength. We had an invalid in the White House and a DEI hire as his executive officer. The world went to shit, folks, period. I don't care what your political slant was. That's exactly what happened. So on the strategic level, we might see peace break out. Now, guess what? I know the MIC, not the Irish people, the military industrial complex. I'm Irish. The military industrial complex ain't going to dig that, are they? They need these forever wars. I and a lot of my TGO members got bullish on Raytheon, RTX. Raytheon is a defense stock. And there she goes. I covered this yesterday. I said, probably need to maybe take a look at exiting our Raytheon. If I had done my job, it didn't fail. On October 8th, look at this, October 8th of last year, if I had done my job better as your flight instructor, we would have made about 90% return. If you don't know RTX, folks, it's Raytheon. They make weapons. They are part of the MIC, the military industrial complex. A couple weeks ago, they reported earnings. What did they say? They swung to a profit and they raised their future guidance. That's extremely bullish, Wiz. It is. Then what did they do? Well, not they. What happened? I shared this with my TGO members. Let me go grab the article real quick. This made me even more bullish. This was what, 2 weeks ago? A week and a half ago. Look at the headline in the Wall Street Journal. Pentagon runs low on air defense missiles as demand surges, right? Ukraine's out of missiles. Israel's running out of missiles. We're out of missiles. There's no way in hell we'd be able to do anything in the Pacific with China right now. If you're Xi Jinping, you move in the next 3 months, 2 months, and take back Taiwan. So, swung to a profit, increase their forward guidance. The Pentagon says we're out of missiles. We got to go buy a shitload more missiles. Could not have been more bullish on Raytheon. That is over. The tweet from Zelensky yesterday, hey, please, I really hope that, blah, blah, blah. Donald Trump has promised to try at least to bring peace on earth. So whether it's, look at this, Iran said, we are, and this was 2-3 weeks ago, we're going to hit you back. We have got to hit Israel back. Fellas, you're naked. Israeli F-35s flew around Iran. You didn't see them. They took out all your surface air missile sites, your S-400s, your S-300s, the vaunted former Soviet air defense system, gone. So Iran saber rattling, saying, nope, we're gonna retaliate, and it's gonna be even stronger and more complex. Whoa. They've told diplomats in the region, we have to. To save face with their own people, first of all, and then obviously just to fight the great Satan. But I give credit where credit's due, folks. I will give credit to Joe and Kamala. They actually said, we're not going to restrain Israel this time, man. If you hit Israel again, they're allowed to take their gloves off. Whoa. And this was November 3rd, folks. This was before the election. Now you have Donald Trump, 47th president-elect. Do you remember? It's the name of a book. The mullah, whatever his name is, the Ayatollah, I forget what he tweeted about the United States. Donald Trump grabbed his cell phone and in all capitals wrote, do not talk to me or the United States like this. I will rain fire and fury down upon you the likes of which the world has never seen. So somebody went and wrote a book, Fire and Fury, about Trump. And what did Democrats do? They frothed at the mouth about how Donald Trump was going to get us into World War III, right? What happened for the past 4 years? We've essentially been on the brink of World War III. Russia invades Ukraine, Israel, Iran literally are going at each other. And then we talked about China and Taiwan. But here's what I'm rambling about, folks. This is part of our strategic brief. Remember, here at Top Gun Options, I do SOT, strategic, operational, and then we get tactical and trade. So we'll save our trades for a little bit. But as part of my strategic brief, folks, I am shifting my strategic mindset to get bearish on the defense contractors. Yeah, whoever brought up Lockheed, let's go look at LMT. Folks, Donald Trump, look at that. Post-election, Lockheed Martin's imploding. GD, General Dynamics. Now, Raytheon, if you're in the long-term bullish synthetic stock, I think they have a little bit of runway because obviously the Pentagon needs to replenish. We're bingo weapons, folks. We need to replenish our stock. So Raytheon's got a good 6 months to a year pipeline of business. But after that, ladies and gentlemen, if Donald Trump does what he says he's going to do and try and bring peace on earth, it's over with for the defense contractors. Does everybody understand what I'm saying here? Okay. I was long-term strategic bullish because let me smack myself in the face again. I was wrong about the election. I was pretty damn sure they were going to cheat. Hey, real quick question. Where did the 15 million, have you looked at all the numbers? The 15 million voters, Democrat, that appeared out of the blue in 2020. Did they all just evaporate and disappear? So essentially we were right. 2020 was stolen. Donald Trump ended up being right. 15 to 20 million Democratic voters magically disappeared in the past 4 years. Don't even get me started, folks. But anyway, here's what I'm getting at. You can change your strategic mindset when presented with new strategic issues. I was pretty damn sure we were going to be dealing with a President Harris and Xi Jinping, cream of some young guy in North Korea, and Hamas, Hezbollah, and the Ayatollah would literally be laughing at us today. And I would have been even more bullish on the defense contractors. But falling on my sword when I get things wrong, I'm your flight instructor. Hey, got it wrong with the defense industry. Donald Trump's going to try and bring peace on earth. He can't stand the revolving door between the Pentagon and the defense contractors. I love the tweet he did, was it a week ago? If you're a general officer who was involved in the Afghanistan surrender fiasco, pack your bags. I would pay to be a fly on the wall in the Pentagon today or when Trump walks in for his first briefing. Like, you're fired. Not a winner in this room. The last generals that won a war were Schwarzkopf and Colin Powell, who should have been the first African-American president. So anyway, there's what's going on strategically. Now, let's get operational and talk about what's going on here, folks. In 2016, I was one of the only guys that got it right. I said, not only does Trump win, the market rallies. Rip your face off rally. Jamie Dimon, Goldman Sachs, all the Wall Street, folks laughed like, nuh-uh, a Trump presidency, the market's going to implode. How stupid could you have been? And those people are called the smart money, right? Or legendary investors. The same people who got the COVID crash wrong. I made $2.5 million in about 2.5 weeks. As the smart money wanked and cried, shut the markets off. We need to take a break. And no, dude. Just because you don't know what you're doing, I'm on the other side of all your bullish trades. So, I love this headline in the Journal, folks. Wall Street salivates over a new Trump boom. Wow. Remember what happened last time. Market up and to the right. We had a great stock market. We had record low unemployment for African Americans, Hispanics. We were pounded, or we did pound, or not we. Donald Trump pounded China into the dirt, and we won the trade war, didn't we? Let's open up a 10-year chart, man. I loved trading Donald Trump and the trade wars. Look at this. This is FXI. This is the iShares China large cap ETF. Look at these ups and downs, man. This was all. Do you remember when we finally Trump won the trade war that they invited the 3 Chinese dudes, whoever they were, finance dudes to the White House for like a signing ceremony, and they had to stand on stage for an hour and 5 minutes as Trump did a victory lap. It was one of the I felt if I can't believe I'm saying this. I actually felt bad for the Chinese guys, man. They're standing there like, oh, I thought this was we were just kind of signing the trade agreement here, and he's going around the room. Hey, there's Ken Griffin from Citadel. Stand up, Ken. Oh, there's the Boeing CEO. You're welcome, right? Beautiful trade deal. Thank me later. So, folks, get ready for this again. Yeah, exactly, Ricky. And it's so funny to, Andrew Ross Sorkin, to see all the limousine liberals crying crocodile tears about, oh, tariffs could really, really cause inflation. Hey, man, shut up. You didn't say shit for 4 years as inflation raged. The Inflation Reduction Act was a lie. It caused rampant inflation. That disgusting COVID spending bill, as COVID was over with, also was gross. Nancy Pelosi, they were pigs at a trough. So save me your crocodile tears that Donald Trump, who talks like a Democrat now, we're bringing jobs home. I'm going to tariff the hell out of products we want made in the USA. That's how Democrats used to talk, man. The roles are reversed right now. It's absolutely insane, but good on them. So next 4 years, we're going to be trading the hell out of the FXI. That's the iShares China Large Cap ETF. Now, it's interesting to see post-election, the FXI is catching a bid. This is, I'm wrong, the market isn't. It's up 5% today, back up to half the gap. What's this gap move? If you're not a TGO member, you don't know about this. The PBOC, the People's Bank of China, that's their Fed, right? Or we call it the PPT, not PowerPoint. It's the Plunge Protection Team. The People's Bank of China, about a month and a half ago, said, uh-oh, things are bad. We need to jump in and print money and save capitalism. So rip your face off rally, and there's half the gap. So we filled the gap and then failed. We hovered underneath half the gap, and now we've hit this. Technically, that is a bullish indicator right there. So wherever you write down trade notes, in a trade journal, on a whiteboard, I got a whiteboard in my office with all my stuff up there. I'm a whiteboard guy. I'm a fighter pilot. I need whiteboards. So this is moved to the top of my watch list because this is it was shooting fish in a barrel. I remember Steve Mnuchin, right? He was on CNBC this morning, but he was the Treasury Secretary. Him and Ambassador Lighthouser, right? Our trade rep. They were in China. I miss how Trump says China. It's going to be so good to hear him say it. They called the president like on a Sunday, like, "Hey man, we're here, and we think we got a deal. We're supposed to be close, but the Chinese want to wait. Why do they want to wait? Well, they think Joe Biden's going to win, and they're going to get a better deal with him." Donald Trump went ballistic. Walk out of the room, get on the jet, come home. And Monday morning, the Dow, the market imploded, man. It was volatility spiked and no deal. Trump orders, come on home, boys. You think Biden's going to win? Well, maybe they knew Biden was going to win because they were involved in making it happen, but that's a different story. So keep an eye on the FXI. I bring that little tangent talking about China was because of this. Not only did we have the market just going up because he's a pro-business guy. I hope he does exactly what he did last time. He said, if any government agency wants to write a new regulation, you are required to get rid of 2 current ones. And the business community sighed relief, right? So pro-business government or president and administration. If they take the House too, they already took the Senate, it's a clean sweep. And unlike the first term, where I think for the first 2 years, he had red, didn't he? He had Rhino Paul Ryan. right? Ain't gonna happen this time, folks. So they're gonna ram through they're gonna make hopefully the Trump tax cuts permanent. This could not be more pro-business, ladies and gentlemen. This isn't Trump's first rodeo. I think the first 4 years were a practice for him. Now he gets it. Now he's gonna come in full throttle. So love or hate the guy, the market is going to go up and to the right. Period. Now, I'm going to warn you, ladies and gentlemen, it's not, obviously, this isn't something you don't know. It ain't going to be a straight line up and to the right. I guarantee you, ladies and gentlemen, out of the BLS, the Biden Labor Statistics Department, you're going to start hearing what? Some pretty awful economic data. Does anybody want to bet me? I guarantee you're going to start seeing, oh, geez, inflation's up again. And unemployment. Oh, man. I told you that Donald Trump might be the dog that finally catches the garbage truck, right? Or catches the car. Now, what do you do with it? He almost wouldn't want to win because based on the last 4 years of rampant spending and just, spending like a drunken sailor, which I used to know something about, he's going to be left holding the bag. Ladies and gentlemen, as of this morning, we are $36 trillion in debt. And if you believe the economists, who of course got this election completely wrong, they say Trump's policies are going to even blow that out even more. Someday, the chickens are going to come home to roost. Someday, we're going to have to look at that Excel sheet with the trillion in the bottom right cell and go, what are we going to do? Now, if Elon Musk, literally, you guys want to talk about options? The best call option bought was Twitter. Elon Musk spent, what was it, $44 billion call option. And you know what he did? He won the White House, the Senate, and the House. Elon Musk, another one of those guys you either love or hate, is an absolute genius. So Trump has said, hey, man, I'd love to have Elon Musk do something in the government and run Doge, right? DOGE, not the coin with the little dog on it, right? Which is funny enough, the Department of Government Efficiency. Both he and RFK Jr. are saying what? Oh, my God, man, if you give me the keys or the scissors, I'm going to come in and start cutting and gutting waste. I am here for it, folks. We're going to talk about RFK in a couple minutes because I'm going to tell you about the only sector, essentially, I am bullish on that can save and change lives because of RFK. Here we go. Fed readies a rate cut and faces these 4 questions, folks. First of all, I'm still in shock that I got it wrong because it's rare, the election, but I'm still shocked that this apolitical guy, the Federal Reserve is apolitical. We don't cut 50 basis points right in front of the election. Even with that, she couldn't win. Even with the Fed giving the Democrats the biggest election gift, they couldn't score with it, man. So I don't think they should have cut half, maybe a 25, and today should be a 25. But going big, 50, I don't know where I put that chart. I shared it like when he did the 50. Every time they've gone large after a rate hike cycle and gone big like that, the market has we've entered a recession or a slight recession, and the market has imploded the rest of that year. Whatever the metrics were, I'm like, whoa, I did not know that. Now, if you don't know me, nice to meet you. Be present. I'm a namaste, yoga, psychedelic assisted therapy, mindfulness guy. So I take all of those. Hey, every time this has happened in the past, this has happened. Yeah, okay, be present. So anyway, getting another 50, I don't think we deserve it. I think he should be raising rates. That ain't going to happen. So anyway, it's going to be interesting. Jerome Powell and Trump have kind of had a good and a bad relationship. I remember in the last year of his presidency, the Fed chief should be cutting rates right now. Somebody needs to fire him because he's awful. I'm like, dude, you hired the guy. If only the guy who hired him could potentially fire him. I couldn't stand, one of the things I can't stand about Donald Trump is leadership by Twitter or X. Secretary of Defense, not happy with him. Dude, leadership 101. I learned this as a naval officer. You praise in public and you counsel in private. No leadership by Twitter, dude. Enough of that bullshit. But anyway, if he gets rid of Jerome Powell, what if he puts in somebody more dovish? Like this guy ain't dovish enough. Because Donald Trump right now, I want Jerome. Jerome should be cutting 50 today. I can't believe he's doing 25. Unbelievable. Somebody should fire him. Donald Trump is going to try and drive whoever the Fed chief is around like a wheelbarrow. So as an American, ain't going to like that. And I'll give you my personal opinion. As a trader, I am here for it. Remember, folks, I tell people I'm bipolar and so am I. I'm here to teach you how to do this and make money. But kind of on the inside here, that's the Gordon Gekko or the Jordan Belfort in me, right? That's my Wolf of Wall Street. But on a personal level, man, this sucks. We're in the evil 1%, man. We are printing money. We're having fun. I got an Amazon trade I got to keep an eye on because it's getting blown out right now. Not all winning trades, man. I got to manage a bad. It's a good Amazon trade. Why? Because I'm long-term bullish on Amazon and it's going straight up right now. It's bad because I thought we'd enter a little bit of a range after earnings. We can talk about that in a second when we get tactical. So I'm here for it. I'm here for Trump. I'm here for whoever his new Fed chief is, or maybe Trump's crazy like a fox. Jerome, I like what you're doing. Would you like to stay? And I'm going to beat you up every once in a while on Twitter or X, whatever it's called, or Truth Social. Okay, so we got the Fed meeting this afternoon. This is big, though, folks. Cost-cutting lessons from Musk for DOGE, the Department of Government. I think it's obviously a joke. I don't think they're going to stand up a new government entity. That would make me furious. Kind of like we didn't need a Space Force. It's called the Air Force. But anyway, let's just call it that name. He's the DOGE czar. I'm the Department of Government Efficiency czar. I'm allowed to come in and rip stuff to shreds. This guy, I'll never forget the famous iconic photo. Him walking in the Twitter headquarters with the kitchen sink, right? And he fired, what was there, like 10,000 employees? Like 6,000 of you aren't needed. Go, you're fired. I'll never forget the video of some girl like, here's my typical day at work at Twitter. I show up, there's the yoga studio, I make my Frappuccino afterwards. Like she talked about work for 0.02 seconds. It was like this 5-minute video about like, oh, there's the kitchen with the chefs. And, he just came in and he gutted the place and he streamlined it. It was absolutely awesome. Okay. So that there's other stuff to talk about. So here we go. How much time? I got time. I want to talk about two things. And the first thing I'm going to talk about is this. Hopefully everybody saw this interview, JD Vance with Joe Rogan. Ladies and gentlemen, good on JD Vance. He's like, hey, I've heard about this psychedelic assisted therapy. What do you think about that? And Joe Rogan went on a rant. He's like, absolutely should be legal for veterans for therapeutic use. And even JD's like, yeah, I've heard, some vets, this has really been a transformational thing. What's the problem with that? And it's so funny because obviously the partisans are like, he's a sitting senator and he doesn't know this. Clearly the dude ain't a psychedelic guy. So give him a little bit of time to get up to speed. It showed on this podcast that he was open. He's like, dude, so what's the issue with this? And Joe Rogan said, well, it's technically a Schedule I drug. The FDA says, nope. What's the definition of a Schedule I drug, folks? No therapeutic use and a high risk of addiction. I just defined cigarettes and alcohol. Highly addictive, and they'll kill you. The medicines that I sat with in Mexico and Colorado are actually anti-addictive. They destroyed alcohol in my life, and they saved and changed my life. So, and I know a lot of my TGO members were a little creeped out, right? because initially I'm like, you know what? I can't stand Donald Trump. I don't like the guy. I like his policies. And obviously, I'm not voting for Harris. I'm an RFK guy. Why? Because RFK, you got to watch the video where he talks about his son. Because somebody asked him and said, what do you think about psychedelics? And he said, well, as a recovering alcoholic, I initially couldn't disagree more. It seemed to me that you're substituting, one drug for another. And I have got to tell you, I was wrong. It's a beautiful clip, folks. It's like a 4-minute clip. He says, when my beautiful bride took her life in 2012, one of my sons was just destroyed. It completely just devastated him. And he went to Peru and he sat with ayahuasca, and he is a different human being. It helped. He might still, obviously, he loves and misses his mom, but he is a healed human. He said, I would have never even thought about this, but based on the personal experience of my boy, of my son, I am absolutely on board with psychedelic assisted therapy. Boom. Ladies and gentlemen, I did not hear a single effing word out of Kamala's mouth or that dorky dude. What an idiot. One of the main reasons she lost the election is Josh Shapiro. Should have picked Josh Shapiro to be her VP running mate, a Jewish guy who's the governor of Pennsylvania. It couldn't have hurt. But no, I need the Muslim vote in Michigan, so I'm not going to have a Jew as my running mate. I'm going to have this dorky old coach, quote unquote, who's a stolen valor coward. Anyway, didn't hear a word from any of them about psychedelic assisted therapy for veterans. It's incredible to me that the Republicans are actually beating them on this issue. Now, most Democrats are already there, right? When I go to Capitol Hill to advocate for psychedelic assisted therapy, I don't talk to any of the Democrats. They're already there. They're like, yeah, man, we're here for this. It's the Republicans I usually have to have longer conversations with because of what? Law and order, these are just drugs. And I'm like, no. I give my 5 to 10 minute pitch and they are converted. Remember, if this is the first time you're hearing all this stuff, I went to Mexico 3.5 years ago with Marcus Luttrell, the Navy SEAL, the lone survivor, right? So, lone survivor, saved and changed my life. I bring this up because he came home. And his brother Morgan, matter of fact, it's both of their birthdays today. Morgan, Luttrell, they were both Navy SEALs, and it's their birthday. So they're twins. Let's see, Morgan. Here's Mojo. So Marcus got back from Mexico, and his brother looked at him like, what are you doing? You look different. And Marcus said, I'm healed, man. So Morgan said, you know what? I'm going to go down to Mexico and try the psychedelic assisted therapy. And in Morgan's own words, I love when he talks about his experience. He's like, it was the best and worst ass kicking of my entire existence. Right? You can look on my Instagram and see I visited with him up in Hibsall, big hug. And said, my brother told me all about you, Wiz. I bring this up because he's a Republican. Rick Perry, the former governor of Texas. You don't get any more Republican than that, pro-psychedelic. Congressman Zinke, Congressman Crenshaw, all the Navy SEAL congressmen are obviously pro-psychedelic, and most of the veterans as well in Congress are pro-psychedelics. I'm rambling about this, folks, because this is my commit criteria to get long-term bullish on the psychedelic space. Now, I'm going to be honest with you. Got my rear end handed to me for a little bit there. What happened? MDMA. The FDA was getting ready to approve MDMA for therapeutic use, and they disproved it. Big effing pharma. When I've gone to DC and I talk to these lawmakers behind closed doors, I usually get the, hey, Wiz, love what you're doing. Keep trying to save and change lives of our heroes. You're going to have a problem with big pharma, or you're going to have a problem with big tobacco and alcohol lobby. And I'll look at these people and go, what are you talking about? I'm going to have a problem with them. Isn't that your job? I run a foundation, baby. So it was not dark. I know, I trust God. I trust the Holy Spirit. I knew exactly what's going to happen. These medicines, you ain't stopping them. So we had a couple couple, questioning months in here, and then look at the psychedelic names. They are having a rip your face off rally. MindMed, I would buy this stock with both hands. It's up 15%. It was at $6 before the election. We're up to 8. 20% gain in a couple days. Did I miss the run? Folks, this was a $10 stock 2 months ago with the MDMA thing going on. Okay, so Wiz, you run Top Gun options. Why'd you say buy the stock? Wouldn't you trade the options? Folks, one of my rules or rules of engagement, ROE, or SOP, my standard operating procedures, I don't trade options on stocks under $10. Why? That's the option. The stock is the option. But if you know what, Wiz, buying 1,000, if you wanted to buy, 100 shares of MindMed today, it's what, $700. If you wanted to buy 1,000, it's 8 grand. Let's just round up. Okay. Well, what about if we go look at the options chain and say, wow, oh, look, and the Jan 27s are out. Ladies and gentlemen, I am proud to be the 47th president of the United States, and my first nominee is RFK Jr. to run the FDA or Health and Human Service. I don't know. He's going to have a cabinet position, folks. RFK Jr. has been doing videos every day or every hour since Trump won, saying he made me a promise. He said, I'm allowed to go to DC and go crazy. Look at this quote. There are entire departments at the FDA that have to go. And I posted this, is it still on my stories? Yesterday, the first word he said was psychedelics. He said, let me see if it'll come up. I want to see what the exact quote is. I don't want to get it wrong. Let's see if I can click my stories here. Because it was well, that's him talking. No, where is it? Right here. Nope. There it is. FDA's war on public health is about to end. This includes its aggressive suppression of psychedelics. I don't care about reading anything else. This is my main mission objective. Read that again yourself, folks. Yeah, I'll give you the link to follow me on Instagram. It's official whizbuckley. Ladies and gentlemen, the first thing in his tweet was psychedelics. Hence the 15% pop. Let's go back. Let me give you a little basket of stocks. Let me finish with MindMed first. If you couldn't afford 8 grand to buy 1,000 shares of MindMed, how about you go buy 10 call options? You could buy 10 Jan 27. That's a couple years into the future, man. $7 calls. $3,500. Would you rather spend 8 grand or $3,500? That's a rhetorical question, folks. If you'd rather spend 8 grand, you're an idiot and not a good investor. Now, why don't we look at some lotto ticket calls? What would the $12 be, right? I'm assuming RFK gets in there, pro psychedelics. We have good news out of MindMed and some other names. How about buying 10 of the $12 calls? You save $500. Okay, I call them lottery ticket calls. So I would buy MindMed today. I don't care if it's up 20% in the past couple of days. Folks, let me show you a quick research report. Let me see if I still have it. Where's downloads? Where's my MindMed? It's let's see. It's a research report from Oppenheimer that says it's a $25 stock. But you're gonna have to trust me, or maybe I can mail it out or something like that. But it was, now obviously we had the pullback with the MDMA miss, but Oppenheimer's like, now this is a $25 stock. Where is it? Here it is. Let me open this up. This is Oppenheimer. This isn't the Whiz Fighter. This is Oppenheimer. When the stock was at $5, let let me erase the yellow there. It says 12 to 18 month price target is $25. You need to, well, I'm not going to tell you what to do. I would absolutely load the boat. Okay. Now, let me go give you a couple other names, right, that have also been depressed. But if RFK Jr. is allowed to do what Trump promised he would do, these names are going to, holy crap. A tie is up 20% today. Look at this, folks. And this was a 5 or yeah, hold on. Let me open it up a little. 1 year. Yeah, folks, this, $2.50 stock going into the MDMA failure. And then now we're down here. Ladies and gentlemen, these will rise again. This is a dollar stock, right? $1.50 up 20% today. Holy shit. Look at this. 2 million shares. Let's go back to MindMed real quick. MNMD. How much? Almost 2 million shares. So, folks, a tie, MindMed. Let's see what Compass is doing, if it's coming to life at all here. 13%. Compass, $5 stock. Here we go, man. And the last one, let's see if Simon, it's under $1. Well, no, they did a reverse split. Sorry. Up 11%. Folks, I can be completely wrong. I'm not going to be, ladies and gentlemen. This is the way. Healing. Remember, folks, there's no profit in healing, right? So I'm going to make a bold prediction for you. If you're the first time at Top Gun Options, you're like, oh my God, I come to a trade brief. This guy's ranting about psychedelic stocks. Yeah, I am. Why? Because I've seen them. They saved and changed my life. And to date, anecdotally, I think we're close to 60, 70 veterans, first responders, and family members we've healed. Okay. Now, I am going to make a prediction. I would buy these 4 names: Atai, MindMed, Cybin, Compass. Those are the big Death Stars, publicly traded psychedelic companies. If you are Pfizer, Moderna, Johnson & Johnson, Eli Lilly, and you see this guy coming for you, he told Trump, he's like, I don't think pharmaceutical companies should be able to market on TV, kind of like the alcohol stuff or anything like that. It's like, no. So here's what I'm rambling about. If he really does get to gut a lot of the FDA, folks, just like there's a revolving door between the Pentagon and the defense contractors, there's a revolving door between the Fed and Wall Street, and there's a revolving door between what? The FDA and Big Pharma. The 11 people on the advisory board at the FDA that voted not to approve MDMA, 11 or 10 out of the 11 had ties to Big Pharma. It's disgusting. Here's what I'm rambling about. If you're the CEO sitting on the top floor of Pfizer headquarters, smoking your cigar, reading the Wall Street Journal, and you see this, what would you do? I'm going to tell you, I've been a CEO. I ran a multi-billion-dollar trading firm. If I saw this going on, you know what I would do? First of all, I'd let these companies, MindMed, Atai, Cybin, and Compass, burn through their cash, right? These phase 2, these phase 3 trials, they're not cheap. It's a cash. These are biotech stocks technically right now. They're doing these phase 2 trials with psilocybin or MDMA or ibogaine. Atai is a big ibogaine one. I would buy some, get me some Atai, my brother. Here's what I would do if I was Pfizer, Moderna. I would grab my size 12 checkbook and say, oh, that's neat. That's a really nice publicly traded psychedelic company you got trading right there. Here's a check for $250 million. I could find that in my couch, by the way. We own you. Now, as a human, I'm praying to God that does not happen. Now, I told you I'm bipolar. As Wiz, I'm praying to God that happens, because these stocks, breaking news, MindMed is up 500% today on news that it's being acquired by Pfizer. Why don't you want that to happen? I want that to happen as Wiz, the trader. I do not want that to happen as Wiz, the spiritual healer, folks, because healing should be free. You know, well, as I tell people, folks, God's an awesome pharmacologist. You can't patent a root and you can't trademark a toad or a fungus. But what are these companies doing? Well, we're gonna change molecule number 92 and make it do a little bit of this, and then we're gonna patent it and trademark it and charge you $5,000 a month to use it or something like that. That's what's going to happen. But again, healing is free. It's free to our heroes because hopefully people like you, good people like you, donate to the No Fallen Heroes Foundation so we can provide healing grants to our veterans, first responders, and families. But back to the investing, folks. I said this on day one, 2-3 years ago when we started to get bullish in this space. I said the same prediction. Big Pharma they're not going to let this happen, folks. They are not going to let a mind med come out with some breaking MM120 that cures generalized anxiety disorder and not buy it. I guarantee you, folks, this is going to happen. Okay, so those are the psychedelic stocks. And it's crazy to me, first of all, that Donald Trump won, but it's crazy to me that I'm frothing at the mouth about getting bullish on the psychedelic stocks with a Republican administration. It was disgusting to me in the past couple weeks that Kamala Harris, who's put more African Americans in jail for minor weed crimes than anybody on the planet, in another desperate last-minute attempt to buy votes, I'm going to legalize, or we're going to reschedule marijuana, and Biden did it too. No, they should be in jail for weed crime. Hey, man, you had 4 years. If you really wanted to legalize weed for social use, you would have done it. This last-minute pandering doesn't work. So I'm rambling about that because I never heard a word from them about psychedelics. I assumed they were there and they're hippies and all sorts of stuff like that. They should be there. They weren't. JD Vance on Rogan and RFK, that tweet yesterday that says, I'm going to go disable some parts of the FDA and I'm full throttle psychedelics. Folks, that's my commit criteria. I will warn you, I could be completely wrong. Okay. I started this brief talking about Raytheon. Let me fall on my sword. Here's the earnings right here. You can't see the little earnings, but it rose going into earnings. They reported great earnings. They said they're swung to a profit, and the Pentagon's out of missiles, and the stock has fallen. So I got that wrong. If you listen to any sort of professional trader or educator that never admits that they got something wrong, run. A fool and their money are soon parted. Now, just because I was wrong on the long-term bullish, because hopefully peace is going to break out, doesn't mean I can't turn around and pound it into the dirt and get bearish. So if peace, God willing, breaks out because of Donald Trump, why don't we pound Raytheon into the dirt? We might have lost. I think I'm probably even. We were doing some iron condors and some bull put spreads. I have to look at my trades. I think I'm either slightly up to net even with it here, but who cares? Let's pound it. If your strategic mindset changed from long-term bullish on Raytheon to tactically bearish, we can make money off of that. Remember, as an options trader, we can make money no matter which direction the market is going, up, down, or sideways. Any questions on that, right? Raytheon, Lockheed Martin, General Dynamics. I think all of them are in trouble. How's Boeing doing? I know they got their contract. This thing is a dog. Look at Boeing. Wow, this thing is just flying into the side of a mountain here. So again, it's up a little bit today, but I could not be more bullish. So I could not be more bullish on the psychedelic sector. I could not be more bearish on the defense sector. I mean, Donald Trump essentially said, no more, that's it. No more blank checks for Ukraine. I'm sitting in here begging people for donations to heal our heroes as billions and billions and billions of dollars are being funneled to Ukraine. What's up, my brother? Fausto just checked in on the back radio. Fausto, be with you in about 10 minutes, my brother. Let me wrap up a little bit here. So we started the brief with me talking about the bullish double vertical we placed before the election that we closed for, it was like 300% profit in 24 hours, right? Yesterday, I said, you know what? This short squeeze is probably going to fade or at least level off, man. Like I said, we have broken through this long-term trend line. If any, can it do this? It just keeps going, Wiz. It can. Anything can happen, right? It most likely won't. We're probably going to level off. Now, before I even look at a potential trade, guess what? We have a little under what, an hour and a half before Jerome starts talking. I have no idea what the guy's going to say. There are times where I more or less knew what he was going to say, right? Porridge. He's porridge most of the time. Not too hot, not too cold. Obviously, during the Q&A, sometimes you can tell when he goes off script a little bit because the market will do something, but he should be pretty steady this afternoon. I'm bringing that up before I cover a tactical bearish trade. You're bearish on the market here? Tactically, maybe add a week or something like that, because if this is part of this is a short squeeze, as we talked about earlier, short squeezes end. The shorts eventually go, I got to throw in the towel. I got to buy this stuff back, which makes it go up a little even more. And then we're probably going to take a little bit of a profit or a little bit of a breather. But again, one more time, I could not be more long-term bullish. There will be downs. I already briefed you that you're probably going to start seeing bad macroeconomic data. Because what have you been told for a year, folks? Inflation's beat, and if it's high for you, it's just you. You're the only outlier. The economy's great, unemployment's great, inflation's great, everything's great. I talk to humans, folks. I meet my neighbors. I was doing a keynote up in Palm Beach yesterday. I talk to humans. I talk to Americans. Ain't nobody doing that fantastic. So mysteriously, probably shortly, the BLS, the Biden Labor Statistics Department, is most likely going to say, oh man, unemployment sucks. Inflation's back to raging. Good luck, Donald Trump. You broke it. We fixed it. Anyway, so a little tactical shot. I think we're going to run out of airspeed a little bit up here. Let's go out a week. And I trade SPX. I don't trade SPY. Why? Because the SPX settles, let's go out to the 14th. It settles in what? Cash. If you trade the SPY, that's an ETF. If you don't manage your trades appropriately and something happens, you can be assigned shares. So anytime you're trading, if you're trading in an ETF like SPY that has an index, stop trading the ETF and trade the index. And I'm not a tax accountant. I'm not a tax attorney. I don't play one on TV, but you potentially get better tax treatment trading an index over an ETF. Write that down, look it up, and then shoot me an email. I've had people say, dude, I looked at my trades for the past year. If I had listened to you, I would have paid for like 10 years of membership at TOPGUN Options. That is a Uncle Wiz tax tip, but go figure it out on your own. Let's look at out to next Thursday. Let's look at what's called the at the money straddle. The S&P is close to 59.70. Let's go to 59.70. And I don't like guessing what I think the market's going to be at around, what's that, November 14th. I look at what the options market is pricing. The options market is pricing, if you'll allow me to round up, an $80 at the money straddle. Double that, 160. So between now and next Thursday, the options market, you see this little Elizabeth Warren teepee up here with a better than 50% probability. The S&P options are pricing a move below I can't believe I'm saying this, S&P 6,050, or as low as 58.90. That's the TP right there. So my bias is to the downside, like I just said. Not super bearish. I just think we're going to take a little bit of a breather and roll over and hover a little bit. So let's go out to November 14th and let's go up. The at the money straddle was what, 60.50? Let's go up to 60.50. So 60.50, this, and they're $10 strikes. Let's go down one. I like the $5 wide strike. So this is the trade I would do today. I would sell a next Thursday 60.45 call. That's me saying by next Friday, the S&P ain't above 60.45. Wiz, what if you're wrong? Well, that's why I'm buying an upside call, right? This isn't a naked call. This is a bear call spread. It's also called what? A credit spread. I'm bringing in a credit of 120 bucks. And I'm just showing one contract for now for demonstration purposes. I'll show you what I would trade with my model portfolio in a second. As soon as I click on analyze, the first place you look is max potential loss. What's some, if the world, if Jesus comes back, Ganesh, Buddha, Muhammad, and the market just keeps going higher, Wiz, and you're wrong, what's the most you can lose? 380 bucks. There's a 26% probability of losing 380 bucks. Now, once you put a check mark there and say, I acknowledge my risk, I'm the pilot in command, how much can I make? 120 bucks with a 73% probability of making that 120 bucks. So this is a high probability bearish call spread. Now, based on a $100,000 model portfolio that I manage, where I'm only deploying about 50 grand in cash, I am never 100% fully invested. I would look at 15 contracts. Why? Because my SOP, my standard operating procedure says I do not want to risk more than 5% of my total model portfolio on any one trade. Why? Because that's me. I don't know you. I'd love to know you. Let's go grab a beer. Maybe you're 2.5%. Maybe you're 10%. I can't give you individual investment advice. That's between you and God, right? So my SOP is I don't want to risk more than 5%, 5 grand on any one trade. What's this trade give us? Just a little north of that, risking 57 to make 18. If anything, I might even come in $5. Maybe $1. Let's look at that one. The 60-40, 60-45. Yeah, risking 55 to make 2 grand. Still a high probability trade, 71%. What if we went even down $5 more? Yeah, man, risking 55 to make 2. Look at this. You could step these down by $5 and you're still looking at a pretty high probability trade. This, to me, folks, is telling me that the options market is pricing in that we are going to run out of airspeed and at least level off to maybe even pull back a little bit. So if I were new to TOPGUN options, this is the trade I would do today. Now, I want to keep all of us on time. If any of that resonates with you, I'm going to be here the rest of the day. I'm obviously the moderator for this thing. Just check out our full throttle program, man. I'm not going to brief you on it right now because I want to give Fausto his full time. You can put this up in the background. After we get done for the day, go look at our offer here at TOPGUN Options. I just showed you the trades we did in the past 2 days around the election. Men lie, trades don't. We made 9 grand. We shot a bear call spread at the open yesterday that made, I can show you again. There you go. Right there. Out. It was $1,500 by the time I got filled. We got $1,500 in 8 minutes. It was a 65% gain. And then I'd close the bullish double verdict from yesterday for a 300% profit. That was $7,500. So in 24 hours, folks, trading the S&P 500, we made about $9,000. So that was pretty good. Men lie, trades don't. That essentially, folks, if you look at the offer here, I paid for 3 years of your membership at TOPGUN Options. 3 years of a full throttle membership paid for in 24 hours. Okay, awesome. All right, I want to keep us on time and on target. I love this next guy, man. Fausto, good buddy of mine. We've known each other for years. Hopefully, some of you, you know Fausto. He's all over the place, man. In the financial media, he's been on Fox and CNBC, NASDAQ Trade Talks. He's got his own podcast set up, obviously on CNBC as well. He's been trading since the early 90s, man. He's been trading as long as I've been trading, and that's a little sad because my brother and I are getting a little advanced. I'm not going to say old, I'll say mature. We're getting advanced, but with that advance, man, he's got some salt and pepper. I got some salt and pepper. Comes wisdom, right? And I love when people come to me and say, hey, I actually signed up for CTU. I strongly recommend, man, you red team. Like I just listened to Anka. Now we're going to listen to Fausto. You listen to me. Go get, Tiger Woods is a swing coach, folks. He's got a putting coach. He's got a driver coach. Go get a vast array of opinions, and that'll really help in your targeting, man. So, ladies and gentlemen, I'm going to get out of his way. Fausto is a great human being. He's a great American. My brother, let me make you a presenter here, and I'm going to give you the floor shortly. Yeah, I'll answer some questions in a little bit, like in between speakers or something like that. But yeah, these are all great questions. Let me go find Fausto on our list here, and then we'll throw him in. Thanks. Yeah, I appreciate that. Yep. All right, Fausto, make organizer right there. So he's an organizer, and then let me throw it over to you. All right, so my brother, you should have the controls and the mic and all sorts of stuff. You good?
Yeah, I think I'm good. How you doing?
Dude, I'm doing fantastic, man. I'm not going to relitigate it, but dude, I got it wrong. My 2020 prediction was it would appear that he won on election night and he'd lose over the following days. And I said, same thing's going to happen this time. So Fausto, I love being wrong and making money, my brother.
That's all. Listen, you know what? We learn from our mistakes. You know,
Absolutely.
The thing is that that's part of trading. Trading, that's where it comes down to it. Listen, I'm going to talk a lot about the election. I'm going to talk about what happened. And you know what? There's still stocks running. I know you're a big fan of Amazon. That stock is doing well. I bought more of it once it broke that 200 resistance levels. I talk a lot about it. We're going to talk about the fabulous sevens, talk about stuff like that. Let me share my screen really quick so everybody can see what's going on right here.
Awesome, my brother. I'll get out of your way. You got to the top of the hour, man. Take your time.
No problem. All right, so everybody see my screen okay?
Looks good to me. Yep.
All right, perfect. All right, I'm just put the questions over here so I can read everybody's questions. All right, so anyway, it's always a pleasure talking on behalf of Top Gun Options. We've been doing these events for long. Listen, I hate when we say how old we are, how long we've been doing it for. But the thing is, we love what we do. We hate seeing people lose money. And, you learn from these styles because we're all a little bit different. You just got to know how to play the game a little bit. And that's really what it comes down to. So I'm going to talk a little about how the election, how it affected certain stocks. I know there are people that can't stand Trump. I know people love Trump. I know people can't stand Harris and people love Harris, but there are stocks that are going to get affected. It's the good thing in the trading industry is that, when you have a change of power, you're having a change of ideologies, or certain stocks are going to benefit from it, and you're going to see how those things work. Specifically, I'm going to focus on things that you buy on rumors, sell on news. So I want to go to the live markets. I want to show you a couple of stocks really quick and show you what we're going on. So I got a couple of positions open up right now. I did jump into Amazon again this morning, and I do a little day trading and swing trading. You could see Amazon has been on a really good tear lately. When that news came out, you could see right here. I want to blow this up really quick so you see what's going on here. So Amazon had major resistance levels. You could see it clear as day here at 200. Okay. Now what we're going to focus on, I'm going to teach you guys, is this. This is called the right of the chart. Okay, now I know a lot of us look at the left of the chart. The left of the chart is seeing what happened in the past. I'm going to show you the future. And the future is this. If you've been following me on Instagram, TikTok, YouTube, everything, I've done a lot of videos on Amazon and NVIDIA specifically because of the Fabulous 7. But there are a lot of the stocks that are moving. And the thing is this. You can see here this big red line right here. These are green balls. This means time and sales. These are transactions that are taking place. And these little lines right here are orders that are out there on the futures. So we're looking at the right of the chart. And you can see here that there's a 130,000 share seller at 215. You got another 200,000 share seller at 220. And you got another 123,000 share seller at 225. So you can see a stock has resistance levels made by sellers every $5. Now, if you've been watching some of my older videos, you'll see that there was about I think over 1 million share seller 200, and it had a tough time breaking it. Now, the big thing I'm going to try to teach all of you is this: how to read the future. And like NVIDIA, here's another one. Here's a good one. Here's a classic one right here. NVIDIA right now also moving really well, right? But when you look at the right of the chart, you'll see this big red one that kicked in right when the market opened up. And there is about there's a 2.5 million share seller out there. Now, let me explain to you what that means. 2.5 times 150, you're talking about over almost $400 million worth of stock that's looking to be sold out there. So the big thing that you have to understand when it comes to trading is that it's all about following orders. So the style that you're using this is only going to supplement it. Like, I know that if you follow Wiz and you say, listen, can we look at the options in NVIDIA? And you're going to see these big strike prices at these prices. And what makes those strike prices, a lot of these are their orders. So we're going to go into more detail about that, and we'll cover that more. But before we do that, let me get right into a little bit about, explain a little bit about who I am, why I'm here, and what I'm about to show you. I'm the founder of Cybertrain University. I've been doing it for over 30 years. We have several instructors that work at Cybertrain University. We have a very big staff here. We run a professional trading room. I'll invite all of you guys at the end in the next 45 minutes how to come and join. I've competed, like Wiz said to you, I've competed against some of the biggest schools in the industry. I beat every single industry I went up against at the Traders Expo. I'm also the author of a book, How to Beat Market Makers at Their Own Game, which, by the way, for you guys just to listening in and being here, I'm going to offer all of you my book for free. Okay. I just got my commission check from Wiley, one of probably the most prestigious publishing companies that wrote the book. And you could pay me for it, $47. But today, just for you guys being here, I'm going to give it to you for free. So I'm going to just give you my chat. You got my email right there. So here's my email. Just type in Fausto@ctucorp.com, and we'll get that sent out to you right after we're done today. So here's my email, Fausto@CTU Trading or Fausto@CTU Corp, whatever you like, and we'll get you a copy of that book. It's a fast read, color book, teach you a lot about what we talked about today. All right. So I'll give you that. Now, how I got started, like I said, just like Wiz started, he likes to talk a little about himself, how he got into this industry. He learned a lot from being a professional fighter pilot. I've learned by living here in New York as a market maker. And, I'm first generation Italian. My parents came here, always taught me, you want to learn from the people that are really good at it. You want to be bad at something, go try it yourself and see how good that works out for you. Being 22 years old, wasn't really good at it. Didn't listen to my father, failed, but being fortunate, was able to have someone take me under their wing, and they showed it to me. And basically, the difference from 30 years ago to today is that back then you had to be licensed. Back then you had to work for somebody. Back then you had to split the profits. Back then you had to commute back forth to the city. Now with today's technology, things have dropped, and prices have gone down dramatically. You know what I mean? So, and that's why we're here. The problem with trading, and I know Matt says this all the time, is that it's a very big failure rate. It really, really is. It's a very big failure rate. And the reason why people fail is they don't take the time, smart people like you that are here today, to listen to people like us that do it. We hate people losing money. Okay. It's a big failure rate. And, you can do a search on the internet and say, what's the success rate? You'll see it is huge. It's almost like a 90%. The reason why it's such a high failure rate is because everybody wants to try it, but they don't want to do it the right way. I'm here to tell you, and this is why we're hosting this event, hopefully that you're going to be smarter than the other 95% of the people that lose, and hopefully learn from it. Now, I've done a lot of presentations. I'm actually going to be at NASDAQ tonight for a big presentation there. And once again, the exchanges want you to learn how to play the game of trading. That's really what it comes down to it. Now, after teaching for so many years and, being married for 28 years, I think one of the most successful things about being married is that, being a good trader. You have the convenience. You can come and go whenever you want. You can do whenever you want. It's a great job. It really, really is. But you got to know how to play the game. Now, listen, this is not about me. Okay. I just want you to understand I'm a human being just like you. All right. But to be good at something, you have to learn how to play the game. So this is really about you, to hopefully we could change your life to not be the other failure rates out of the industry. So with that said, a couple of questions and talking about trading. So we had a couple of stocks that did really well. We'll talk about the Trump stocks that won. Let's talk about DJT. If you want to know the symbol, Donald J. Trump, that's abbreviated to it. So he owns True Social. All right. And when we found out that when Elon Musk was basically teaming up with him, Trump stock did really, really well. And it had a nice rally. The issue with that is this. If I bring up the execution system, you're going to see something here that I want to show you. There's something called buy on rumor sell on news. So I'm going to go back 2 days, and here's the chart I want to show you. So when Trump won the election, the stock went from $35 all the way up to 48. But it's been on a nice big uptrend. Then all of a sudden, once the market opened up, it was at 43, dropped down to 35. Now we're down to 28. This is called buy on rumor, sell at news. Why did the stock go up so much? Listen, when Elon Musk teamed up with him in October, it was at $15. Rumor has it, maybe he's looking to acquire it. It's a public company. But to go from 15 up to 55, that is a huge, huge profit. I mean, you're talking literally about almost, I don't know, 200, 300%. Who here wouldn't want to be in a stock that's up 200, 300%? But then you're like, well, what happened now? Once again, buying rumors, selling news. What really drove the stock down is buyers and sellers. Now, with that happen and him getting elected, a lot of stocks obviously going to do well by it. We'll look at some of them. Banks, energies, crypto stocks did phenomenal. Okay, they all did great. Tesla did phenomenal, did great. Actually, Tesla's still going higher, doing well. So the PLTR, another one, great stock. Military stock did great. Coinbase, Hood, Robinhood, the stock did great on it. Look at all these stocks, how unbelievable they made a big move. Actually, Coinbase is still going higher too. Geo, I mean, the list goes on and on and on. What happened to the Harris stocks? Well, listen, she didn't win. So listen, you have one person that is drill baby drill, and you got one person green baby green. Okay. Now some of those stocks took big hits also. Plug, all the energy, all the green stocks, they all took pretty big hits. Run got hit. ENPH got hit. I mean, look at these stocks, 90 down to 72. They all got hit. The thing is this, we're not here. I know you're probably sick and tired, and so am I, hearing about this damn politics, the presidency, but this only comes every 4 years, okay? But every day is a new adventure. We had a hurricane. Home Depot, Lowe's, Generac, they all did great. Hurricane came in, the stocks went down. You got, crypto news. You had, Hurricane Sandy. You had a financial crisis. You had COVID, okay? You need to be prepared for the next upcoming catastrophe, because those catastrophes do make opportunities, and those successes will continue. So the thing is this, I'm here to show you exactly how to find those stocks that move in the market. Now, the way we find them is not really that difficult. Basically, all we do is we just scan the market, look at the big percentage gainers, and usually you find stocks in that industry. Like today, you got Lyft that's doing well today. It's obviously Uber would do well. I mean, there's always stocks that are going to make the big percentage gainers and losers. And we're really kind of trading those stocks. And if you look over here, like look at these net gains, 97%, 78%. I'll even show you today. Look at the big percentage gainers. CELU, 80%. Look at this stock, $2 to $260. APPP, 162 to 250. I mean, the stock's up 44%, up $73. Tesla right here, this thing's up 5%. It's not a lot, but you could see there are a lot of stocks in the big percentage gainers that do well, 34%, 32%. I mean, there are a lot of them out there. But the thing is, are they going to continue to go up? When they're going to go down? That's what I'm about to show you in the next few moments. But there are good days to trade, bad days to trade. There are good times of the day to trade. There are bad times to trade during the day. And by the way, I'm going to invite all of you into the trading room so you all could see that. But let me just explain something to you. Finding them is not that hard. It's really not. Finding them is one thing. Knowing to get them at a good price, now that's what we're going to learn right now. So we're going to talk a little bit about level 3 and level 4. What are these things? These are the tools brokerage firms use to read the market. This is actually the order book. When you want to, I'll give you an example. You ever see the people running around the New York Stock Exchange floor? What are they looking at? They're looking at orders. That's basically what they're doing. They're looking at orders. So everything that you're learning from all the other presenters here is a great tool this will only supplement what they teach you. So even though you see a good indicator, okay, well, great, I got a good indicator, but are those same orders out there? So this is basically the right of the chart, not the left of the chart. Let me explain to you a little bit about what we're looking at here. Okay. Now, for some of you, if you subscribe to my channel, I have over 3,000 videos, 3,500 to be exact, videos of how to trade exactly this way. You can also see some of the big highlights of me on actual NASDAQ talking about it. Now, what we're going to focus on is something called iceberg orders. An iceberg order is a big block order. Got to remember, the way things go up and go down is buyers and sellers. So what I'm going to do is I'm going to show you exactly how to read the book. The book is this. Now, let me just explain something to you. This is not my software. I didn't invent this stuff. I'm not trying to sell it to you. This is actually the street. You're actually seeing Wall Street, okay? This is basically what it is. And this is directly through the exchange. This is not a third-party software. This is not like, hey, I came up with a new platform. No, this is directly through them, all right? Now, let me just get my crayons out here so I can do some drawings and show you what's going on. So right here, what you got, I don't like that one. Not a good color and not thick enough. Pen, yeah, pen's fine. Okay. So anyway, these are buyers, these are sellers. Now, what you're seeing is every buyer and every seller around the entire world that are trading Amazon. Okay. These are every order that's out there, every amount of share that's out there, and at what price they're looking to buy it at. Whoever wants to buy for the most amount of money is up on top. Whoever wants to buy for less money is down at the bottom. Whoever wants to sell Amazon for the least amount of money is up on top. Whoever wants to sell for more money is down at the bottom. So what you're looking at is every single order in the entire world on the NASDAQ exchange, where Amazon is from, when public, when it's trading on that exchange. Now, you have to remember, what makes you smarter than this 162,000 share seller out there and this 77,000 share seller? You understand, like, how many shares would you trade of Amazon? All right. And don't bring up options like, well, I want to trade the stock, I'll trade the options. Okay, listen, being a good option trader, you got to learn how to trade the stock. It's the movement of the stock that makes an option move. So as much as you might say, well, I can't afford to buy 1,000 shares of this, I got to trade 100 shares of that. Great. You still want to know what's happening in the actual stock, right? That's a strategy. This is not a strategy. This is the actual reality of what's really out there. So this will make you that much better for an option trader just seeing by those orders. All right. Now, let me clear this out. Erase the drawings. And let me show you a couple more. So how do we utilize this data? So right here, we're looking at Chipotle. Okay. Here's Chipotle, and the stock you can see here is going down 56 all the way down to 49, right? As the stock stops at 49 and then goes back to 52, why would it stop at 49? Why didn't it stop at 50? Why didn't it stop at 45? Why 49? Well, apparently there must have been it's not a support level. There must have been buyers out there that made that stock. Because remember, buyers make support levels, okay? Buyers equal support. So if you're looking for support, there should be buyers out there. Now, here's the buyer side. These all buy orders, and we work our way down. You'll see here, you have a 6-digit number, which is 139,000 shares. You got 60 orders that make up the 139,000 at 48. Now, is that a lot? Well, when you look at all the other orders at every single price, 1,000, 1,300, 5,900, 1,000, I mean, like, if you multiply what it gets to 130, you're talking about over 100 times more buyers at that price than at any single price out there. No wonder why the stock bounced there. There was a big buyer. And sure enough, by knowing that big buyer was out there, it made a support level. And that's why I ran from 48 and went to 52 in a matter of a few hours. If you just knew that order was out there and you bought it with those buyers and you sold it now, you did pretty well for yourself. Now, let me show you a couple more examples here. All right. Here's another example. Let's look at our resistance levels. To have resistance levels, okay, you need sellers. All right. Sellers are on the ask. When you look on the ask side, which is the right side, you'll notice when you work your way down, you'll see that there are buyers every corner. But on the sell side, you got this 200,000 share seller. 550 orders are out there getting out 95. Now here I have a stock that started this morning at 87. Like 90, like if you knew, like you say, like, wow, 95 is a lot. I mean, like, you really think 95? Really? I was thinking like maybe 90. I was thinking more of like 80, 89. 90 is a lot. Well, what do you think it did? Busted through it, kept going, and it hit 90. Like, oh my God, you think it's going to go to 100? It could, but we got to get past that 200 share seller, 200,000 share seller. But it didn't. And that's why I came back to 92. Just keep in mind, fellow traders, how much smarter and better trading decisions would you have made if you just knew where the orders are? Just like knowing exactly, like listen, do you want to go up against a 200,000 share seller, right? Or would you want to go up against a bully? I mean, think about it. You see it. Imagine seeing a guy like Lou Ferrigno, or I don't know, a big musclehead guy. I mean, you go to a bar or a restaurant. I'm just use that as an example. You know, all of a sudden you see this big bouncer. You think they're going to put a little bouncer at a bar or restaurant? They're going to put a big bouncer. And what does that big bouncer mean? It's very intimidating. Think you want to go out there and cause trouble and like, I don't know, that guy, I got to deal with that guy if anything happens. Okay, I'm not going to really have a fighting chance. Well, guess what? You want a fighting chance? You got to know where the bouncer is. You got to know where the big boys are. The big boys are on the right of the chart. Now, let me show you a couple of more examples. By the way, did I lose anybody? I'm just out of curiosity. Quick little chat. Kurt, I heard you in there. Anyone else? Did I lose anyone? Just out of curiosity. Guys following along? Just give me a quick yes or no. All right, good. I mean, it's not really complicated stuff. You know what I mean? Like, it's really not. It's just more or less just following orders. You know what I mean? Let's look at some more examples here. So Celsius, okay, tanked after earnings came out, right? Well, right, it tanked. Where's it going, to zero? I mean, it could, but we got to follow the orders. So when we look over here and we check on Celsius, okay, well, let's see if any buyers anywhere to be found. We work our way down the buy side. We got 220,000 looking to be bought at 27.80. Not 28, not 27, but 27.80. What do you think is going to happen when we get to 27.80? I mean, you're talking over $6 million worth of stock, right? Came all the way down to 720, 27.80, shot right back up to 29.80. I don't know about you, fellow traders, but as bad as the news might be, maybe that was an opportunity for this person. Like, oh my God, I don't care how bad that news is. I got to buy the stock. Well, someone's buying it. I'm not questioning it. And by the way, for everyone here that questions if those are real orders or fake orders, I'm going to remind everybody, you're all going to be invited to come and watch me trade live in the market. You're going to see it. You'll see it. Let's look at a couple more examples. PLTR, okay? Pulled back after breaking all-time highs, right? Okay, stock in 2 days ran from 42 up to 55. That's a huge runner-up. And now you're starting to think about, okay, well, where's the next resistance levels? Well, you know what? It started trending down. But here's the catch. Is it really trending down, or is it profit taking? And who am I to kind of question and analyze the stock? I'm just going to follow the damn orders. Well, guess what? When you look right here, 199,000 shares. How much is that, by the way? 400,000 times, what is it, $54? You got $21 million worth of stock sitting there, okay? I don't have 21 million. Wiz doesn't have 21 million. I don't think he does. I know I don't. But to put it in an idea, well, guess what? It's not one person. It's 54 different people out there in the world. But at the end of the day, it adds up to 400,000. You think I want to go out there and think it's going to go lower? Well, sure didn't look out that way, because it hit it and shot right back up to 56. Not because of Fausto said so, not because a Wiz said so. It's not because PLTR said so or the CEO. It's because 54 of the people out there want it at 53. That's why. And guess what? That's what trading is all about. Now, if you did an option call on that, by the way, anyone here day trade options? If you look at the day trade options, look how unbelievable the stock was. The stock went up over 250% over the course of the day. So if you knew how to trade the stock, guess what? You could have day traded the option on it. Now, how about resistance levels? Hood, one of the big Bitcoin stocks. They own a very big position in it. They're one of the top 10 biggest holders of Bitcoin. But, obviously, like, I don't trade Bitcoin, but you could trade the stock, right? But at the end of the day, how do we really know where Bitcoin's going? Well, you bought Hood. You want to take a profit. I don't know. Maybe you want to hold it. Well, there's the only way to figure it out. Where is the next biggest resistance levels? Well, at $30, you got 190,000 shares out there at 400. You got 400 orders out there. Now, the thing is this. When you look at the right and you see all these numbers, you're probably thinking about, it's a lot of numbers. I don't know. What am I supposed to watch? 99% of them you don't care about. The one you care about most is the one that's in the 6 digits, not the ones in the 4 digits. That's a big order. And by knowing that you're coming up to $5.47 million worth of stock, and if you didn't have that game plan and you wonder why the stock didn't want to continue after 2 o'clock, that was the reason why. Let's go check out Amazon. Let's go back to Amazon. So Amazon breaking all-time highs, right? Big all-time highs. And the thing is this, where is the resistance? Because listen, great traders are always focusing on taking profits. We're always thinking of taking profits. We don't really like to be in cash, really don't. But because listen, unless it's done into design, but you gotta always be prepared. Wiz always kind of tells you this. We all know he's a fighter jet, a fighter pilot. Okay, he flies till today. Always fly. Loves what he does. He got to where he is, and he'll probably explain better than me or anybody, but he knows better than this. They don't expect you. They expect you to do your job. What they worry about is you don't get hurt, right? We spend more time, even when you hire someone as an employee, you hired them because you thought that person was qualified for the job. It's your job now to teach them not to make any mistakes and put danger in your hands. Because when they put danger in your hands, they're putting danger in everyone's heads. You expect them to do their job, right? Being a good trader, we never focus on winners. We only focus on the losers. Losers are what put you out of business. Losers are what dig yourself in a hole. Losers are what prevent you from jumping into winners, okay? You got to learn how to lose first before you can learn how to make. And the thing is this, if you focus on owning Amazon, you're like, okay, we finally broke this resistance. Where is the next biggest sellers? You got to know where they are. And when you look on the right, remember, you don't control the market. You don't want to be on Main Street. You want to be on Wall Street. When you got people on Wall Street selling 77,000, 162,000, right at that 212-ish, what do you think is going to happen? It's going to hit it, and it's going to go back down. That's what trading is all about. Now, stop and think about this for a second. How much smarter and better trading decisions would you have made, or in an option trade, whatever it is, if you just knew where orders were? I don't have a problem being a follower. I was always taught to be a leader, but I'm okay in the stock market because I know who the big kahunas are. Unless I'm going to compete with all these big orders, which you're not, you got to know how to play the game. And look at the option call on this. If you knew the option call on it, okay, you would have made over 100% on your price, on your strike price, just by knowing and following that stock and seeing that order. But to looking at the strike price on these stocks, on these call options, how'd you know it was going to back off and go to that high? By understanding what's happening in the stock market. Now, let's go in the live market. Okay, anybody here have any stocks we want to look at? Just give me a chat. Let me know. Give me a stock if you guys are looking at anything out there. I want to hop back up to Amazon really quick. Okay, why any of you guys want me to look at any stock? Okay, so let's look at Amazon again. I want to go back to it. So Amazon hit major resistance levels here at 212. It went all the way up and shot right back down. Why did it stop? We'll check out Uber. That's a good one. Okay. Why did it stop there? Well, here is a similar to the level 3 that I showed you, something more level 4 on more of a heat map. When you look over here on Amazon, you'll notice that we had orders that the stock kept going up and up and up. It had a big order here at 209, took the guy out. It had an order here at 210, took the guy out. Then it had an order here at 210.5. Then you could see right here, there was a huge order here at 210, but you could see how program trading kicked in. This is 9:30. The thing is, you're always going to hit a resistance levels. You're always going to have someone that's going to sell, okay? You just got to know where they are before it gets there. When we took out that big seller at 210, which was 327,000 shares, the next decent seller wasn't until we got around here, you can see orders starting to stack up right around here. We got started 210, 212, okay? Now, it wasn't as big of a seller as that 210. The big one is now, the next biggest one is here at 215, but you could see here on the heat map, and you could see on the orders on the right, you got a little bit of a problem here at 212, okay? Now, where is the support levels on it? Well, from the looks of it, I don't really see too many sellers out there. I mean, buyers. See a lot more sellers. Buyer, I see something here at 207 for 14,000 shares. That's not really a lot. You know, if I go down really out of my way, 200, not really a lot, but you could see it as I'm zooming out. You could see more bigger, not only on a day trade, but also on a swing trade. Let's go check out Uber for Bruce. Okay, Uber. Now, Uber, let me bring up see what the stock is doing right now. So Uber had a really nice move this morning, 76, and it came all the way back down, hit support level of 74, and now it's all the way down here, hovering around 73, okay? Why did it stop here? Why did it go to 72? Why did it stop at 75? Well, let's go check out the orders. So when I zoom out here, you could see Uber, there are a lot of orders right around here. You see all these lines right here? Look, it's like a big mess over here. All the orders were right around the 73, and they really started kicking in now. So you can see there's a lot of support levels there, okay? There was nobody looking to buy it at 76, 77, 75, 74. But once you got around that 74-ish, 73, now you see the line showing up, and that's the reason why. Now, I don't know what your long-term plan on that stock is, but if you're doing a swing trade, numbers I will be focused on is 70, 65, 73, and 80. That's where you got right there. Kirsch has a question here. How do you know when you have taken out a big buyer and seller in the stock? Okay, that's a great question. So you see these balls right here? These balls are time in sales. Now, this right here is time in sales. These are all the transactions that are taking place. So stock trade 12 million shares. Now, if it comes up in red, that means people on the bid are getting executed. If it turns green, that's a transactions means that people on the offer are getting executed. So whenever there's a trade it goes to the bid side or the sell side, and everyone's being recorded and it's being posted on the ticker, which is the time in sales. That's why they said you get a time stamp and it's telling you that sale went off that price. So hopefully that answers your question. All right, any other stocks anybody wants to look at? Anything else out there? Maybe, let me see what we got going over here. A couple of good ones out there. So United, Under Armour had a good move this morning, but not really a good looking chart, not a lot of good ordering stocks. Because remember, like, we're in the business to trade things that have orders. If we don't have orders, we really don't want to trade it. So, if I don't see like nice, clean, big orders like this is SMCI. The stock got destroyed. And look at all the orders here. Between 20 and 20 and a half. Big buyers, 179, 120, 340. And another one over here right around 21. So it looks like there was a lot of buyers out here between 21 and 20. And then we got some decent sellers out here at 27. Now let me go over here and look at the chart. SMCI. And when you look at this, I'm going to draw my trend line. Look at the support levels there. And look at the resistance levels there. Okay. You could see here a lot of support levels yesterday hovering right around that 21, right? Now the stock, you could see it's like channeling here. I mean, it's a big, gap. 21 to 27 is very, very big. But if you're doing a swing trade, and if you look what happened to the stock recently, the stock got destroyed. They lost 3 accounting firms, which, by the way, I made a video on this. Let me bring up my video. Where is it? Let me go on my Instagram. Here's my Instagram. So I did a video right here, SMCI. I don't know if you can listen to it, but let me see if I can play it. SMCI got destroyed. 3 accounting firms dropped them. Stock took a big hit. But guess what? It's been making a big comeback. But there's one small problem. Let me show you what that is. Stock started at 30, went all the way up to 120, did a reverse stock split. It's been coming down. News came out, lost 3 accounting firms. Boom, dropped all the way down here to 24. From July all the way to December, stock had major supports here right at 24. An issue, $28. Big iceberg order sitting here at 136,000, and stock is starting to trend out. If we can get, so basically what you saw is what I just showed you. I posted this video about like 3 days ago or something like that. So these are things that you got to look at. That's going to help you, give you a game plan of where to get in and where to get out. And that's where we saw that resistance levels, what I said about 28. You see the orders out there now. They're still out there. That's 3 days ago. I'm talking about today. There they are. See them right there? 28, 27, 27, 27 and a half. They're still out there, even 3 days ago. That's called program trading. The video, well, let's do IBM for Kinnish. We got, he wants to do IBM. IBM. Let's look at that one. So as that's loading up, let me bring it up over here. IBM. Now, IBM been on a little bit of a good move. Hit 236, came back down. It got some good support levels on 205-ish. Let's go see what the orders are. Here's IBM. Let me make this 3 hours, get some more data. And you could see here that it's not really going anywhere. IBM's not really a big mover, but on the long-term chart, I mean, you could see it's a New York Stock Exchange, not more NASDAQ. So you probably have more in New York. We're looking at the NASDAQ orders, but on NASDAQ, you could trade any stock on any exchange. But you could see, some buyers here around 203, some sellers right around 225. On the day trading side, 215, 210. You know what I mean? Nothing great. But least you got a game plan. Hopping over here in the video again, there we are. Look at the big difference. One, you have 10,000 share seller. This one, you got 2.5 million share looking seller right there. Okay. So as much as you might think like this stock, like I have people that say, oh, this thing's going to 160. And I said, I hope so too for your case. But wouldn't you want to know you're going up against a 2.5 million share seller sitting there? That's got to tell you something, right? All right. So, by the way, who here wants to get Book Viewer? Anybody here want to get it? If you want to get it, just send me an email again. Fausto at CTU Trading. CTUtrading.com. So that's my email address. So if anybody here wants to get it, I got 2 videos that are 5 minutes long. I'm not going to send you to the website. It's in the video because I'd rather you see how to lay it out and set up first before you go out there and, hey, you know what? I want to get this. I want to try and see how it works. Okay. Makes sense. Okay, great. Watch the videos first, and then I'll tell you how to get it, because what happens is the defaults are wrong. I'm going to show you how to set the defaults. Otherwise, you're going to see like 15 columns, said the top 3 that you need, all that, yada, yada, yada. And that's basically where that comes into play. So that I think you'll like it. So once again, if you want it, just send me an email. I'll send it over to you. All right. Now, we did talk about level 4, okay? And, listen, the difference is one's on a heat map versus one has orders. Do these things cost money? Yes, but I'm not here to sell them to you, okay? The only reason why you want to buy something is you really, really, really need it. If you don't need it, then don't buy it, okay? The NASDAQ Book Viewer, just give you a heads up. The exchanges, I don't know if you heard about this, they don't work for free, okay? When I started, it cost me $1,000 to buy it. Today, it costs $15. Sounds like a pretty good deal to me. You know what I mean? So why not go out there and pay the $15? Now, if you haven't done it already, you could subscribe to our channel. We got great videos. Ring the bell, subscribe to the channel, and make sure you like us on our videos. All right, and we're live every day. If you want to get those alerts of watch lists, alerts of iceberg orders, all that good stuff, something you definitely want to check out. We're also on Facebook, Twitter, Instagram, TikTok, Telegram. So we have a big staff that manages all of them. We're always posting stuff every day. Some people have a favor versus others. We're also endorsed and sponsored by some of the biggest brokerage firms and exchanges in the industry, which you always like to say. And we also have a 5-star rating on Google. After being around for 30 years, I think having a good reputation of learning from someone is very key too. ChatGTP ranked us #1 school for day trading. So if you guys are looking at Warrior Trader or live trades or anyone, stocks to trade, whatever it may be, you could see that ChatGTP did rank us #1 out of all of them. Now, the thing is this, going out there and finding these iceberg orders, we'll show you how to do it. It's not that hard. The hardest thing to teach somebody is just more the greed, the discipline, and the experience that comes along with it. And that really how it works. Now, this is what I'm going to offer everybody. I want to offer everybody a 1-week trial in my trading room. Now, I'm not asking for a lot of money. I just want to know you're a real person. So all we're asking is for $9, okay? Money back guaranteed, okay? We're not going to charge any more. We're not going to charge any less. We're not going to hit you with some subscription. We don't do that. But if you like what you hear and you want to come and see it live in the market, all it's going to cost you is $9. You could take your phone, you could scan that QR code, or you could just go to www.ctu.co/trial. There you go, right there. Now, these are all the things that you're going to get in our trial. We do live commentary every day, all day long. You're going to have access to the message boards of traders that are in our trading room, what they're buying and selling, how they think for themselves. So you'll see that these people just like you, but we practice what we preach. We show what's going on. It's the way I learn is that you got to be around good traders. That's how you learn. So everyone out there, if you're interested, all you got to do is $9 and get it from there. We also have great gurus that do come on. Wiz has been on, several times here at Cybertrade University in our podcast. I know he does podcasts too, and they're great. But we do more of a webinar podcast, so I think you'll like it. Once again, $9. That's all it is. Now, if anyone has any questions, feel free to put them in the trading room. But other than that, I'm pretty much done. So I give you guys the chance. I do get a couple of questions. People do ask, like popular ones, like how much money do I need to trade? Do I need a brokerage account? Listen, don't worry about opening a brokerage account right now. Unless you have it open, don't worry about saying which brokerage firm is better. Once you find out that this type of style is good for you, the Wiz will tell you the same thing. Some brokerage firms are better than others, depending on what kind of your style is. If you specifically work on crypto, there's a great brokerage firm for that. You really want to do options, there's a great brokerage firm for that. You want to do stocks and options, there's a better firm for that. So don't worry about that right now, okay? All you got to worry about is learning. Surround yourself with people that are good at it, and if it's your style or not. Now, if anyone here does register, I will talk to you on the phone. I'm a type of person. I'm a people's person. So if you're anybody here that really needs to have that one-on-one, what I like to do is if you get into the trading room, you're there for about 2 days, then I like to kind of give you guys a call. We'll set up an appointment, and we'll discuss your situation and find out if it's something for you or not, which I think is pretty good. But I always get people that say, I really never heard of level 4 before. Well, it depends what kind of trader you're dealing with, okay? Some traders don't really need it because maybe you're an investor, But I can tell you this, it's only going to help you. The only reason why I know this, and teach is because I was a market maker. I was a floor trader. And that pretty much does it, ladies and gentlemen. So you're getting all these great things. We're giving you workshops, Traders Talk Library. Oh, and I forgot to mention, if you do register, like I said, top 20 people do get a free coaching class. All right. So Wiz, that pretty much does it. Hopefully everyone enjoyed that presentation. Hopefully you learned something very valuable and see that, what, it's only going to help you, not hurt you, to kind of know where everyone else is in this world that are trading a stock that you're in. But by not knowing where they are and not knowing where the block rocks are, without knowing where, the institutions are, the high frequency trades, the AIs, everything that you heard that it does exist, well, now you can get that opportunity to do it. But let me go out there and show it to you and see how it works over the course of the day. All right. So with that said, guys, thanks for listening. Hopefully you're able to teach all of you. And like I said, $9, you got nothing to lose, everything to gain. Thanks for listening.
Awesome, my brother. Everybody give my brother Fausto a virtual golf clap. Appreciate it, man. God bless. And let's talk next time you're down here in South Florida, my friend.
I'm actually going to be there in 2 weeks.
Dude, give me a call. You got my cell phone. Love to see you.
Yeah. I'm actually doing an event for TradeStation. So.
Oh, cool. Yeah, they're right down the street.
Yeah, I'm going to be in Miami. I'm doing an event for them in Miami, but definitely we'll meet up and hopefully we'll meet up.
Awesome.
I still owe me that flight. I'm going to hold you to it.
I got it, brother. Eat a banana for breakfast, man, because it'll taste the same coming up as it did going down.
All right, talk to you later, brother.
All right, see you, man. All right, folks. I love me some Fausto, folks. $9, man. Make it happen. I go watch his stuff, man. I get trade ideas from Fausto. I love that he's an Amazon guy, and that kind of makes my heart smile as well when people are talking about Amazon. We're running a little bit ahead, but I see that our next presenter is actually in here, and it's Jerry Allison. So, Jerry, let me just get a quick sound check to see if you got me loud and clear. Hey, my brother, how are you?
Fine. How are you doing?
I'm doing good, my brother. This is perfect timing, Jerry, because actually a bunch of my Lifetime members recently said, "Hey, who was that guy or that organization that helps us set up LLCs to trade through and stuff like that?" I said, "Well, you're in luck. Make sure you come to our event on November 7th." So, folks, hey, Jerry Allison, he's a CPA. He's been practicing for over 30 years. He's a doctor, Jerry, too. He's got his doctorate in business administration and a master's in math. So obviously he is literally a 500-pound head. In addition to accounting in all types of businesses, he's taught at several universities, colleges, and he helps students set up and operate businesses efficiently. He's also performed research in business strategy, published several journal and conference papers, and he currently works with one of our big strategic partners, Traders Accounting, and he helps clients reduce their taxes using mark to market and other strategies and tactics. So my brother, the floor is yours. Go ahead and throttle up and get airborne, my friend.
All right, thanks, Wiz. If I can get the see the screen here. Let's see here. We can get this thing going. Having trouble getting there we go. Okay, thank you.
You bet.
All right, I'm gonna.
Yep, tax strategies for traders 2024 and beyond. You're good to go.
That's it, absolutely. As Wiz was saying, I do work for Traders Accounting. My name is Jerry Allison, and I'm a CPA, tax accountant with that firm, and I've done a few other things and very knowledgeable in business. At least that's what the letters say. But anyway, today we are going to look at this presentation, and I've changed it a little bit from what I've done previously here, because now we're entering into the last part of 2024, and so people are starting to wonder, what can I do as far as my taxes? Can I still do anything to save money? And then what about 2025? Now is actually the time to start planning for 2025. So we're going to start getting into all of that. But before we do, we got to start making some lawyers pretty happy. And so I need to read our disclaimer. To the best of our knowledge, the information given in this presentation is accurate as of today's date, November 7th, 2024. Tax changes happen constantly, so prior to using this information, you should consult with your tax professional. And towards the end of this presentation, I'm going to address the election and what could happen in the next year or so towards the future. And that's one of the reasons why I added the future part to this presentation. This presentation does not establish a professional or confidential relationship between you, myself, or Traders Accounting. And Traders Accounting is not a law firm or a CPA firm, so the information provided here should not be construed as legal or tax advice. Now, before we get going, let's get a little bit of contact information here for Traders Accounting. Our website, www.tradersaccounting.com/TGO24. That is a special link for all of you here today, that if you go to there, you can actually download a free ebook. It's downloaded right to your computer. It talks about some of the stuff that I'm going to be going through today, as well as some other things. And we want to make sure that you have that. It's free of charge, no obligation whatsoever. However, if you do want to book an appointment with us, we do, just kind of briefly, we do offer tax preparation, consulting. We have a bookkeeping service for traders and their businesses. And we'd be more than willing to talk to you to see how we can help you out. And then our phone number is 800-938-9513. And you can also email us at learn@tradersaccounting.com. All right, I usually start my presentations off with a little bit of basic information. And you'll notice in the upper right-hand corner, I've got Business 101. So let's kind of pretend we're back in college for a little bit. And we're going to talk about some really basic information. The reason I want to go through the basics here is because Publication 550 with the IRS goes to this level. Now, let me talk about that for a second. Publication 550 is our go-to manual from the IRS. It talks about all kinds of investing. And if you'd like to read it, great, knock yourself out. You can go to the IRS website, and in the search bar in the upper right, you could type in Publication 550, and it will bring up either an HTML version, or you can download a PDF version of the current publication. And that publication talks about every type of investing. It talks about interest, dividends, OIDs. It talks about bonds. It talks about stocks, options, futures, commodities. I mean, the whole gamut is there. And so if you're wanting information about how the IRS handles certain things or looks at certain things, that's the publication to get. So anyway, back to what I was saying, Publication 550 does refer to trading as a business. And there's really two types of people in the trading industry. There's those who are investors, and I heard Fausto referring to investors. You just buy something and you sit on it for a while, and that's fine if that's what you want to do. And then there's the active traders who are trading daily or even weekly, and they've got a lot more going on. Well, if you've got a lot going on, you're doing a lot of trading, then it really helps to be thinking of your trading as a business. And I realize a lot of people get into trading and they don't think about it from the business aspects. They just want to make some money. The issue with that is I have watched people over the years where, not just in trading, but in other businesses, that they get so focused on making the money, they don't even think about their expenses and what's going out. And so my first point here is you really need to be concerned about cash flow. Most of you either have or are developing your trading strategy, and that's great. You need to think about the cash coming in, making the money from those gains. But you also have to look at the other side. There's two sides to a business equation, and one is the revenue coming in or the income, but you also have to think about the expenses going out. And just like trading, you have to have a plan. You really need to have a plan for taxes and for other expenses that are going out. And we're going to help with some of that today, to go through that and give you some ideas that might be suitable for you. But again, you want to talk to a tax professional to see if everything is right for you. Now, so you want to be concerned about cash flow, be concerned about it coming in, but also be concerned about it going out. And you want to make financial decisions based on your business needs and not on the tax code. Here's where I find a lot of traders slipping up. And they start looking at the taxes and they say, oh, now I'm going to change my behavior. I can't tell you how many times I have seen a trader look at their taxes and say, hey, I owe a lot of money. Now I'm going to change my strategy so I don't have to owe so much money. Well, the problem is when you change your strategy, start letting the tax code affect those decisions, you're going to start losing money. You've destroyed your strategy. I've seen other people basically say, hey, I've made a lot of money. I'm not going to trade anymore. Well, that again, they're making a decision. It's like saying, you know, I'm going to give up $1,000 to save $300. No, paying taxes is actually really good. We have it in our mindset that paying taxes is bad, so we have to minimize that, even to the point of losing money as a result of it. And don't fall into that trap. If you've got a successful trading strategy, you keep at it. The taxes are a sign that you're making money. Now, do we want to pay more than what we have to? Absolutely not. And you want to be able to maybe deduct expenses and take advantage of the code in as much as you can. But don't make your decisions based on the tax code. And that includes, like, at the end of the year, people start panicking in December. They say, well, I have to go out and buy this asset. I have to buy maybe a vehicle, or I've got to buy something to knock down my taxes. Well, that becomes problematic as well, because I have watched business owners say, I need this piece of equipment to knock down my taxes, but they're never going to use the equipment. It never pays for itself. So whatever you get for your business, whether you're buying something or if it's an expense out for data feeds or for software or whatever it is, your expense has to be able to pay for itself. It's got to bring in or help you bring in additional revenue. So don't base your decision needs on the tax code. Base it on what you need as far as making revenue. Now, the purpose of this presentation is actually to help everybody be aware of all their tax and protection options here. So we're actually going to go through 3 different topics during this presentation. The first topic we're going to talk about is trader tax status. And this applies to all traders, and the benefit goes back to that cash flow, as we can use the tax code to help write off some of those expenses and save some money that way. So that's number 1. We'll talk about that here in a couple minutes. Second of all, we're going to talk about the mark-to-market election, and this is only for stock and options traders. We don't recommend it for futures or commodities traders, because you end up really messing yourself over. But for stock and options traders, the mark-to-market election can really be helpful, save some money, and really set you up in a nice place for taxes. Finally, we are going to look at entities. I get the question all the time in consulting is, can setting up an LLC help me save taxes? Well, we're going to answer that today. We're going to cover that. And actually, all three of these intertwine with each other. So they can all actually benefit you. They can also hurt you if you're not in the right place. So let's start with trader tax status. It's probably the most important of the three. Trader tax status is a choice. This is mentioned in publication 550. And this is where it starts getting into the business aspect of things, because in publication 550, it basically implies that if you're going to be deducting expenses for trading, you have to treat it like a business. And we'll cover that more here, but this is a tax choice. This is one of those things that you can still do for 2024. And we'll talk about the criteria here. And what it does, if you meet the criteria, you can actually deduct your trading expenses off your return. So how nice would it be to deduct maybe margin interest, or maybe to deduct the cost for your education or your data feeds or something like that. And even home office deduction, there's things like that that we can deduct. That would be nice. And some people can really have racked up the expenses and should be deducting them. Now, there are some caveats to that, and we'll talk about those as we go along. Now, the problem here is publication 550 does not give good criteria. It basically says you have to rely on the income from trading in some capacity, and you have to be actively trading. So to establish more secure criteria for adopting trader tax status, we go to court cases. And there's actually 3 court cases that apply here. And the first criteria that comes out of a court case is you should be making 720 trades per year. Now, for some of our clients, that's nothing. They make that, some of them in a week, some of them in a month, but by a year, that's fine, not a problem. There are other people who do more swing trading, things like that, and they have a tough time getting that. But that's the criteria that came out of court case. So you want to meet that one at least. The second criteria is there's trading in over 75% of the trading days per year. So you have to be actively trading, at least place one trade in 75% of the trading days. Now, why is that the case? Well, remember, publication 550 goes back and says you have to be treating this like a business. And if you're a business owner, let's forget about trading for a second, but another business owner, let's say a restaurant or a mechanic shop or something like that, you're not going to be gone more than a quarter of the year. You're going to be actively pursuing your business. Well, that's what the IRS wants to see here. They want you actively involved in that business for 3/4 of the year. And so that came out of a court case. So that's the second criteria. Now, if we'll get to the third one here in a second, but if you're thinking about proving these to the IRS, these two are actually fairly easy, because the 720 trades a year, all your trades are already printed on your monthly schedule or your monthly statements and your 1099 or your yearly statement at the end of the year. So if IRS has a question, you just hand them the statements, say, here, count them up. The 75% of the trading days, that's also on your monthly statements, because on your monthly statements, it not only shows that trade, but it shows the day and date in which it was traded. And so you can go back and say, hey, here's my statements again. You can figure out how many days of the year that I actually traded. So those are fairly easy to justify. The third one's not quite as easy. There have to be over 500 hours in trading, research, and education. Not each of them, but all combined. Altogether, there have to be 500 hours. Now, trading, that's easy. We understand that. You're going in research. We know, you're scoping out different investments and things and securities and what to trade there. Fine. But what about education? Well, you're watching education right now. This is part of your education. If you watched Fausto in the last segment, that's a lot of that's your education right there. So what we suggest, there is no way to prove this per se, because it's not registered on your stock statements or your security statements. So what we recommend is you keep some type of a logbook. It can be a written logbook, it could be something in an Excel spreadsheet or some other method. It doesn't really matter. You can write it on the wall if you want, but just as long as if the IRS ever comes in to question the trading, you can pull this out and say, hey, I kept a logbook and here's what I did. And that should add up to 500 hours in a year. Now, these three criteria all need to be met, all three of them, because we don't know what would happen if you don't meet one of them. There's a huge gray area here, because we know from court cases that if you meet these three criteria, you're safe with trader tax status. But if you fail on one of them, we don't know what would happen, and it would require a tax court to make that determination. So just follow these three guidelines to be safe. Most of you probably won't have a problem with these three, and we'll leave it at that. Now, the amount of savings from deducting your expenses depends upon your current tax bracket. I talk to people a lot of times and say, hey, what about trading? Can I change my tax bracket because of trading and stuff like that? No, everything goes right back to your tax bracket on your 1040, because all of this combines into one taxable income number that determines your tax bracket. So your tax savings is going to depend on your tax bracket. If you're in the 37% tax bracket, you're going to save 37 cents for every dollar you deduct. If you're only in the 15% tax bracket, you're only going to save 15% or 15 cents for every dollar you deduct. It's still money that you get back. So, think about that and contemplate doing this, because if you meet the criteria, I wholeheartedly suggest that you deduct those trading expenses and be able to prove it, but do it. Now, as with anything with the IRS, there's a warning here, and this is a big, big warning. So you got to be careful about stepping into this one. There are problems that happen with TTS, particularly, well, especially if you deduct expenses on your personal return. And here's the first point. A person who deducts their trading expenses on their personal return must use the Schedule C. Now, Schedule C is a small business return. For people who just have startup businesses, they may just have a book publishing business or a writing business or a mechanic shop or small consulting firm or something like that. And all that goes on your Schedule C. Traders are a little bit different, because the gains that they have are still capital gains or could be ordinary gains. We'll talk about that in a little bit. But those are gains, and they go on a different form. So the only thing a trader puts on a Schedule C are their expenses. Now, the reason this is problematic is the following. One, your audit risk is increased. By using the Schedule C to deduct your expenses, you increase dramatically your audit risk. Now, I'm not saying definitely that you're going to get audited, but I am saying that you increase the chance, because the number one most targeted thing of individual or by audits is the Schedule C. So you dramatically increase your audit risk. Number two, the home office deduction may not be attainable. When you're trading and you're deducting expenses on Schedule C, there is the potential for a home office deduction. But on a Schedule C, there's limitations there, and it could be totally eliminated in some cases. It's very tricky to be able to actually take the home office deduction for a trader. And so that becomes problematic. Now, hang on to that thought, because I'm going to come back to it here in a little while. Number 3, there may be no asset protection. LLCs are great. One of the reasons they're great is because they provide assets protection. If you put an asset, whether it's your trading portfolio or some other asset, into an LLC, then that's protected from lawsuits, at least from outside. And traders aren't sued, so that you're not going to get anything from inside if you're trading inside the LLC. So the LLC gives it asset protection. So even on the personal level, if you were to get sued, somebody gets on your property and gets hurt, and the insurance doesn't take care of it all, and they start to sue you personally. If your trading assets are still held personally, then those can be forfeited. However, if they're in an LLC, that's a whole nother story. Now, it depends upon the state you're in, but there is some protection there as well. Now, let me add here, that's the only thing a single member LLC is good for a trader. All of these other things still apply to a single member LLC. You still have audit risk increase, because with a single member LLC, you still put those expenses back on Schedule C. And the same thing with the home office deduction. So you still have all those problems. So single member LLCs are not a good idea for a trader unless you plan on electing S Corp status right away. If you don't understand what I'm talking about, we'll talk about that in a little bit, but it's really not that big of a deal at the moment. So single member LLCs, and then for just trading as an individual on Schedule C, you have these problems. And there are some more problems. One, it's difficult to justify having a W-2 job and being an active trader. The IRS, for whatever reason, does not think that a person can work a full-time W-2 job and be an active trader at the same time. Now, we've all worked at least 2 jobs at some point in our life, sometimes 3 or 4, and we got by, and that happens. But for whatever reason, the IRS has a problem with this, and so they can, on your personal return, if they see a W-2 and they see you're a professional trader or a full-time trader, that can trip off some things. So we'll just leave it at that. Now, that's trader tax status, and that allows you to deduct expenses on your tax return. So let me just kind of recap here. If you're deducting expenses, that means you get money back from the IRS and probably the state as well, if you got a state tax return. So that's cool. We're paying attention to that cash flow, so we don't have as many taxes going out. Now I want to talk to stock and options traders, and we're going to get into the mark-to-market election. Now, this is a very special thing for traders. And the reason I put it here in the presentation is because you have to meet the trader tax status requirements from the last section in order to qualify for mark-to-market election on a personal basis. Now, that may not be true on a business basis, such as a partnership or as in a corporation or an S corporation. But on a personal basis, it is definitely true that you have to meet those 3 criteria: the 720 trades a year, the 75% of the trading days, and then 500 hours in trading, research, and education. You got to have that before you get to the mark-to-market election. Now, this is an election with the IRS. Now, how is this different than that? Well, the trader tax status was a choice. You can choose to do that this year, and you can, when you go to get your return done, you can choose to do it there, or you can choose not to do it, whatever. The mark-to-market election is actually, you have to file with the IRS for that one. And it has to be filed at the beginning of the year. Now, any person that meets the trader tax status requirements, or any business entity, such as partnerships, S corporations, can make the election as well. So this kind of a broad election available to a lot of different entities. Now, what this does, most of you as traders in stocks and options are familiar with wash sales. Now, I'm going to briefly state what wash sales are, but wash sales are deferred losses. If, for example, you have a stock, let's call it XYZ stock, I don't want to use an actual symbol because it doesn't want to look like I'm recommending anything, but XYZ stock, or option and you sell it at a loss, let's say your loss is $2,000, and then you buy it back within 30 days. Now, day traders buy back stuff all the time within sometimes minutes. Well, if you buy it back within that 30 days, that loss of $2,000 now shifts in time to that second transaction. So what it looks like on the first transaction is you broke even, and the loss gets assigned to the second transaction. Well, without going into much more detail, what just happened is that moved in time. And if you have enough of those, that loss keeps moving further and further back in the year, and eventually it becomes a deferred loss because it crosses over December 31st. And so what can happen is that $2,000 that we lost on the first transaction, if it keeps moving and goes over December 31st, I'm going to end up paying taxes on that, hoping to get that loss back next year. So it's really kind of a strange system. It's very confusing. And quite frankly, it's very disingenuous for investors, but it is what it is. We just kind of have to deal with it. Mark to market allows you to get around that. You pay on what you actually earn. Now, mark to market is more account holistic. In other words, it doesn't look at the individual transactions. It could care less if you made a loss on this transaction, a gain on this transaction, or what it was. It doesn't even care about the transactions. Generally, with mark to market, you look at the value of your portfolio or your account at the beginning of the year. You look at the account at the balance at the end of the year. And if it goes up, you made a profit, you pay tax on that. If it goes down, you made a loss and you write that off. Now, all that has to be adjusted for like contributions and distributions, interest, dividends, stuff like that. We're not going to get into that, but the idea is you're paying taxes on what you actually earned or lost. And it's a pure way of doing it. It's actually very, very cost effective. And usually in the first year, at least, you end up actually having less in capital gains or more in a loss than what you normally did. Now, I have to correct that. With mark to market, they become ordinary gains and ordinary losses. So that's when I want to correct that, which makes a huge difference in some cases. So the idea is your tax return is going to reflect what you actually did, rather than all this deferred loss stuff going on. Another big thing that happens with the mark-to-market election is that eliminates the $3,000 loss limitation on losses incurred in a single year. Let's take, for example, we had a portfolio, and let's say we lost $20,000 in that portfolio. Under traditional accounting, the way things normally operate, that would be a $20,000 capital loss without mark to market, and we would only be able to write $3,000 off, and the remaining $17,000 moves into next year to offset future capital gains or take another $3,000. With mark to market, instead of capital losses, you now have ordinary losses, which means you can take the full $20,000 on your tax return and write it off. Now, imagine what would happen on your return if you could do that. I've done tax returns this year where I've written off for clients $100,000, $200,000. I've written off as much as $500,000 in a year for a client. And it reduces their taxable income to zero. And when that happens, the rest of the loss goes to next year, and you can write it off against future income. It's really a nice way of doing things so that you're saving that money on taxes now. You may have to pay it back later in a few years, but you're saving it now and you can reinvest that money. Now, something here, this is an election that has to be made at the beginning of a year. So if you want to do this personally, if you meet the trader tax status requirements, if you want to do this personally, you actually have to make this election with the IRS between January 1st and April 15th. If you're doing this for a pass-through entity like a partnership or an S corporation, then you have to do it between January 1st and March 15th. So it's got to be done by the time the tax return is due, and you can't get an extension for this. So at the beginning of a year, that's the time to do it. But there's one exception to that. If you start a brand new entity, for example, you start an LLC partnership or you start an LLC S corp, the day that thing is formed, you can make the S corp or not the S corp election, but you can make the mark-to-market election, and that will go forward. There's special rules for new entities, so that might be something to consider. That if even this year, if you wanted to get under mark-to-market, there's still time this year to get like a multi-member LLC set up and start make that mark-to-market election, get a new brokerage account set up, and you could just have mark-to-market for the rest of this year. So that is something that is possible still for this year, but I'm advising most clients to start getting set up for next year on this one. Now, as I mentioned with trader tax status, mark-to-market has some warnings as well. And here I'm going to give you some of these warnings because we have run into these and we've warned clients about these all the time. And sometimes they don't listen and they end up with problems. The number one thing with mark-to-market you don't want to do is you don't want to hold long-term securities under mark-to-market. And this may not be obvious yet, but as we were talking about a little bit ago, mark-to-market values the account. It doesn't matter what's in it. And so it's going to tax or count as a gain any unrealized gains, or it's going to count unrealized losses as well. So what may happen is you may end up paying tax on something that you have an unrealized gain on and paying tax on it, and you don't want to do that. So what we advise our clients to do, if you've got long-term securities, keep them separate from your short-term trading, because you want short-term trading under mark-to-market, but you don't want that long-term stuff under mark-to-market, because then you end up paying tax on that and you lose the long-term capital gains rate, which caps out at 20%. So you don't want to do that. All right, second thing. It is possible under mark-to-market in some years to have a larger mark-to-market gain than what was reported on your 1099-B. Now, the 1099-B is what shows your gains, capital gains and losses. And if you go back and look at it, and you'll be getting those by the end of January here in about 2.5 months, that shows what the capital gains is. Now, the 1099-B, that is only recorded on what you actually sold during the year. You bought, sold, done. That's only what the 1099-B shows. But remember, mark-to-market talks about the whole portfolio, the whole account. And so once in a while, you know, like in the first year, if you got mark-to-market, you're not going to have to worry about those wash sales anymore. Now, they still show up on the 1099-B. The brokers don't change their reporting, even though they say they do, but they don't. So those wash sales still show up as deferred losses, but you don't have to worry about them if you got mark-to-market. Now, eventually those wash sales catch up. And so once in a while, under mark-to-market, you'll have a year where you may have a gain that's higher than what shows on the 1099-B. It does happen. Doesn't happen a lot, but it does happen because everything ultimately has to catch up. So the idea here is we are trying to pay tax on what we actually made now, and then we'll, if we have to pay tax later, a little bit later, that's fine. Lastly, if you make the mark-to-market election personally, and this is going back to that Schedule C again, whether you do it personally, and you don't meet the trader tax status qualifications, and I would also submit this applies to a single member LLC as well. If you ever don't meet those mark-to-market or those trader tax status qualifications, those 3 qualifications, you can lose mark-to-market. And I had a few people this year where for whatever reason, sickness or traveling or whatever, they weren't able to meet the trader tax status requirements. So they not only lost the ability to deduct their expenses, they lost their mark-to-market election as well. So if we are aware of these things, though, and we plan for it, then we can actually work around it and find some ways of doing things. And one of the ways of working around some of this stuff, all the problems with trader tax status, the problems with mark-to-market, and actually getting a good solid basis on which to trade is entities. By forming an entity, we can actually help ourselves considerably. Now, let me kind of cover this. There's several types of entities. There's sole proprietorships. There's a single member LLC, a general partnership, limited partnership, multi-member LLC, S corporation, LLC, S corporation, C corporation, LLC, S corp, or C corporation. That's a lot. We're not going to cover all these because I'm going to simplify this, because most of these aren't necessary, and there's certain paths that are beneficial if you go down. So first of all, I've already mentioned this, but the sole proprietorship, doing this on your own, just as an individual on your personal return using that Schedule C, and as a single member LLC, which also uses that Schedule C, they don't do much for a trader. Matter of fact, they don't do anything. The single member LLC will give you some asset protection, but other than that, it puts everything on those expenses on the Schedule C and sets you up for an audit. It also limits a home office deduction and creates a lot of other problems there. So we don't recommend those. We recommend actually that we set up an entity where it gets the trading off your personal tax return. Now, it could be a pass-through entity where it passes through the entity and comes back to your personal return, but it does so on a Schedule E rather than Schedule C. And that makes everything okay with the IRS. It alleviates a whole bunch of problems. So the objective here is to get rid of that Schedule C, really the whole problem. Now, the type of entity that's right for you depends upon your situation. And this is another area where you're going to have to seek some professional advice. Some of our clients, and well, this one doesn't happen often. There have been a couple of clients in this last year that I've had to recommend C Corps for. Usually that involves some type of foreign investor or something like that, but we rarely recommend C Corps. Now, if you want to find out why, book a consultation visit with me and we can talk about it, but C Corps we don't. We generally lean towards multi-member LLC or LLC partnerships and LLC S Corps. Now, again, the LLC creates the legal shield, if you will, around your assets. Now, by far above that, we recommend the LLC partnership, not so much the LLC S corporation. And the reason for the S corporation is because with an S corporation, owners are required to pay themselves a salary, which means you need a payroll company and you need to file quarterly payroll reports. And the things get a hassle with W-2s and things like that. Now, there's reasons for doing that ultimately down the road when you're making a good amount of money. But at the beginning, I don't really think it's a good idea to set up an S Corp. The multi-member LLC is probably the best one, the LLC partnership. And if you have a spouse, then you've already got your partner right there. Other people choose as a partner another family member. The family member owns 1%. Well, but the person who's trading still owns 99% of it. We can set up a trust, or an irrevocable trust that could be the 1% owner and you still own 99% of it. If you own another company, like another LLC or S Corp or a partnership or whatever, that can be a partner as well. There's lots of ways to do the partnership, even if you don't know anybody anywhere. So it's possible to get done, and we can tell you how. But let me talk about why we recommend a multi-member LLC or an LLC partnership, because it's important to understand why this is an important trade. And this is where a lot of our clients go. Not every one of them. I mean, there are a few people we would have said, go straight to the S Corp and you're fine. Or like I mentioned a little bit ago, the C Corp. But the multi-member LLC is by far the one that we mentioned most. Now, before we get into the pros, I'm going to tell you what the cons are, because that's the type of person I am. I want to let you know what the problems are you may have to face. And yes, you have a yearly LLC fee in most states. Now, some states, you pay for the LLC setup and then you don't have a fee after that. But a lot of states still, you pay to set it up, and then every year you have to re-register the LLC. In some cases, like in South Carolina, it's $25 a year. It's minimal. Other cases, like California, it's $800 a year. So it depends on where you are and what's going on. You also have a tax prep fee, because with a multi-member LLC or an LLC partnership, and this is true for S Corp. By the way, this is also true for the S Corp. You have to file a separate return. Now, these businesses, the partnership and the S Corp, don't pay income taxes because everything passes back through to your personal return, where tax is paid on your personal return. But you still have to file a return. And so you do have a tax prep fee. That could be $600, $700, $800, depending upon where you go to do that. And you could have increased broker fees, because once you start registering a business account with a broker, they see, okay, well, this is a business, they can afford to pay more, and they give you increased fees. Now, some people get around that by keeping their personal account open and then using some of the free stuff on the personal side and then trading under the LLC brokerage account. There's ways to do it, but you do need to be aware of it. Now, this right here, some of you are saying, well, I want those increased fees. I don't want to have to pay that stuff. Well, there's ways to do this and actually make it pay for itself. And I'm going to actually go through that. So here's the pros. Here's what you get out of it. First of all, you get asset protection. And again, this is true for an S Corp as well as an LLC partnership. Those assets, those trading assets, are protected. So if something happens on the outside of the LLC, it's protected from anything else that could happen. Again, subject to state law. Number two, most people don't realize this, but if you set up the LLC first, whether single member LLC or multi-member LLC, and then you go to S Corp or partnership, you can change how you're going to be taxed. LLCs have this unique ability with the IRS to change how they're going to be taxed. So like a multi-member LLC, the default is a partnership. But later on, is if you want to be taxed as an S Corp, you can just file a piece of paper with the IRS and say, hey, we want to change our taxing to an S Corp. Done, over with. You can also go to a C corporation if you want to. And later on, a few years later on, you can change back. There's nothing that says you have to stay. And this is very advantageous to have an LLC, because you don't know how the tax laws are going to be written in the next few years. And so if you have an LLC, you do have the flexibility to change the taxation. Number three, reduction in IRS scrutiny. Remember I mentioned if you do this on your personal return on Schedule C, the IRS audit rate is very high, fairly high. Not guaranteed, but it is fairly high. If you put this into a partnership or a S corporation, the audit rate drops dramatically. The IRS generally doesn't audit partnerships or S corps unless there's something super outstandingly wrong on those returns. So you are really reducing the probability the IRS is going to look at your trading and the return for trading. So that's a benefit right there. Fourthly, the home office deduction, which gets limited on that Schedule C on your personal return, opens wide up on these entities' return. And so now what you have is that, excuse me, sorry about that. What you have is now have a home office deduction that you can fully take care of. And most of our clients actually get at least $1,200 a year just in home office deduction. Now think about that stuff you're already paying for. We can take a percentage of that and write it off as a home office deduction. So that's one of the beauties of here. I'm going to come back to that here in a little bit. Number five, an LLC or a multi-member LLC or S Corp takes care of the W-2 trading issue. Remember I mentioned a little bit ago that if you have a W-2 job and you're a full-time trader, the IRS has a conflict with that. They don't think you can do both at the same time. Well, now if you get the trading off into a partnership or an S Corp, now the trading's off there. You've got your W-2 on your personal return. It looks now like to the IRS that you're working a full-time job and you're just investing in this other business, partnership or S Corp. And it solves that problem. They don't seem to have nearly as much problem with that. Also solves the mark-to-market long-term, short-term dilemma. Now, the reason I bring this in, I mentioned a little bit ago that you never want long-term holdings, your long-term securities underneath mark-to-market, because then you end up paying tax on the appreciation that you haven't even realized yet, and you also lose the 20% long-term capital gains rate. Well, when you have an entity like this, you could keep long-term trading, your stuff that you got for investing, keep that on the personal side, and do all the short-term stuff underneath the LLC. And it keeps the long-term stuff away from the mark-to-market election, so that the IRS doesn't have a problem with getting all that mixed up. Now, the next one makes it all worthwhile, I think, because the tax savings can pay for the LLC. Remember I mentioned the home office deduction a little bit ago, that you'll get at least, most people on average have $1,200 a year that they can write off or more. That refund alone, just from picking that deduction up alone, can get you enough of a refund to pay for your yearly LLC fee, your tax prep fee, and your increased broker fees. Let's take a look. So suppose you've already got yearly trading expenses. Let's just say the home office deduction. And the refund you get could pay for the LLC. And here's what happens. Let me give you an example. Assume a person lives in Illinois. Now, the yearly LLC fee in Illinois is $75 a year. And let's assume the tax prep fee is $600 per year. I don't know. I'm just pulling that out of the year. So let's say they've got $675 in these extra expenses. Now, assume the person is also in the 35% federal tax bracket, and Illinois has a flat tax rate of 4.95%. So it's a total of 39.95%. Under those conditions, you've got $675 in extra expenses that you pick up. However, if this person has at least $1,015 in expenses, remember I said the home office deduction usually is $1,200 or more. Just by deducting that, you're going to get the government to pay for your LLC, the LLC fees, the LLC tax prep. And so that takes care of itself. So the LLC can actually pay for itself. You get your reduced IRS scrutiny, you get these deductions that you pick up, and it pays for itself to have this thing sitting there for you. Now, so what we've talked about is we've talked about trader tax status, which if you meet the qualifications and you can deduct expenses on your tax return. We've talked about the mark-to-market election, where for stock and options traders, you can get around the wash sales. You can save some tax money there, and then also get around the $3,000 loss limitation, so you get to take the loss now and get refunds now rather than having to wait. And then, of course, LLCs or entities can help you save money. Now, you don't change tax brackets at all. None of this changes your tax brackets, but allows you to use expenses, and it allows you to deduct things that you normally couldn't deduct as on your individual return. So that's how all of this stuff is really working. So let's summarize what we've talked about here. First of all, trader tax status allows you to deduct those trading expenses if you qualify. So remember the three criteria: you have to have 720 trades per year. You have to be trading in at least 75% of the trading days per year, and you should have 500 hours in trading, research, and education. If you got that, you can deduct your expenses going through 2024. If you want to go back and amend 2023 or 2022, you can do that as well. Now, we're getting past the 3-year statute of limitations, so you may not be able to amend 2021, but you can do that if you qualify. Mark-to-market allows stocks and options traders to get around the wash sales and be able to deduct or write off any losses whatsoever they are. And entities can provide your asset protection. They decrease the audit scrutiny by the IRS, and it could be free. You could actually make money on it, quite frankly. So those are the 3 things I wanted to talk about. Now you're aware of the options that you've got, but you do need to talk with a professional tax advisor to find out which path is right for you. Now, let me provide things to watch out for, and this is kind of where we get into the future as well. First of all, if you're trading in a prop firm, that changes everything right there. Prop firm traders are actually independent contractors for the firm for which they're trading, and they're not getting gains and losses. So that changes your tax return. You're now subject to self-employment tax. It really changes a lot of stuff. So just be careful. I know a lot of people are attracted to that. It's an easy way to make money. Just be careful, your taxes do go up in that case. Some options like SPX are treated like futures contracts. There's about 10 of these. Well, options, I meant ETFs, but ETFs like SPX, VIX is another one. There's about 10 of them. They're not traded in New York. They're actually traded in Chicago on the Chicago Mercantile Exchange. And because of that, they are treated like futures contracts, which is a whole different tax structure, and that mark to market doesn't apply to them. Now, the reason I'm mentioning this is because every year when we do tax returns, I come across a client who has made the mark to market election. They think they're going to be able to write off all the losses, and then they find out they've been trading SPX all year, which is treated like a futures contract and really doesn't fall under mark to market. So that is a pitfall here, VIX and some of the others as well. Here's a problem that we have seen starting to grow a little bit. Trading other people's money or even giving them advice can create major problems. A lot of people say, well, I'm good at trading, I've set this up, and now my family members want to trade their money, or I have friends who want me to trade their money. And the simple response from us is don't do it. Because once you start trading other people's money, you have to be licensed with the SEC. And so you have SEC regulations you can run into, you've got other federal regulations you can run into, and you can run into state regulations that can be a problem. And there have been issues where people have gotten into trouble for doing this because they are not licensed brokers. You can't even give somebody advice. If you remember back, I mentioned XYZ stock a little while ago, because I don't think there's an XYZ stock. I mentioned a little while ago because I have to be careful, because I even mentioned some stock that's out there that's currently popularly traded or something. It could be foreseen as giving them advice. You can't tell somebody, hey, I think you need to invest in this or sell this thing short or do whatever. And you'll notice that even Fausto and the others, they're not recommending specific stocks for you. They are looking at methods for you, but there's reasons that they are not recommending specific stocks. And that's because they get into an advisory capacity, and there has to be licensing for that. Okay, the last one I want to talk about is something that's all on our minds, particularly this week, and it's the election. So how is that going to affect everything? Well, right now, the stuff for 2024, the tax code is set. They're not going to change that, and they can't, because the new Congress doesn't take their seats until January. And the old Congress really isn't, it's a lame duck session. It's not going to do anything anyway. But for 2025, you may see some major changes in tax law. And a lot depends. Right now, obviously, the Republicans won the presidency, they won the Senate. If they win the House as well, I see you're going to probably see some major tax law changes coming down the pike, because for those of you who don't know it, the Tax Jobs and Recovery Act that was passed back in 2017 is starting to expire. That was not permanent. And so things like bonus depreciation, that's expiring. That already started expiring in 2023. The tax rates go back up to what they were. Standard deductions, if that expires, goes down significantly. There's a lot of other things here that happen should that bill from 2017 expire. So what I see, if the Republicans control the entire government, you're going to see them go and make that stuff permanent or make it better, give more tax breaks, things like that. I know President Trump has talked about a 15% tax rate for corporations that manufacture in the United States, and no tax on tips or caregivers, things like that. So we'll have to see how all that shakes out. If the Democrats win the House, then you may not see as much tax change going on, because they're going to be in control, and they control the revenue and the purse strings and all like that. So it'll be divided government, and you'll see some tension there. You may see some tax legislation, but not quite as much as what is if the Republicans control the entire government. All right, let me go back to this one. This was a slide I showed at the beginning here. Our contact information. And our website is www.tradersaccounting./TGO24. And feel free to copy that, write it down somewhere, and you can go there and download our free ebook. And you can have that for free, no obligations. We don't even know who you are, quite frankly. And so you avail yourself of that. It's kind of a written thing of what I've talked about, but it also talks about some other things as well. Our phone, 800-938-9513. If you want to book a consultation, if you want to set up if you want us to do your tax returns, if you want us to help you set up the LLC, we can do that as well. Now, I will tell you that we have several different consultants. So if you call and you ask for me, you may not get a hold of me. You may get somebody else. I will also tell you that our business manager, Raven Johnson, she will do a free 30-minute consult with you. It's not with me, it's with her to talk about what your business needs are. And so if you need a multi-member LLC, or if you need an S corporation or whatever, she will talk to you about that for 30 minutes to try to figure out what is best suited for you so that we can move forward. And of course, our email is at learn@tradersaccounting.com. So I'm going to leave this up for a little bit, and so that anybody can write that down. And then I'm going to kind of move towards questions, if there's any questions, and have Wiz come back in, and maybe he can kind of help guide through this a little bit, because for whatever reason, I'm not showing these questions very well.
That's all right. Let me take a look at some of. Hang on. Let me pull it over here. Bruce is asking, would Wiz's morning trade briefs count for the education? So I guess he's asking, does their Top Gun Options membership count?
Yeah, absolutely. Anytime you listen to something for how to trade or a brief, yeah, that's going to count for your education. If you go to YouTube and watch a video there, that will count for your education. It's really not difficult to get that time together.
Oh, that's awesome. Okay, perfect. Well, that's good to know. And then Ken said, okay, no, he already answered it. No, I think we're good. I think we're good, Jerry. I think you knocked it out of the ballpark, my friend.
All right, well, fantastic.
Awesome, my brother. All right, ladies and gentlemen, let's go ahead and give Jerry Allison a virtual golf clap. Thank you for coming, my brother. Always a great presentation. Like I say, folks, they're the 500-pound heads. People always ask me about setting up an LLC or trading through this, and I point them right in the Traders Accounting direction. And Jerry, now that they have your individual contact info, hopefully they reach out to you. So thank you, my brother, for coming. I appreciate it.
All right, thanks, Wiz. My pleasure as always.
You bet. All right, have a great day, man. Okay,
you
folks.
Too.
Yeah, you bet. Here we go. Let's go ahead and I'll grab the control back here and running a little bit of schedule here. I'm doing Marty Feldman, one eyeball on my presentation here, one eyeball on a bear call spread that I just closed for a 65% profit in 3 hours on Jerome Powell talking right now. So they cut 25 basis points, which was as expected, right? 25 is built in, and now, and the decision was unanimous, right? I mean, obviously it was a 98% probability that they were going to cut 25 points, and they did. So now he's kind of meandering through his press conference, and shockingly, he's doing his standard porridge speech, right? You know, not too hot, not too cold, just kind of trying to thread the needle. And of course, the the reporters are trying to pin him down on political questions, and that guy, this ain't his first rodeo, right? So Jerome Powell is shucking and jiving with the best of them. But I'll tell you what, I think I see Ala in here a little early. I love when people listen to the brief. We said, hey, if you can show up 15 minutes early, that would be great. So let me, I'm going to introduce Ala so I can get back, listen to the Fed, and I'll bring you guys up to speed here in a little bit after Ala gets done. So let me go ahead and make her a presenter. And then
Thank you so much. Can you hear me?
Yeah. We got you loud and clear. Ala, thanks for coming.
Amazing. Thank you so much for having me.
You got it. So, folks, Ala's a close friend of Top Gun Options. We've been strategic partners for a while. She's a visionary behind the revolutionary Alpha Fibonacci trading system, and it's really known around the globe for its simplicity and ultimate precision. And she's got a wealth of experience. 2004, she started pitching into this fight, and she continues developing her proprietary strategies a couple decades later. She refused to work for financial institutions and decided to do proprietary Alpha Fibonacci trading system on her own since 2011. FibInstitute.com. And folks, not aside from being an incredible trader and investor and instructor, she's a classical pianist. She holds an extensive academic background with Johns Hopkins Psychiatry, and I'd love to talk to her offline about our psychedelic assisted therapy we do with our veterans. So Al and I definitely have to have a cup of coffee together and talked about that. I love the Fibonacci stuff, and when I think Fibonacci, I think Ala Peters, and she's just absolutely, like I said, a 500-pound head in the space. So Ala, I'm gonna get out of your way. The floor is yours, ma'am. Yeah, you have an hour if you want to take it. If not, just whenever you're good to go, I'll take it back from you.
Thank you so much. Could you please confirm that you can see my monitor?
You got it. We see your beautiful smiling face, and it says webinar, how Alpha Fibonacci can improve your trading.
Perfect, fantastic and amazing. I'm trying to see the questions, and we're one moment.
Yeah, yes. I'll try and somebody was having a problem seeing those before. Yeah. If they see any, I'll either jump up or we can cover them at the end. So don't worry about it. I'll hook you up with the questions in case you don't see them.
Okay, because I would love to share links and help with us.
Absolutely.
Thank you so much. Thank you. I will be recording as well. Traders, good morning. It is incredible to be with you. It's actually 50 minutes after FOMC on November 7th, 2024. It's my joy and honor to present to you how Alpha Fibonacci can improve your trading. And as always, please remember, every single thing you witness in this webinar is to empower and educate you. Nothing constitutes a financial advice. All software and systems shown without any guarantees, and no student had ever been paid for testimonial. I hope and pray you recognize risks involved in trading, future stocks, forex, and options. And here we go. Let's start. In this webinar, we'll be covering how Alpha Fibonacci system identifies precise entry stops and targets across all instruments, all time frames, all platforms. I will also introduce you to software to day trade futures on NinjaTrader 8. You will witness how you can buy and sell institutional trend reversals and inceptions in advance with Alpha Fibonacci system. And most importantly, you will see how you can remove pain from trading with precise Alpha Fibonacci system traded globally since 2011. And you will witness a very final space for a trading bootcamp I launched yesterday, which is being recorded, which I just finished teaching of for the previous 6 hours. You have opportunity to grab a final space with savings up to $10,000 if you will choose an option for private mentoring. So I thank you so much for introduction, and I would like to downsize to introduce you to the latest ebook you can find on the website that will explain even so much more about Alpha Fibonacci trading system. I will walk you through where you can find the ebook on website later on. So again, briefly about myself. Originally, I'm from Ukraine. Yesterday, I was on call with Ukraine, and I constantly fill in my traders on the latest global situation, which is a huge eye-opener. It is so much more that's being exposed on regular media. I continue being in touch with my childhood friends. I continue caring about global community. This morning, I worked with traders
from London, from Colorado, from Chicago, from New York, from Israel, Moscow, all in one group, and Australia, as you will see next. I live and breathe what I do. You will see why I fell in love with working with Fibonacci Nest. And this is my passion, humanity. And this is my obsession, Fibonacci. And this is the reason I wake up at 5 o'clock every day. My husband asked me to retire this year, and I tried to do it for a couple of months, but it's probably the hardest thing I have ever done. To wake up without purpose is just not my thing. And for that reason, I founded Fibonacci Trading Institute 2011, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel, where traders share their phenomenal journeys and stories. So here's a Goldman, here's offers from top financial institutions that I keep saying no to. And you will see why and what played out this morning in our trading room alone. Of course, I'm blessed and honored when top financial institutions reaching out to me. However, I'm extremely clear I have zero interest in corporate world. I care about humanity. I live and breathe what I do because our global community expands from US to more than 58 countries where traders trading proprietary system on all instruments, all time frames, all platforms. So let's go to the problems traders have all over the world, where 99% of traders I've ever worked with since 2011 have been trying for many, many years, trading with speculative, dangerous gambling habits. This morning I was teaching on brain health. I was teaching how to optimize your brain and how brain health improves your trading. First biggest mistakes most traders make is trading with speculative entries, speculative targets, speculative stops. Market designed to jump into chasing cheap indicators where traders keep being stuck in that indicator race. 10, 15, 20, 30, 50 systems later, nothing gets better except confusion and baggage being created in traders' brain. Second biggest mistake traders make is searching for magic bullet, when magic bullet truly lies in you, in your ultimate power, when you stop chasing delayed indicators, when you stop chasing lucky point and start trading all markets as strategic, intelligent, precise chess across all instruments. This is this morning. Complete beginner trader Pablo came to me when he had no idea how to push a button on trading platform, full-time attorney, so stressed out. Tomorrow he will be speaking in trading bootcamp. This is what he's done this morning. And you can listen to his podcast as he keeps coming back, sharing more and more and more, inspiring others how to trade every instrument you choose, as he's sharing gold, oil, euro, Aussie dollar. Wow. You can hear traders' journeys on our trading podcast channel. So in the trading bootcamp this morning, trader from Australia come to the trading room 2 o'clock in the morning and sharing, I would not be anywhere else but right here in this trading bootcamp. Global community where traders share from all over the world what they trade and how. It never gets old, I promise you. And that's the reason I say no to top financial institutions. And that's the reason I live and breathe what I do. Today is supposed to be at the wedding in India, as you can see, as a guest of honor. So the invitation arrived a little too late, and for very, very personal reason, I'm not at the wedding, but I'm forever grateful and forever blessed. And here is why. Everything changes when traders come to me. 2004, I recognized by complete mistake, completely random, that pure price is exactly the same across all instruments, and pure price in Fibonacci what forms all markets into precise puzzle. Let me show you what happened 20 years ago. Let's do a test and let me open your eyes. I was looking at the chart and I thought I was looking on S&P, but I was looking on Russell. I wish I could see your responses, but please take a look at this chart. Does anyone knows what this is? Of course you don't. No one does. Does anyone know what this is? Of course, no one knows. But what is clear on every single chart? This is pure price. Wow, pure price is exactly the same on every instrument, every time frame, every platform. So this was the moment 20 years ago when I was completely blown away, and I asked myself a question: why, oh why, anyone would ever want to block pure price with indicators when in fact, if you can trade S&P 5 minutes, you can trade Dow 1 minute. You can trade Apple daily. You can trade Tesla. You can trade anything you choose. Euro, of course. What is the difference between all of these instruments? Two key components: risk management and trade hold time. But as traders share all over the world, they go through different stages. When life becomes a little too stressful, a student will be sharing from Moscow in boot camp next week. Trader moves to long term. When time allows, day trade or trade both. As traders from 14 to 80-plus-year-old trading proprietary system that is based on pure price for entry and proprietary alpha Fibonacci for exits. So I hope that was an eye-opener for you, because this remains the key and this remains the core. Proprietary system traded globally. MT4, MT5, interactive brokers, Ninja Trader 8, Thinkorswim, institutional platforms I never even heard of. Every trader, different platform, different time frame, different trade hold time, different risk. But what combines it all together? Pure price for entry and proprietary alpha Fibonacci for exits, and allows you to trade with consistency, confidence, precision, and clarity. This is predictive institutional system which identifies key points of entries, hours, days, weeks, months, and years in advance on all instruments. It depends on time frames traded. So let's go straight to historical events. Shall we do that? Are you ready? This is S&P mini future this morning on long trade today. This is software for Ninja Trader 8. This is the software that identified clear where to enter, where to exit the trade. What is the problem with this trade? And what is so critical to recognize this trade? We're dealing with historical events where price reminds you, speculation absolutely not an option. Remember where to exit your trade. Word Z means exit. This is software for Ninja Trader 8. But if I bring to your attention institutional charts loved by option traders and institutional investors and hedge fund traders, and the charts that retail trader uses to buy the bottom and to ride institutional power, what is so important on this chart? These are catastrophic global events Crisis in Ukraine, my hometown is bombed. Military airport bombs are flying, surreal when my friends calling me from my hometown. But the biggest rally in the history of US stock market skyrockets, trillions of dollars buying the market. Alpha Fibonacci spelled out many months in advance, not to short, but to buy this level. And when US inflation skyrockets, despite catastrophic rate increase, massive institutional buy points identified. And when October 7th Middle East crisis starts, more institutional entries are placed. Here we are right now, all spelled out months and years in advance, at critical key 6,000 level. How many times have you taken short? Did you know to ride institutional power? What is the difference between prior example versus this? No software in this chart, only proprietary settings inserted into Fibonacci retracement tool. Only proprietary strategies applied. So when you're riding institutional power despite catastrophic global events, this is 2,000 plus points institutional rally, identified by proprietary rules despite catastrophic global events in advance. 6,000 is key level traders. Response at this level is crucial. This level is out, S&P skyrocketing higher. How to trade this? You must know Alpha Fibonacci rules. And again and again and again, no software ever required. You choose to day trade with software for NinjaTrader 8 on futures. Trade recognition tool is a phenomenal tool that identifies entry, stop, and target. That's it. So choice is yours. If you want to invest long term, if you want to ride institutional power, if you want to trade with software for NinjaTrader 8, this is how scanner looks like. Multiple alerts constitute power. Single alert constitute weakness. I always encourage my students to ride the power. I always encourage my students to never, ever, ever trade the weakness. Weakness, extremely aggressive trading. So this is historical trade on S&P mini future this morning at the market open. Present when I am with my students in historical trading bootcamp. So when you understand the power of this, and you understand from the test of the pure price, it is all the same. There is only one thing that's left for you to do, to make an effort and identify instrument appropriate for you to trade. This is long and short this morning, also from the trading room, that reminds you, do not speculate where to exit your short. If institutions are long, what is drastically more conservative approach to take? Of course, to ride institutional power and not to trade against institutions. That's simple and pure. That's it. No speculation, no gambling. Ultimate precision. If you can drive, you can trade. Simplicity and purity of the Alpha Fibonacci system. Pure price for entry with proprietary Alpha Fibonacci retracements for exit. Traded globally across all instruments, all time frames, all platforms. So when you come to the website, and I will walk you through later on step by step, when you open up the website fibinstitute.com and you see the invitation to the trading room, please sign up. And when you click on the ebook link at the bottom of the page, I dive much, much deeper into what separates proprietary alpha Fibonacci system from the rest. That's it. And this is what I do for the last, my goodness, 14 years. When you click on our students' performance at the top, you will see what traders trade all over the world. Ken will be stopping tomorrow in Fibonacci Trading Bootcamp, sharing how he trades crypto. Still stop by this morning sharing how she trades every instrument. This is Richard, oncologist, retired, trading proprietary system with options. This is Georgie in Moscow, trading stocks. When life becomes very, very stressful, you make a personal choice what you want to trade and how. That's it, pure and simple. And that remains a core, and that remains a key. Pure price for entry with proprietary alpha Fibonacci retracements for exits. Alpha Fibonacci trading software for NinjaTrader 8 removes speculation and gambling, enables trader to trade with ultimate precision across all futures. Removes the noise, removes complexities, allows trader to focus on simplicity as a key word. Simplicity and precision is what separates Alpha Fibonacci proprietary method from other systems. Here's another short on S&P mini future with a software that reminds you RZ means reversal zone. Expect reversal, and that's exactly what played out, as you can see clearly on this image. But if I bring to your attention identical event on Microsoft, my goodness, as Jerry in his 80s trades and says under our podcast channel, day trading is not for him, but he loves buying the bottom and selling the top with Alpha Fibonacci system. That's it. No software on this chart, none is present. And this is what I was teaching this morning for the previous 5-6 hours, where every single trader makes a personal choice what's appropriate to trade. So this was one of my favorite examples, and why I love bringing major news into the trading room. While we are in a trading bootcamp, and I will show you and give you opportunity to grab the last spot. What was so important this morning? Crude oil inventories, correct? Yesterday morning, negative 2.1. Ouch. What are we discussing with my traders? Alpha Fibonacci system says buy, not sell oil. Alpha Fibonacci system identified where to buy from. This was oil news, ladies and gentlemen. Oil skyrocketed 100 points plus. This keeps happening time and time again, and you are extremely prepared far in advance. So if I take you back to the day before, and I take you back to Tuesday, November 5th, you know, far in advance, not to short near this level, but to monitor for long. Next day, news is negative. Shock or not? Oil skyrockets. What a starting event. So if I convert this chart to 5, to 10, to 15, to any chart you choose to trade, this is a reminder again and again and again. Alpha Fibonacci system overrides major news and identifies this as a buy point. No random shorts, no random entries. What is the difference? This is retail chart. This is day trading chart. This is institutional chart. Is anyone surprised where oil sold off from? Is anyone surprised where oil is rallying from? This is a chart present in the trading room for years. Again, identical example as you saw on S&P. Catastrophic global events, S&P skyrocketed 2,000 points plus. What was so common between oil and S&P? This was historical event traders. This is what played out in the month of August. Let me take you to the key institutional chart to the month of July. Sell-off coming from Alpha Fibonacci reversal zone, correct? Let's go to July 10th. Let's see what Alpha Fibonacci system was telling us. Wow, bullish rally zone continues with vengeance. Here comes the sell-off. By the end of July, here's the price. In correction, exhausted. Intelligent Alpha Fibonacci trade understands this is historical level. If this level remains obeyed and institutional orders are filled, bullish rally will continue with vengeance. Intelligent retail trader also knows far in advance not to short near this level. And that's the power of the system. Predictive institutional rallies present in our course for years, spelled out what you're witnessing today, despite global catastrophe, despite inflation, despite Middle East and Ukraine war. Here we are at 6,000 level. As Sue spoke this morning, how she traded gold, how she traded crypto, how she traded multiple instruments, as will be posted on our podcast channel. So system applies for all platforms. Traders in Saudi Arabia, traders in Dubai, traders in companies with proprietary platforms. If the platform has thrived, if the platform has Fibonacci retracement tool, insert the levels and apply, and the skies are the limit, which allows you to trade all markets as strategic precise trading chess. Here's US dollar. Choconut 134 holding key to US dollar. We have Canadian student now in the course. My heart goes out to Canadian traders. Exchange US dollar 40% more. US dollar is not crushing, holding this level. Here's another example. As for traders all over the world, trading system on MT4, MT5. Here's euro. One of our incredible students in Saudi Arabia leaves Saudi Arabia in buying home in South France when you're at the bottom. Jamal sending me emails how happy he is being part of the free world again. Has anyone seen good news in Europe? Please tell me. Shock or not, euro skyrocketed from 95 until 127. 104 is the lifeline on euro. Has anyone seen good news? Hamas invading Israel, bullish rally, and euro starts again. Oops, look at that chart. How stunning is that? What a precise strategic intelligent chess. That's it. 104 lifeline on euro. 104 is out, euro heading to 1006, 95 to follow. But this is your trading range on euro. And we will review multiple instruments next. This is software for Ninja Trader to day trade gold. Again, at different stages of your life, if you are properly equipped, if you are emotionally stable, if you love trading markets as intelligent strategic chess, and you have emotional and financial stability, enjoy trading gold, of course. With a trade recognition software, you know where your entry, stop, and targets are. All you have to do is choose your best trade. Trading with institutions, never ever against them. Alpha Fibonacci software for NinjaTrader 8 identifies precise entry, stop, and target. Choose your trade carefully. Again, oil futures. Look at this brutal retail chart, but precise entry, stop, and target shows you where price would reverse from. No speculative random shorts, no speculative random longs. Obey the rules, and the skies are the limit. Identical levels as you saw on institutional chart on oil, on euro, on US dollar. Only difference, prior images had no software. This is software for NinjaTrader 8. Today trade futures. So when you understand that no speculative number of points allowed, you cannot chase 10 points, 20, 30 points on a day when S&P give you maximum 3 or oil give you maximum 10. With the power of Alpha Fibonacci, you see that clearly. Every day, every trade, different volatility. That's what forms the risk. That's what show you your targets. No speculation here. None are present. Software for Dow futures. I always encourage my traders to start trading on Dow futures. It's 2.5 times less expensive than S&P, and it's giving you 2.5 times less trades. This is software for NinjaTrader 8 that shows you entry, stop, and target, and where a trade reversed from. But if I bring to your attention chart on Dow, all the events played out in the trading bootcamp. My goodness, look at this buy point at the bottom. You knew it well before election results played out. So if I bring to your attention this chart and I taking you back to a day before on Dow, wow, you knew where to buy. Look at that. That was posted days in advance. November 5th, I received one of the biggest gifts ever. What a stunning bullish rally, skyrockets. Boom. My vote goes to peace. We all know what happened in the last 4 years. I voted for peace, and so are my friends in Ukraine. That's it. We all win if we have peace. And if you know where to buy the bottom, you're extremely well prepared. And that's the power of the system. And that's how you trade all markets as strategic, intelligent chess. Scanner looks with shorts and longs. I highly encourage you to master one instrument before you jump to many. So scanner allows you to see synchronicity with multi-market scanner. You wait for your trade and you're very, very clear when power versus weakness is present. Scanner removes the need to flip charts, chase markets, and place trades after the fact. So when you understand that the core of the Alpha Fibonacci trading system are the institutional entries and the institutional exits, you can trade futures. You can trade stocks, you can trade crypto, you can trade Forex, you can trade anything you choose. We already reviewed oil. Let's go to NVIDIA, shall we? When top fund managers on Wall Street taking hit on NVIDIA losses, Kathy Woods exiting position on NVIDIA, we discussing in classes, it's not a brilliant thing to do as Alpha Fibonacci system spells out. This is a place to monitor for long, correct? Is everyone clear on that? Let me show you NVIDIA losses versus Alpha Fibonacci system. Wow, this was a loss she took. 51 million minimum. She lost actually a lot more money than that. So overall loss of the fund, exponential, catastrophic. That's it. So as you could see, she dumped NVIDIA shares before 160% surge. The gambling I witnessed on Wall Street is mind-blowing. My traders trading so much better, laughing when top fund managers on the planet taking a hit. My students know where to buy the bottom. NVIDIA heading higher to 160, but again, how to trade this? You must know where to enter, where to exit your trade. From this level, 14.15 until 140, 160 That's it. You're trading so much better than top Wall Street hedge fund managers because you are not a gambler. You're an intelligent, strategic trader. Alpha Fibonacci trading system allows traders to trade markets only with institutions and never, ever, ever against them. As intelligent, strategic chess. So let's go not just to Apple, but let's go to something bigger. Let's go to Amazon, shall we? Alpha Fibonacci system identified where to buy the bottom in Amazon. 2023 January, stunning and flawless after catastrophic sell-off on Amazon, where Amazon collapsed 65%. This is where Amazon is now. Amazon stunning by point, not sold off. That's it. This was critical key event, this level to the downside. No speculation here, all identified months in advance. So make a personal decision if you want to day trade futures or if you want to trade top stocks. Absolutely, choice is yours. If you hear in the background strategies and systems running, because I always work on my systems, always, as I keep developing so much more, and I will give you an idea in just a second. So when you're using your limitless brain and you're trading markets, pure price for entry, and proprietary Fibonacci retracements for exits, everything changes. Here's Apple. This is where Apple sold off from. So if you think security lies in holding the trade forever, this is a reminder. If you knew where to exit your position on Apple, you would not be crying yourself to sleep, losing 20–30% this year. That's Apple. Sold off from Alpha Fibonacci reversal zone 172. Testing now brick wall to the upside. That's it. It is all the same. Only difference between trading stocks, Forex, futures, ETFs, Bitcoin is risk management and trade hold time. This is the rule-based system with precise entry, stop, and targets. We already reviewed Amazon, as I'm trying to move very, very fast throughout multiple examples in the current markets. So when you prepare for your trade with the Alpha Fibonacci system with institutional framework, the institutional framework where institutions holding positions and you understand institutional power, you do not trade against them. So look into your account and ask yourself, how many shorts have you done on S&P in the last year? When despite catastrophic events, S&P skyrocketed 2,000 points. Ask yourself, how many shorts have you done on oil because of bearish news on oil? Or have you been buying oil at key level and shorting oil at key level despite war in Ukraine where oil sold off from 85 to 65 level? That's it, choice is yours. Your trading will not depend on news. Your trading will depend on strategic, intelligent, rule-based, precise entry, stop, and target. So when those signaling multiple alerts, look at that. I love, love, love when all of this playing out in live markets. Simple and pure. What does this mean? Power. But what is the problem on Dow now? Do you understand what the problem is? We're dealing with historical highs where institutions can afford to buy as institutional traders in phenomenal profits, correct? For retail trader, it's a very aggressive, overextended trade. That pure and simple, with very dangerous and very slow crawl to the upside. But if I bring to your attention the very important chart on Dow, here we are. Stock and pain. It's brutal. Overextended chart. Our number 3. Institutions adding to their positions. Here's Dow. Breaking through historical high. For retail trader who's trading very small account, it's a very aggressive trade to buy historical high. Agree? So if I convert this chart to 3 to 5 to any chart you choose to trade, what is the best case scenario? Pain and crawl. No software on this chart, none is present. You understand that part? Software is here. Now, in the live market. Historical high, pain, aggressive trade. So when you start separating conservative versus aggressive trades, everything changes. We're discussing this in bootcamp. So when you come to the website or you send me an email, I will always send you trading room trial request. But right now we are in historical event. Right now we are second day in historical US election trading bootcamp. We're down to one spot, value of 2777 included with a lifetime system for all platforms or software Ninja 8 with group or private mentoring package. So when you view students' performance and listen to students' podcasts from all over the world, simply choose the option appropriate for you or call and email me with any questions. Private mentoring savings almost $10,000 and I take you into the space you have never imagined. I build up your self-awareness. I build up your accountability. I show you if day trading meant for you or not. But second option, group course, is the most popular option. 80% of the students cannot come to live classes viewing videos 24/7. So when you're looking at this excruciating and painful crawl, this was expected, as I will keep bringing this to your attention. So when you separate brutal retail chart at historical high with spectacular trading, everything changes completely. November 5th is a bliss, and I share with my traders in detail as we review trades from micro to macro chart. It's a world of difference if you're buying the bottom or buying the top. Do you understand that part? Software for Ninja Trader 8, pain and crawl. For retail trader, it's a problem. For institutional trader, it's a bliss because institutional traders in phenomenal profits. That's it. No speculation ever, never. Ultimate precision only. And that's historical high on Dow now, live. So if you understand the power of this and you make a personal decision what chart and time frame you want to trade, everything changes completely, forever. You trade at key institutional levels. You do not spend endless hours in front of the screen, and you make a personal decision, as we already reviewed Euro USD. During horrific global events, you witnessed how Euro skyrocketed. Correct? You remember that part? How is it possible? War in Ukraine, but Euro keeps rallying despite catastrophic events in Europe. Biggest rally on Euro in 20 years. And that's the lessons of the current markets now. So when you identify your trading range prior to trading based on institutional levels, you understand quite well the best and the worst day to trade. You understand quite well when to take vacation versus not. You understand quite well where institutional entries and exits are present. You're riding institutional power for days, weeks, and months. The most challenging market conditions play out when institutions holding positions. That's when retail trade are tested to the core, as you're witnessing playing out now in front of you in the live markets. So when you separate aggressive retail conditions, when institutions doing nothing, everything changes. In the bootcamp in the last 2 days, we dissected at least 12, 15, 20 trades, from micro to macro charts, from futures to stocks to forex. And that's proactive trading, where a trader knows in advance institutional entries, institutional exits. On November 8th, very famous Bitcoin trader will be speaking in bootcamp. Here's a Bitcoin at Alpha Fibonacci buy point. Ken and I met in London a couple of times, including a few months ago. Bitcoin skyrocketed from Alpha Fibonacci buy point until this level. Right now in the live markets, I don't want to convert data to Bitcoin live because charts will go crazy. For that reason, you're witnessing Bitcoin buy point versus now. That's it. So when you're using your limitless brain and you understand since very beginning of the webinar, it is all the same. Everything changes. Sue spoke this morning in the webinar. Podcast will be posted on our podcast channel. This is the email from this morning that she shared in 1 hour podcast. She's been struggling for many, many years, and she was Googling one day and found Allah's FTI. Was drawn by simplicity and ease of it. And after so many years of struggling, she took the course, practiced for 3 years, and for the last 4 years, she's been making money consistently and managing multiple accounts now. She had made her own indicator out of all I taught her, and she's been quite successful. Trading S&P, gold, Bitcoin, oil, silver, gold. She closed some of her trades today. Podcast will be posted on our podcast channel. CEO is a legend, stopping by in the course all the time from Australia, 2 o'clock in the morning, sharing this is the Harvard of trading education. This is the reason I wake up at 5 a.m. When Carlton brought 5 friends to the course, not 1 but 5, healthcare executive trading system on S&P at night. Ken, legend, movie maker and crypto trader, will be speaking in Fibonacci Trading Bootcamp again. His daughter gave me this most magnificent card. Emmanuel brought his wife to the course. Both became full-time traders, trading managed accounts after struggling for many, many years. That's it. Tom struggled for 17 years going down a very wrong path. After a single mentoring session, everything changed. As he says, wasted 17 years before, not anymore. That's it. Paul was in the boot camp this morning. We have graduates of the course who taking boot camp number 5. William the legend taking boot camp number 15. And here we go. Ultimate joy and happiness from Australia, as I hope to meet in Australia next year. Means the world. All I do is my best. Spreading my seeds of hope, honey for better lives, spreading my joy. Means the world. And the reason I live and breathe what I do. Pablo speaking in bootcamp, I've shown you his stats this morning. Complete beginner trader who closed his law practice and became full-time trader. That's it. And when our students winning trading competitions, it's no surprise. So when you come to the website and you have any questions for me, please do not hesitate to contact me. Simply click on Contact Us section or pick up the phone and call and email me your number. You will find a lot of details in our ebook. Where else can you find a lot of details besides students' performance, students' podcasts, students' reviews? You can come to our YouTube channel, Fibonacci Trading, where you can see thousands of videos from over the years. And the latest podcast I have done, including my own. I've been resisting to do my podcast. I don't like talking about myself. I want my traders to succeed. But recently I have done podcasts where I share my journey. So if you're serious about trading, I look forward to working with you. Please review all the information on the website. It's a final chance to join us in Trading Bootcamp, all on the homepage. 4 videos posted from the previous 2 days that you can view 24/7. And when you join one of the courses, this video is available during duration of the course. But what separates this event from most, it's a historical event. When during single day you learn so much, where I dive deeper into human consciousness, into human brain, into human performance, as I keep my license current in brain health, always. Thank you so much, traders. It's been my joy and honor. Any questions, simply pick up the phone and call US +1 925 257 4298 or info@fibinstitute.com. I don't see any questions. I don't know what to click on. Please let me know if there are any questions. No questions? I think I can see where I can post the links. Yes.
Yeah, you can post them right in the chat there, Ala, or I can do it for you. But yeah, there was a couple questions, but you answered them as you went through, so that was pretty well done.
I am trying to see and read. Okay. Is my link going through?
I don't see it yet.
Not sure.
What's the link again?
No, just a link to the website and the link to ebook.
Mm-hmm.
I'm trying to post. So I stopped the recording. If there is any kind of question, please let me know. I cannot post anything. I think I need the permission to post the link.
No, it's you should have access to the chat there, so you should be able to
I
just
only
post it in
see
there.
question if I follow Jim Cramer. I need the mic. Not sure what that is. Hold on. Here we go. Let me see if I can send. Is anybody seeing the link I'm sending? Please let me know.
Not yet, not in the chat box. Oh, but you know what? I see it, and I'm going to drop it in there for you. It is. Let me
Thank you.
copy that, and I am going to post that in the chat box for you. Awesome. Yeah. So you're posting it where the questions are, but there's actually a little chat area where we can post it.
Sorry, I'm not familiar very well with GoToWebinars. I use Zoom. So if there's any question, could you please let me know?
No, there was a couple, but you answered them. The one guy said, thanks for answering. He asked a question, then you already answered it. So, and then the other one was the Jim Cramer question. So no, I think you were pretty good. I think it was a fantastic brief.
Thank you so much. Thank you so much for having me. And please give my love to your beautiful wife.
All right, Ala, thank you. Everybody give Ala a virtual golf clap for her presentation. We always love having Ala. I learn something every time she shows up, and we love her as a strategic partner. Very, very smart trader and very respected in the industry. So thank you, Ala, for coming, and we appreciate it.
Thank you so much. Thank you. Bye-bye.
You bet. God bless.
God
All right,
bless.
folks, we have one more 500-pound trader to brief. I'll see if Jamie has joined us yet. If not, no worries. Jamie, if you're in here, just give me a thumbs up. Jerome Powell, kind of what we talked about, a little bit of a nothing burger. So not looking, wasn't looking too hot. And you know, it's interesting. He actually, there were several questions from reporters that said, so if Donald Trump asked you to resign, would you? He looked into the microphone and looked into the camera and said, no. And didn't say anything else. And the room was kind of quiet. And there was a follow-up question like, so you're saying if the president asked you not to keep serving, you wouldn't resign? He said, no, it's against the law. Wow. So even though he's right, we all know Donald Trump and how he kind of deals with that type of stuff. But technically, a Fed chairman, what is it, 10 years? A Fed chief is appointed for. So I think the guy's saying, hey, I'm going to finish out my term. But take a look at this market, folks. You cannot keep it down. I think we're up, what, about 5% on the S&P 500 in 48 hours. This is insanity. Now I shot a little bit of a bear call spread over here during the brief. In and out. This is posted in our member area right here. Boom. And it was a timely exit because the market turned around. So shot a bear call spread right there for the day, the 59.80, 59.85 on the S&P 500, out for a 65% profit. Let me go show you where all this stuff was, because look what the market did. It actually turned. Let me go to the S&P 500, the chart. So this is why I say, hey, this was a pretty, let me zoom in here, a pretty timely exit. So shot the bear call spread right here. And then as the market slammed right there, bailed out, 65% profit, and then the market turned around. So that's why I said, man, that was a pretty timely exit. And that's also why we call those sniper trades. These are quick sniper shots. Hey, if I can make a 65% profit in whatever that was, 23 minutes, that's some good living. So again, I can teach you how to do all that stuff here at Top Gun Options. After you're done for the day with our last speaker, make sure you check out the Top Gun Options offer. Fausto and Ala and Anka, they all have great offers. I strongly recommend you take a look at everybody's. Like I said, man, take a look at all the different flight instructors, how they fly and fight an airplane, and whatever resonates with you, go that route, right? So, all right, Jamie, are you in here? Go take a look. And there was a couple questions about the psychedelics, because it's interesting, because and I recognize a lot of the folks asking the questions about the psychedelic stocks aren't current members, and that makes sense with me. So, and even some of my current members said, hey, Wiz, what were the What were the stocks? What were the stocks besides MindMed that you talked about? So just in case anybody else showed up late or anything like that, yeah, you're in a live trade brief. And yes, I am talking about psychedelic assisted therapy. So let me give you that list real quick. Write these down, or I'll just write them on the screen here. These are the stocks I would buy with both hands, the publicly traded psychedelic stocks. MNMD, that's MindMed. Compass, CMPS. Atai, ATAI, and Cybin, CYBN. This would make your own little psychedelic ETF, so to speak. These are the stronger publicly traded psychedelic names, and they all have phase 2, phase 3 trials that in process. Doesn't matter that MDMA didn't get approved 2 months ago. Donald Trump said, Robert Kennedy, I want you in my administration, and I want you taking on big pharma. And one of the first things he put in his tweet yesterday, Robert Kennedy Jr. said, psychedelics. We need to get psychedelic assisted therapy approved for our veterans. What we are currently doing is not working. So I know you come to a trade brief, you talk about Amazon and Apple and the S&P 500 and the VIX. Well, the only sector that I am super bullish on right now is the psychedelic space. Now, don't get me wrong, man. This is a rip your face off rally. I'm going to remind you, though, this is also part of this is also a short squeeze. There are a ton of shorts getting destroyed in the past 2 days. I'm telling you. And they got to buy back those positions to unwind them. So this will run out of steam, folks. Unless this is the first time in 33 years of doing this, this happens and it just keeps going straight up. Can that happen? Yeah, of course it can. Will it? No, it won't. So if you're a little aggressive, you can take a look at the bear call spread that we fired earlier during my brief at noon, or you can kind of wait on the turn, right? You can kind of wait until we level off, and then I think we might even get back down to this 20-day moving average, because the market doesn't like hanging up away from a moving average for too long. I mean, look at this. This is like a slinky going down the stairs. It always looks for a little bit of, I call this the circulatory system, right? The 20-day, the 50-day, and the 200, this is the 150-day moving average. So look, bounce off it, went through, bounced off that one. We're not going to hover up here for too long, okay? So make sure you watch the replay if you came in late, because I covered that S&P 500 bear call spread out about a week from now, okay? Any questions on that? We covered that earlier. I can maybe send that out in the replay, obviously, as a screenshot as well. Okay, if there's no questions, let me go see if James is making it in here or not. Let me scroll up. Yeah, thanks, man. Yeah, those were good election trades. We, let me just show you. Men lie, trades don't. So we put on a bullish double vertical on Tuesday. At TOPGUN Options here, I do live trade briefs Monday, Tuesday, and Wednesday for about an hour. I don't sit here, folks. I have a life to live. I got a wife and kids and a foundation, all sorts of stuff. I don't sit here anchored to this desk and trade. I fire my shots and live. But Monday, Tuesday, Wednesday, we do a live trade brief from 10 to 11, maybe a little shorter, maybe a little longer. It just depends on what's going on in the world, right? So we put on a tactic called a bullish double vertical on the S&P 500, and boom, in the blink of an eye, we ripped from, what's that, 57.20 up to 59.75. That trade made roughly 350% in a day, and it's still ripping. So I said earlier, I laughed at myself. I'm like, if you didn't listen to me and got out of that trade yesterday, you're making even more money than I did. I love when my flight students make more money than me, man. It's like, what was that TV show growing up? Kung Fu, right? David Carradine or Keith Carradine, one of the Carradine brothers. When you can walk on the rice paper and leave no trace, you are a true Shaolin prince, right? So I love people that I got a couple texts like, dude, I stayed in the bullish double vertical and I'm making even more money. Hey, what's a good wisdom to remind you at this time? Pigs get slaughtered. Nobody's gone broke taking a profit, folks. So I would definitely look at closing that double vertical. Unless, like I just said, you think we're just going to keep ripping higher here. I want to quickly go back, because somebody did ask about Raytheon. Like, man, you were really long-term bullish on Raytheon, and now you're not. Precisely. Literally, in the blink of an election, in a 24-hour period, I went from being super bullish to not super bearish, but it changed my strategic mindset. I'm going to teach you our proprietary trade planning process here at Top Gun Options. Step 3 of our trade plan is called commit criteria. I call it the cocktail party pitch. 3 to 5 sentences why I got into this trade. Anytime 1, 2, 3, all of those sentences change, eject. Get out of the trade. Discipline and risk management, folks, equals superior execution. Having a trade plan that I'll give you takes the emotion out of trading. You don't want to sit here and look at Raytheon and go, oh, Raytheon doesn't hate me. I mean, come on, Raytheon, come back. Raytheon would bomb your house and wouldn't even lose any sleep, folks. So take the emotion out of trading. My commit criteria for being long-term bullish on the defense stocks has completely changed. Mine has. You can be sitting here and going, Wiz, you're completely wrong. Even though Donald Trump is talking about peace breaking out, it ain't right now. They're still at war in Ukraine and Russia. They're killing each other, Israel, Iran, and Hamas, and Hezbollah, and ISIS is back up in Iraq. The Houthis and the Blowfish down in Yemen, and then Xi Jinping called Trump and said, hey, congrats on your election, but don't kind of mess with me. If you mess with me, it's going to get ugly. So I'd like to believe that peace is breaking out, but who knows? If it does, the defense contractors are going to come under pressure. That's Raytheon. I think we looked earlier also at General Dynamics, which is starting to fade a little bit as well. And then also LMT, Lockheed Martin. Boeing, yeah, the defense. Whoa, look at that. After earnings here, Lockheed's really given up the ghost. So it's Lockheed. I've looked at Lockheed in a while. Looks like it's filling the gap here. See that big run? It's literally hanging on half the gap. If it breaks this line, it pounded into the dirt. It's bearish. But Trump, love him or hate him, man, he sent out a tweet last week that said, if you were a general involved in that failed Afghanistan fiasco, pack your bags. I would love to be a fly on the wall when that guy walks into the Pentagon on day one or whenever. All those general officers, I hope they're on LinkedIn right now, calling in the markers from their defense buddies, because, to use the immortal words of Donald Trump, you're fired. And most of them do deserve to be fired. They turned the United States military into a woke, social experiment, and it's getting people killed. And that we just simply can't have that. Okay, I'll keep going for a little bit more until Jamie shows up. I'll always take the free airtime. Fausto earlier was talking about Amazon. So we have a trading service called Solo Amazon. Now, for all the political science majors in South Jersey, what's the only stock we trade in the Solo Amazon service, right? It's like that Bugs Bunny cartoon. Who's buried in Grant's tomb? So look at this. 200 was the all-time, obviously, post-split high. There's the earnings report. Gap up on earnings, almost filled the gap, and then ripped higher. This could not be a more bullish technical picture. Let me close the chart down a little bit right here. There we go. So, folks, there's earnings right here, right? Rip your face off rally. And right here, 192.5 was about half the gap. So rip your face off, pop. It didn't fill the gap. It got halfway down at the gap and turned up. That is the most bullish technical indicator. That's day one of technical analysis class, man. If you see a gap move, it doesn't all the way fill the gap and turns up, completely bullish. We are long-term bullish on Amazon. But the whiz fighter, thinking that we are going to fill that gap and kind of hover and kind of go through a decision process, I put on a tactic called a iron condor, a range-bound trade, which means I put on a roof, meaning I don't think Amazon's going to go above the roof, and I put in a basement. I didn't think Amazon was going to go through the basement floor here. So that trade is doing absolutely spectacularly. This one is getting destroyed. So I'm going to wait a little bit more. I have like the 202.5, 205 bear call spread. This is a monster pop in 2 days. In the world of weekly options trading, a half a day is a life. I mean, look at this. This happened in half a day. That happened in half a day. So Friday, we could sell off into the close. So maybe I could get out of that spread for a little bit more. So I'm not the guy that sits here and pumps 100% winning trades all the time. I'm getting my ass handed to me on a bear call spread in Amazon. However, what takes the sting out of that? I have a long-term bullish trade on Amazon that is printing money, like literally printing money. I want to show you how to do a long-term bullish trade on Amazon without coming out of pocket a lot of money, okay? This tactic, and it's not a strategy, right? There's no such thing as an option strategy. It's called an options tactic. So here's what we're going to do. Let's do some quick math. If you wanted to buy 100 shares of Amazon today, you would need $21,000 for 100 shares. Now, everybody's got 21 grand lying around, right? Probably not. But buying 100 shares of Amazon would cost you $21,000 today. How about I hook you up with an awesome tactic? I'm going to hop in my time machine and I'm going to fly on my options chain all the way out into the future. And I'm going to get long-term bullish on Amazon. I can go in the world of options all the way out to January of 2027. I'm going to click on that and up pops our options chain. Okay. So here's what I'm going to do. Instead of paying $21,000 for 100 shares, I could buy an at-the-money call option. If I buy one Jan 27 210 call option, I am technically bullish on 100 shares of stock. Remember, an options contract gives me the right, not the obligation. I have the right to buy 100 shares of Amazon in the future at 210. Now, would you rather spend $21,000 to buy 100 shares of Amazon or $4,700 to control 100 shares of Amazon? Don't even type the right answer, because if you want to spend 21 grand instead of 47, you're a fool and you're a pretty bad trader and investor. Now I'm going to sweeten the pot even more, because buying a call option, folks, for many of you is the most basic option, say it with me, tactic, right? Wiz, I know that if I buy a call option, I'm bullish. Correct. Now, how many of you know that buying a put option is bearish, right? You've probably heard that. If you're not familiar with options, you probably hear somebody say like, oh, I think market's going to implode. I'm going to go buy some puts. So buying a put option is bearish. But guess what? Somebody has to sell you that put, right? So if a put buyer is bearish, the put seller, the person that's selling you that put, is what? Bullish. They're the insurance company. You're buying a put because you think the car's going to crash. USAA is like, it better not crash, but I'll sell you that insurance policy. You pay me a premium, right? So why don't we do something like this? We sell, and I see Jamie just entered the room, so I'm gonna wrap up for a second here, and I'm gonna tease you with this tactic. I'm gonna buy an at-the-money call option. I'm gonna sell an at-the-money put. And I'm going to be synthetically long 100 shares of Amazon. And what did I do? We went from 21 grand to, what was it, $4,700 to $1,800. I can get you synthetically long 100 shares of Amazon. See that P&L diagram? That's long stock. And that options tactic right there is called synthetic stock. The only two things you don't get with synthetic stock is to vote, because you don't own the shares. But last time I checked, Jeff Bezos and his bride or ex-wife have probably a couple more shares than you ever will in your life. And you also don't get a dividend. But remember, Jeff Bezos laughs at the word dividend. He's like, hey, man, if I make some money, I'm putting that money back in the company. Absolute waste of time, I'm keeping that money and I'm going to use it to innovate. So quick little synthetic stock tactic. If you want to find more about that, you can definitely join up our solo Amazon service. It's only $97 a month. All right, Jamie's in the room. Let me let me make him a presenter. I'll knock out a quick intro of my brother here, and I will give him the floor. So as Jamie's booting up his F-18, Jamie's the founder of the Rational Trader and co-host with Louis Navalier of the Rational Trader podcast. He began his rational journey back in 2002 when he founded the groundbreaking Rational Investor newsletter. In addition to being an investment guru and a macro strategist, Jamie and his family have been longtime venture investors in a number of companies with diverse backgrounds in both tech and fintech sectors. He's best known for developing a one-number strategy for identifying stocks poised to double in value or more over a 1 to 3 year period at a strategic level, like we just talked about, right? You've probably seen Jamie all over the place. Very well-respected guy in the financial community. He's been published by a lot of the big houses and influential media outlets. He's been on MSN Money, Market Watch, CNBC, The Street. I mean, the guy's resume is absolutely insane. Registered investment advisor, worked with a bunch of folks, other investment advisors, the president and CEO of Al Frank Asset Management. He got his BS from the University of California down in Los Angeles and his MBA at the University of North Carolina. He lives in Minneapolis with his 2 daughters, Julia and Ellie. Jamie, welcome aboard, my brother. The floor is yours, my friend.
Well, Wiz, thank you very much for that introduction. I haven't heard that story in a long time, and you brought some melancholy, all those great memories.
I feel you, man. Well, I'm starting to catch it. We're all getting a little more mature each day that goes by. But I appreciate you coming, Jamie, and the floor is yours. I can't wait to see what you have to say.
Yes, sir. Well, hopefully we can have a jam-packed session. Really super excited to be here to talk about something that I kind of jokingly call it the Reese's Peanut Butter Cup strategy. My good friend you mentioned, Louis Navalier, and I have been doing a podcast for a couple of years called the Rational Trader Podcast, and he brings his chocolate to those sessions. I've got the peanut butter, and we put those two together, and we're like, holy cow, we've got something here. So really excited to introduce you to what we call the 2 Sigma Trader, and it's a strategy for finding really exciting hot stocks to trade. And I know this is an option-centric audience, perhaps. So a lot of the things that I'm talking about here today are in full research mode, option-wise. We haven't brought out a strategy to do options, but I'm sure your audience is sophisticated enough to take what I say here and put an option spin on it. So with that, let's dive into what I'm going to be talking about here today. With 2 Sigma Trading, we're going to learn about what it is. What is 2 Sigma Trading? Most important to 2 Sigma Trading, and it was something that I kind of thought about while you were presenting, Wiz. The market universe is so vast these days. I think it's overwhelming for folks that are traders. And a question that I've heard often is, well, how do you know what are the right stocks to trade? And so we're going to talk about that magic formula for us, the ability to find the right stocks to trade. 2 Sigma is something that is very real. The reversion to the mean. Markets are not efficient. We don't believe them to be efficient. We believe they are manipulated by the large hedge funds. And this little formula that we discovered here is something that we can use to find hot stocks to trade. And so I've come ready to share with you a number of really great 2 Sigma trades that we've made during this current earnings season. And then, of course, if you stick around, I can offer you our grand finale 2 Sigma hot trade to make right now. Both Louis Navalier, and I love this stock, and I have it in my 2 Sigma trading portfolio. Louis owns it in his stock portfolios, and it's something that is tradable right this very minute. We also have a very special offer, if I can be so bold to entice you to learn more about 2 Sigma trading. I asked my publisher, who reluctantly agreed to let the first 30 folks in from this session today to join us at a very, very special, we call it 90 for 90. So stick around for that offer as well. But first, obviously, and I'm sure you've done this already with Wiz, but we have our own important risk disclaimers. There is a significant risk of loss in all trading. Past performance is not indicative of future results. Trading does involve risk. All trades are hypothetical, no guarantee of actual profits. Hypothetical performance results have inherent limitations. They do not represent real world trading and cannot be relied upon to generate the same in the future. We don't know the impact of market factors or trading psychology. Under no circumstances will the company be liable for indirect, incidental, or consequential damages related to trading losses. You must be fully aware of the risks and willing to accept them before investing. I always say, this is the common sense. Just be smart out there, people, as Hill Street Blues used to say. And I'm really dating myself with that reference, by the way. So who am I? You got that nice introduction. Just Jamie DeLugash. You can call me JD. I've been around. I started my career on Wall Street, more on the banking side. Stumbled upon the wonderful world of financial publishing back in the mid 1990s. Was able to train under another guru who sadly passed away in 2002, but since that time have developed a really nice relationship with Louis Navalier. So 2 Sigma Trading features Louis Navalier's highest rated stocks. And if you don't know who Louis is, he's a renowned growth investor. Huber Financial Digest rates him one of the highest ranking stock pickers in the country. He's been doing this for a number of years. His portfolios are just always do well, time tested. He's a quant guy, utilizes a number of factors to analyze all of the entire universe of publicly traded stocks, and then he divides that into what I call fractals, and it's those fractals that I'm using to help me find my 2 Sigma trading. Of course, all of this stuff got blown out of the water yesterday or 2 days ago with the election, and then the re-election of Donald Trump. The state of the market is a red dawn rising. It is the elephant in the room, and makes it hard on us doing presentations like this, because when you have a market that ripped like it did yesterday, it sort of blew out of the water many of the trades I wanted to talk about here today. But the nice thing about 2 Sigma trading is that it is a statistical phenomenon that is changing every day, and the mean price of a stock changes every day. And with those changes, we can find opportunities. And like I said, we don't believe the markets are efficient by any stretch. And so opportunities from manipulation are present for a variety of reasons, for a variety of factors. We're agnostic about those reasons, by the way, and you'll learn with the hot stock that I want to share with you to trade right now. Some of you may be like, oh my God, there's all this stuff going on. The numbers are the numbers, the facts are the facts, the quant model is the quant model, and we stick to it. And because we're sticking to it, this process has allowed us to pick 3 out of 4 winners, generate a 5% average return per trade. It's not like the huge returns that you can get in options, but it's still pretty significant when you think that our average holding period is 21 days. If you annualize that, that's 80-some% per annum. So with that, let's get started by defining what is 2 Sigma trading. Really simple. We're not reinventing the wheel here. We're utilizing 2 standard deviations from the mean as our guide rails, I guess you could say, triggers. We have a rules-based system, and as I said, we're featuring the highest rated stocks from Louis Navalier's quant model and quant universe. That too, by the way, is changing all of the time. Every week, I get a giant spreadsheet with 6,000 stocks that are divided into these 10 fractiles, and only the highest rated stocks go into my analysis of finding 2 sigma trades. So over the 2 years of podcasting with Louis, there was a common theme that developed from those episodes, mainly that there's this phenomenon that we both observed and talked about quite frequently called reversion to the mean. And after sitting down and thinking about it, I like to go for 5 to 10 mile walks every single day, just part of my daily physical fitness routine. And on those walks, it gives me a lot of time to think. And it was on one of those walks that I said, you know, I need to quantify, you know, I'm someone that's on the spectrum here. So if you understand what that means, I love numbers. I love finding patterns. And so this reversion to the mean was something that really resonated with me. And I just wanted to put some rules behind it. And so we started with 2 standard deviations as our trade triggers. We developed strict exit rules. When a stock trade is opened, we use the mean price and then 2 sigma above the mean as our trigger to close a trade. And of course, you know, rules are great, and I don't get the wrong idea. I am a rule follower, but from time to time, discretion can be utilized and should be utilized as well. I don't believe in a completely 100% strict rules-based trading system. It goes back to that disclaimer. You know, it's common sense. Sometimes you have to use common sense from time to time. What is 2 standard deviations? I don't want to get too deep into the trees here on mathematics, but it is important to know that it is a statistical measure, and it's calculated every day that the market is open and publicly trades with a stock. What's important to know about 2 standard deviations, these are levels above and below the mean price of a stock, and I think most folks know what the mean price of a stock is. But what to me is most important about 2 standard deviations is that 95% of the time, a stock is going to trade in between 2 standard deviations below and above the mean. And that's very powerful, because if you're using the floor, 2 standard deviations below the mean, as a trigger to placing a trade, then you know it doesn't guarantee anything by any stretch, but you have a high degree of confidence that a stock is going to be trading back above 2 standard deviations above the mean. Now, of course, if a stock's just continually to crater, the mean price is going to go down and the 2 standard deviations is going to go down as well. So there's some nuance to this, but generally speaking, when a stock trades 2 standard deviations below the mean, you know that you have a 95% probability of a stock getting back into those guardrails. And in the case of what we're observing, a reversion to the mean. And that's what is driving the profits in 2 sigma trading. And of course, reversion to the mean goes back to this idea that the market is not efficient, that hedge funds do indeed manipulate. You know, I'm overstating the obvious here, but I think, you know, a lot of folks out there that do this on their own, you know, it might be helpful to just hear from somebody that's being honest about it, that's been in the industry. I know a lot of hedge fund managers, and they readily admit that they manipulate the markets. I mean, it's not a secret. When there's low volume, for example, and they have billions of dollars that can push a stock higher or lower, especially in the small cap space, well, you know what happens then. And so it's interesting too, somebody asked once, well, how do you when a stock goes 2 standard deviations below the mean, how do you get back into above those guardrails and beyond? And what Louis likes to say, and I agree with him, is that earnings are the great equalizer. It's when you get transparency of information at a time for the market to digest, and if there's been manipulation, then at earnings time is when you get that correction, and it triggers oftentimes a reversion to the mean. Now, just to be clear, Two Sigma Trader is not an earnings-based trading system. It is 360 days of the year we're analyzing stocks and we're placing trades. I'm just making the point because we are in the middle of earnings season. Well, we're more than 3/4 of the way through the current earnings season. The fact of the matter is earnings is a powerful driver of getting a stock to revert back to the mean price. Now, when Louis and I were podcasting, we like I said, we kind of laughed and said, hey, Louis, you're chocolate, my peanut butter here. We've got something here. And so as Louis is the quant guy that he is, and I as well, we're like, we gotta back test this. And so we did earlier this year. We started the process of identifying a number of Louis' highest rated stocks, and then going back in time to see if there was any efficacy of what we were talking about here. And the results were really stunning when again, we only considered Navalier's highest rated stocks. We followed our rules of only opening a trade at 2 standard deviations below the mean, and then closing a trade based on reverting to the mean or trading 2 standard deviations above the mean. I think I might have mentioned that since inception at the end of March, we've done over 100 round trip trades. We've got a 75% win rate with the average rate of return just around 5%, and the annualized return of a 21-day holding period then is just about 80%. So pretty powerful data points. Again, we put this on the fast track. Again, with being in this industry as long as both Louis and I have been, we've seen good services, we've seen bad services. Just to be honest, sometimes a publisher will put out a financial service that just doesn't work. But this is something that between Louis and myself, we felt very strongly that we wanted to get it into the hands of the public. And so we did that and started making trades at the end of August. And the end of March, earlier this spring. And some of the trades that we've made, just to give you an idea of what we've done here, you can see Pilgrim's Pride was a highly rated Navalier stock. Right here in the middle of September, the stock traded 2 standard deviations below the mean. We opened a trade on September 16th. Then the trade jumped above the mean and even higher to 2 standard deviations above the mean on October 2nd. That's our trade trigger to exit. We closed this trade and we had a nice gain of 18% in a very short period of time. A reminder, we're not day traders. We're not placing these trades expecting to move in and out in one day. Again, the average holding period of these trades has been 21 days. Let's see here. Pilgrim's Pride. Okay, next up is Super Microcomputer. This was a trade that we opened the trade on August 7th. Back here, the stock traded below 2 standard deviations. And let's see, it was this August 7th trigger that placed the trade. And you can see too, there are moments, before this, I'm following a lot of stocks. One of the things that we do with our Two Sigma trading service is produce a watch list that allows us to, for the most part, we have 20 open trades at any one time, anywhere between 15 and 20 open trades at any one time. I can't make every single 2 Sigma trade that presents itself, and I wanted to keep this manageable for individual traders and investors out there that want to follow this approach. So sometimes we'll miss a trade, but then it's on our radar, and then we do make a trade. So there's no real rhyme or reason to it. But on August 7th, it traded Supermicro traded below the mean, or 2 standard deviations below the mean. And on August 22nd, we triggered what we do here on our exits. Just to clarify, we use the mean and 2 standard deviations above the mean to trigger a stop limit, but we don't place the stop limit. These are only mental stops. I'm following the markets tick for tick, and I don't need to have a stockbroker manipulate my limit orders. So these are only mental stop limits. And when a trade then trades above the mean, the limit is set, and then it trades below the mean, then we're going to close the trade. That's sort of how it works. And again, I'm not a market timer. I'm not trying to, oh my God, I just got to nail this trade. I'm just following the guidelines of the rules. And here we made 16.5% on this trade. And then there was Chipotle, Mexican Grill, a popular Navalier stock. It's a top fractile stock, really high grower. And I should mention, speaking of fast growing company, I just want to take a minute to talk about more of the common sense behind 2 Sigma trading and why this chocolate and peanut butter approach works so well. And it really is the linchpin of 2 Sigma trading, where we are what I would say trading the right stocks. And it makes sense to be trading Louis Navalier's highest rated stocks, because these are the stocks. Some of the factors that he uses in his quant models include a history of earnings and revenue growth, margin growth, a history of beating earnings estimates, and what have you. And so for whatever reason a stock is trading lower, and in the case of Chipotle Mexican Grill here that I'm about to share with you, the reason this stock became a trading opportunity was because they lost their CEO, right? I mean, goofy things like that will impact the price of the stock. Again, I'm agnostic about these reasons. I don't really give a rat's about that. I'm going to trade it based on my rules. But because I'm trading these very high quality, fast growing companies, a stock like Chipotle is going to more likely than not rebound from the selling and get the benefit of beating earnings, of growing top line revenues at a rapid rate, expanding its margins. And so again, that chocolate from Louis Navalier lets me identify these right stocks. And it doesn't give me a guarantee that I'm going to find a winning trade. This is all about stacking the deck in your favor. It is putting expected value in the positive category. It's putting the odds of success in your favor. Again, no guarantees. I just, I'm a poker player. And if there are any other poker players out there, Texas Hold'em is a game of skill. It's not a game of chance. And all I do when I'm sitting at the table is I'm calculating odds. And when the odds are in my favor, I want to put my chips in the middle of the table. It's that simple. And the same rules apply here to 2 Sigma trading. So let's talk about, those were really nice trades that we've made since the end of March. But how about this current earnings season that began in the middle of October? So these are things that are happening essentially in real time. We did a webinar highlighting these stocks. So before earnings came out on these stocks, we were featuring a stock like McDonald's, for example, which is a Navalier top fractile stock, putting it in the crosshairs of making a 2 sigma trade. And again, another example of a reason that we don't really care about, but I mean, I feel bad for whoever was impacted by E. coli that hit the McDonald's quarter pounder hamburgers. But from a trading perspective, I don't really care about that. The selling in the stock was irrational, which is why we're called the rational traders, by the way. The 2 sigma event here allowed us to get into McDonald's. Now, thus far, the trade is essentially flat. We're down about 1% on the trade so far. We added it to the 2 sigma portfolio on October 24th. So, you know, this is a winner, an example of a trade not being a winner. We're down fractionally, down about 1% on the trade. But again, I'm just following our rules. And when I get a trade above the mean, then I'm going to be looking to exit the trade. And typically it can take, on average, 21 days for this to all play out. I'm not looking for an immediate slam dunk immediately after placing a trade. The next stock we featured in the earnings preview webinar was Advanced Micro. Now, this is an example of a stock that when we featured it back in late October, was kind of interesting because it was trading close to 2 standard deviations below the mean. But as you notice here, this was a bottom fractile Navalier stock, and so it does not qualify as a stock I want to trade. Again, it doesn't mean that you can't get a bounce on Advanced Micro. It just means that the odds aren't going to be in my favor. So I'm not, again, using a poker parlance, I'm not going to play this hand. It wasn't a high rated stock, and therefore it was not tradable. And you can see the company reported earnings back here on the 28th. And, you know, had we placed a trade here, we would have been greatly disappointed because the stock did, in fact, collapse after its earnings report. And it did trigger a 2 standard deviation event at the end of October and in early November. But again, because it's a low fractile stock, I don't even consider it, and I move on to the next stock. I had already mentioned Chipotle Mexican Grill earlier as a trade, and it's always on our radar because it is a fast-growing stock, and it's one of Louis' favorite top fractile stocks. Puts it again in the crosshairs of making a 2 standard deviation trade. Again, when we did our little webinar here, shares were trading around 2 standard deviations above the mean. So this one wasn't tradable, but after earnings came out, we did get an event. Unfortunately, my portfolio was full, so I did not trade this one. Oh, I'm sorry, I did trade this one. Looks like we bought it on October 30th. So on October 30th, when this event happened, so pre-earnings, there was no trade, but earnings did trigger an event, a 2 sigma event, and it is a highly rated stock. So this one was added to the portfolio on October 30th, and it is still open. Today, we are up about 3.5%. It looks like, and I'll have to double check this, but I'm guessing that the mental stop is in place because the mean price is right here around $58.50 a share. So we won't be in this one much longer, but it is a winning trade so far. DR Horton is the next earnings stock that we watched pre-earnings. It too was a top fractile stock. It is trading 2 standard deviations below the mean, and it was on our watch list for a 2 sigma trade. On October 29th, you can see here there was a big collapse after its earnings report, and subsequent to that, it has rallied nicely. We added to the portfolio right at the time when it crossed 2 standard deviations below the mean. So we're only up fractionally on this one so far, but we're far from the mean. We're far from 2 standard deviations. I fully expect this one to be a big winner. We did take a hit yesterday after the election on that big spike in interest rates. That's not good for home builders. So we'll have to see what happens. But again, we're patient. Average holding period's 21 days. I'm willing to wait this one out. The next one that we featured in that webinar was DT Midstream. It too is a top fractile stock, and you can see on this one, we've never gotten an opportunity to trade this wonderful, wonderful Navalier top fractile stock. It will only be tradable if we get a move back down below 2 standard deviations below the mean. So those were the stocks that we were looking at prior to earnings season. But keep in mind, I'm running a daily service here. So my watch list is always on, and there are always stocks on the watch list. And so prior to the election here in late October, I think we went from having 7 or 8 stocks in the model portfolio, and we just backed up the truck. We found so many 2 Sigma trades to make. And let me just share with you some of the stocks that we've traded. I noticed my publisher put in here a quote from my Discord room, which is where we communicate with members about all of our 2 Sigma trades. Tenet Healthcare is a top fractile stock. On October 28th, we entered this trade after it closed 2 standard deviations below the mean. And in one day, this stock skyrocketed above the mean. Now, here's an example of using discretion. In most cases, am looking for a close above the mean, triggering a stop limit that then is a mental stop limit that I use to guide my trading. In this case, again, I'm not a day trader, but hey, if I'm going to get 12, almost 13% in one day on a stock trade, are you kidding me? So I went out to my members, THC above the mean. Let's close this one here. We got out at 158.53, and here we were well below 2 Sigma, and we opened the trade at well, I'm not sure. Oh, that's a DHI. That has nothing to do with THC. So yeah, we got out at 158. Now the stock subsequent to that has continued to run higher, but we move on. If the stock should trade 2 standard deviations below the mean again, because it is a top fractile stock, that's the beauty of what we do here. We can get in and out round trip on a name that we like multiple times during the year, depending on what happens in trading. United Healthcare is another one that we recently traded. This too is a top fractile stock. I can't see the date here. We bought this on October 25th. You can see the dip. I believe it was after earnings. Oops, that's not the right stock. United Healthcare. After it reported earnings that disappointed the market, we got our 2 Sigma event of this highly rated stock. Our rating on the stock did not change. So what are we going to do? We're backing up the truck, and on October 16th, we bought this stock. It traded up to the mean. It triggered the mental stop and went below the mean price. And so we closed this one on November 6th for a 7.1% gain on United Healthcare. Next up is Comfort Systems, ticker symbol FIX, also a top fractile Navalier stock. It traded October 25th, 2 standard deviations below the mean. That's our trigger. We bought the stock. And again, I mean, this is real time, folks. We bought this stock on October 25th, and on November 6th, after the election, push this stock 2 standard deviations above the mean, we decided to close the trade, and we made 16.7% on this trade. And finally, Vistra Corporation. Power companies were in the news last week on Friday when the government nixed an agreement between Amazon and a company called Talon Energy that sent stocks in the power space lower, including Vistra, which is a top fractile Navalier stock, and it traded 2 standard deviations below the mean. It's one of our favorite stocks. We added it to the portfolio on November 4th, and in a few short days, thanks to the election, it traded above the mean today. Actually, this had nothing to do with the election. This was an earnings report. The company reported great earnings after when the market opened this morning, and the stock triggered the mental stop. I have not executed this mental stop yet, and I want to see this one run higher. It just depends. I use discretion on these mental stops. What I like about this with the election here is that the artificial intelligence space, cloud computing is rip-roaring. It also means there's massive demands on our electrical grid, and power companies like Vistra are really poised for huge, huge growth. So this was a blessed opportunity thanks to our wonderful federal government nixing. What are they doing interfering with this stuff to begin with? Don't get me started on that, but they did what they did, and it triggered an opportunity. In 3 short days, we've made 18% on this trade. And so you've seen a number of trades that we've made, and keep in mind, you know, I'm only trading 15 to 20 stocks at a time. This is very powerful stuff. But as I said, it is a brave new world, and I had originally agreed to speak here today. I had a long list of potential stocks that I wanted to share with everybody. And of course, the market just went crazy yesterday. And so a lot of the stocks on my watch list, they're still on my watch list. But the beautiful thing is there's going to be opportunities. Don't know what those opportunities are going to be, but they're coming. And let me just review for you all if you want to try this at home. The process is very simple. Is the stock considered to be highly rated? And again, I'm working with Louis Navalier. All of our 2 Sigma trades feature Navalier's highest rated stocks. We then calculate the mean price and the 2 Sigma below the mean. You can do this on any financial portal, trading system. Just look for your Bollinger Bands and plug those in. And I look at a 1-month chart to give me a kind of a good overview of where a stock is, where it's going relative to 2 Sigma trading. And then if it trades this highly rated stock, criteria is met, and its stock trades 2 standard deviations below the mean, and I have room in my portfolio, then I'm going to be placing a trade. Let me go over some stocks in real time here, just mimicking this process so you have an idea of really how simple this is. But it's simple in a good way, because like I said, you know, there's so many trading systems out there that it's like going into a Vegas casino. You know, all your bells and whistles are going off all over the place, and it can be you know, overload of stimulus. And what I wanted to do is create something that was very simple, very easy, but also very powerful and very effective. And so with NVIDIA, you know, we went into the quant model and discovered that it is a top fractile stock. It's highly rated. In this case, though, NVIDIA is trading 2 standard deviations above the mean. At this particular moment in time, there's no trade to be made. But that isn't necessarily always the case. there have been times when NVIDIA does trade 2 standard deviations below the mean. So this is a stock I would keep on a watch list, keeping track of this highly rated. Obviously, everybody knows about NVIDIA, but we trade it as well using our approach. Costco. Now, here's an example of one I missed, and I'm kind of mad at myself because I did miss it. But as I said, I filled up my portfolio at the end of October. I had over 20 trades, and I know that that's just a general rule of thumb. And I was very tempted to add another 5 to 10 trades. I had that kind of conviction to the market heading into November, not necessarily because of the election as the trigger, but just the fact that that overhang of the election and the unknown of the election would be gone, that seasonality is very, very strong in November. For those reasons, I wanted to be loaded up, but I didn't load up on this one. And Costco is a top fractile stock. You wouldn't think of it. I mean, it's a darn near $1,000 stock, not very easy to trade, but lo and behold, it traded 2 standard deviations below the mean on the last trading day of October. You could have gotten in on the first trading day of November, but then its monthly report of sales came out, I believe it was today, and the stock was up some $15 and now trades 2 standard deviations above the mean. So, but there's, ebbs and flows. Like I said, this is a great stock to keep on your watch list. And if it does trade 2 standard deviations below the mean, really all you need to do is, make sure that it continues to be a top fractile stock and trade away. Next up is Pembina. That ticker is PBA. This is an oil energy stock. It's a pipeline company. They are a top fractile stock, and the top stock is trading 2 standard deviations below the mean. Now, I closed several two sigma stocks here after the election. Like I mentioned, Tenet was a stock I closed, United Healthcare I closed. So I do now have space. This is a stock I will be adding to my 2 sigma trading portfolio tomorrow. And I would say this is a hot pick that anybody can trade right now, immediately. So go and run with that one. All right, are you ready for the big reveal? We've got PBA as a stock. That's kind of a bonus trade. I did have many more stocks that I wanted to share with you that were tradable, but I really was left with only one that I want you to back up the truck on, and that is Super Microcomputer. This is a very, very highly rated stock that was absolutely pummeled by a short selling attack, raising some accounting issues that have yet to be resolved, although the company came out yesterday with a report that its own, well, it wasn't its own, it engaged an independent investigation into these accounting allegations and found no evidence of fraud. It's been a long time, folks. I mean, maybe back to Enron. So going on 20 plus years since we've had a publicly traded stock. Our public markets are so good at accounting transparency and what have you. Fraud just does not happen. And so I'm very skeptical of these short sellers. They admittedly announce that they're short a position, then they bash the stock. This is one of Louis Navalier's favorite stocks. It is in our 2 sigma trading model portfolio. I added it to the portfolio on, I believe it was Monday, right before the election. And I did that because it was on Tuesday when the company announced that this independent investigation found no evidence of fraud. Now, since that announcement, shares have traded above 2 sigma. I wouldn't worry about that here. Again, I prepare this stuff in advance of these presentations, so I apologize for that. I wish I could have gotten you in this stock yesterday or the day before even, but I still think it's a stock. And look at this gap between 2 standard deviations. Now, it is 300% of opportunity here, from $20 a share to $60 a share. That is, you just don't see that. And the earnings growth, the revenue growth, and the profit margin growth from this company is absolutely huge, making it very, very likely that you're going to get a bounce back to at least the mean, if not back to 2 standard deviations above the mean, which is where this thing traded and has traded for much of the last 12 months. So Supermicro is a stock that I would look to adding to my trading portfolio. I've already got it in the 2 sigma portfolio. I should have mentioned that at the end of this presentation here, if you have any stock tickers that you'd like me to analyze using the 2 sigma approach, put that into the chat box, and I'll make sure I get to your questions here after I get through this public service announcement, which is my way of saying I'm about to pitch you our 2 sigma trading service. Now, the numbers speak for themselves. We've 3 out of 4 trades are winners, averaging just about 5% per trade with an average holding period of 21 days. You will absolutely not find these trades anywhere else. It is that chocolate of Louis Navellier, and featuring his highest rated stocks with very simple 2 standard deviation rules that we add the peanut butter to, and away we go. My publisher is allowing 30 new memberships at a very special price, 90 days for $90. That's $1 a day to get into the service. There's a QR code up here. I haven't tested it, so I hope that works. But you can also go to www.tradethirsty.com/90 to get this very special offer. We sell this service for just under $800 per annum. So $90 for 90 days is just huge. After the 90 days, that $90 then is a monthly subscription fee. So you also can convert your subscription to an annual at any time. And I think the publisher runs specials on those annualized rates as well. By becoming a member, you're going to get our watch list, our hot stock watch list. That's, like I said, is being updated constantly. I update, go through with a fine-tooth comb every 2 weeks, Navallier's highest rated stocks to find our 2 Sigma Trader members the very best stocks that they can trade using our 2 Sigma trading approach. Louis and I do a daily market video. We call it the 2 Sigma Trading Daily Market Video, Monday through Thursday. So great commentary there about all things 2 Sigma, but we also talk about stocks in general, markets, and both Louis and I are pretty, I'm humble, but I'm also not sometimes. And I'm telling you, both Louis and I, our takes on the market, you're just not going to find them anywhere else. And so those videos our members have found to be very, very valuable, even if you're not trading the 2 Sigma way, just to help you with your own trading, however you go about it. You'll get private access to the Discord room, trade alerts, entry, exit targets. We do a weekly update. And then monthly, I do a live trading session. And of course, I keep track of all of the trades, keep track of the watch list, keep track of open positions for you. Real simple, real easy to use, but jam-packed with lots of value. Here are the real-time trade alerts. Some of the examples that we've had just recently. I guess this was yesterday. We had 3 positions opening above 2 sigma, and those are trades that we closed immediately. All of them were winners. Comfort Systems was a 20% or at that time was a 20% winner, and I think we closed it for just about 19% was where we ended up closing that one. So you get access to that Discord. I think that's a fun little service. I am releasing an updated watch list because of the red dawn that is now here. That really changes a lot of things. And so you're going to get, if you join at www.tradethirsty.com/90, you can be one of the first to get the most updated watch list for this brave new world that we are embarking upon. Hey, I'm just one guy with some techie smart people helping me make all of this magic. And so today, my publisher has allowed me to bring in the first 30 subscribers at this super low price. Bottom line, the publisher said once we get the first 30, prices are going back to our regular prices. So act fast. Hope to see all of you joining, and we're having a ton of fun. I love this stuff. I hope that enthusiasm comes across in this presentation. And in my 30+ years of doing this, I've never seen a service like this. I really haven't. I've never been more enthusiastic about a service that I've been a guru on, and I know Louis is equally excited about it as well. So visit www.tradethirsty.com/90 and check us out. $90 is a great way to give us a test drive, and I'm sure I'll have lots of great trades over the next 90 days for you. All right, again, that's $90, 90 days. Here are all the things you get. Here's the QR code. I hope folks are putting in their, let me just check the chat room if anybody's doing questions or chatting here, putting things into tickers. Give me your tickers, and I can do some of these searches in real time. If you're using that QR code, hopefully that's working for you. If it's not, maybe just type me a message. And with that, I am going to, let's see here. Let's see. I'm sharing my deal here. Let's look at some of the questions if I can.
Hey, Jamie, Dave was asking about Amazon. Did you cover Amazon by any chance? I saw Chipotle, some McDonald's, some NVIDIA. What do you think about Amazon?
I appreciate that, Wiz. Let me just pull up Amazon, and I'm just looking at the clock. Wow, I went for a long time there. So let me do Amazon real quick. Now, the first step in this process is to, let's see if I can find it here. The first step is the stock highly rated? And on Amazon, I'm not sure. It is not. So, you know, that stops me in my tracks right away. It is a what I would call a mid-fractile. Now that can change. Again, Louis' rankings change all of the time, and Amazon from just a 2 sigma standpoint.
Hey, Jamie, can you make sure you're sharing your screen? I'm just seeing a blank screen.
Oh, sorry.
No worries.
All right. Let's see here. I'm just looking up Amazon here.
Yep.
Let's pull up the Bollinger Bands on it. I like to look at 1 month, and Amazon is, where is it here? Okay, so here's another example. Just a lot of stocks have just blasted through 2 standard deviations above the mean. So even if it was highly rated, I would not be trading Amazon.
Yeah, it's definitely on a little bit of a tear there.
It is, and that doesn't. And I heard you talking about Amazon a little bit before my presentation. It certainly can continue running like this. It is, like I said, it's only a mid-fractile stock. So to me, what I do, Wiz, is it's all about putting the odds in my favor. And so I really like having that high quality, the highest quality I possibly can on a growth basis. Because if a stock's trading down, right, it just intuitively makes sense for that quality to eventually get over the whatever manipulations are going on in the current stock price.
Yeah, that's exactly right. Get back to the mean, or yeah, take a little bit of air out. Okay, perfect. Yeah, I think that was it.
So I guess I didn't get to do a lot of questions and answers. I apologize for that, but really appreciate everyone listening and learning about Two Sigma trading.
Awesome, everybody. Jamie, thank you for coming, my brother. Everybody, give Jamie a virtual golf clap for joining us today. We love partnering with y'all, and we're going to see you again soon. TradeThirsty.com/90. I put the link in the chat box, and then hopefully everybody scan the QR code with your cell phone. If not, I can send it to you, but the link is in the chat box. So thanks again, Jamie. We appreciate it.
Wiz, I greatly appreciate it. Have a great day, and good luck with everything that you're doing.
You bet. Thanks, brother.
Okay.
All right, folks. Jamie, batting clean up there, ending strong. Great presentation. I love looking at that stuff. He hit our burrito, our favorite burrito factory, and some other great stuff, and obviously NVIDIA too. All solid names that we cover. Okay, man, what a day. Jerome Powell speaking, telling essentially Donald Trump that I'm not going anywhere. You can't fire me. It's against the law. Oh boy. So here we go. And he's technically right. I think Fed chiefs are appointed for about 10 years, but it was just an interesting press conference to see Jerome Powell say no and then just be silent. So that was pretty funny. All right. So we had Anka, Ala, Fausto, Jamie, and just a great group of men and women, 500-pound head traders. Great briefs. It's going to take a while for this replay to render, so give me some time in case you miss anything to get you the replay. Okay, I've been sitting here all day with you guys too, so I'm going to get up and stretch my legs. Remember, here's our full throttle link to join. We made $9 grand this week in 48 hours on S&P 500 trades, and that's on limited risk, folks. That's not taking a lot of risk. And then obviously, before I turn it over to Jamie there, I was doing a little Amazon discussion. If the gateway drug to join TOPGUN Options to kind of figure out what we do is solo Amazon. It's only $97 a month, or if you do an annual membership, we'll give you essentially 2 months for free on us. So if you just want to try out what we do here at TGO, it's $97 a month, and it'll be $97 a month until you decide, you know what, it's cheaper to upgrade into an annual membership. Okay, so that's the gateway drug to join, or if you're ready to go full throttle, you just underneath trade groups here, you go to full throttle. Okay, man, action-packed week. I loved being wrong this week. I was wrong and made $9 grand in 24 hours. Love being wrong and still making money. Okay, don't forget, this ain't going to keep going straight up. Can it a little bit more? Sure. The short squeeze is going to end, and I think we're going to get back to this trend line here in a little bit. Might not be tomorrow, but folks, people take profits, especially after massive rip your face off rallies like this one. Last time we had an implosion, we had a massive rip and then gave it back. Medium rip, gave it back. Baby rip, gave it a lot back. So we're outside and we're due for a little bit of a pullback. Okay, I'm going to teach you all this stuff here at TOPGUN Options. All right, folks, thanks for coming. Have a great rest of your day. Happy hunting. Make sure you're hedged. We are here at Top Gun Options. Fights on, namaste, and basi. Basi. What's basi mean? Basi means truth in Bwiti. Fights on, and I'll talk to you all later. Thanks for coming.